So I'm not too worried about the fast-moving elements. Keep an eye on the slow-moving elements. And why does that matter? It relates to the last part of your questions. There's been so much liquidity sloshing around the system that there has been excesses, and we'll get fender benders like this one. But what we don't want is a pileup. And that's why it's really important to look at the slow-moving. But for now, it looks contained.
Mohammed, that's an excellent point, though. If the banks move to tighten up a little bit, maybe not a bad thing. If we've seen excesses and if we've seen bubbles build up, maybe it'd be more concerning if regulators were to clamp down in a way that was even more excessive than what the banks might do on their own, just saying, hey, we got to be a little more cautious. We got to take a little more of a risk perspective on this.
Yes, that's what you want. You want some better discipline in the marketplace, because we've lost a lot of discipline with all this liquidity sloshing around. So you do want that. The question is, can it be done in an orderly fashion? I can tell you that in a lot of investment houses right now and banks, people are being asked, look how we are positioned, who are we exposed to, do we have enough margin, is the collateral moving or not? And all that causes somewhat of slowdown in the system. But it is small. This is not LTCM. This is a rather small fender bender. But just keep an eye, because everybody on this highway has been driving really fast.
Yeah, I guess the question comes back to what caused Goldman Sachs to say, okay, forget about it, no more. We are going to force this liquidation. Did they suddenly sit up and realize, okay, there's a little bit of fast and loose getting played here?
I suspect they looked at the price action. They looked at what was going on. They got a sense from who else was lending, how big was the margin overall. And they moved first. And clearly they caught other banks off sides. I mean, that's the story, is one bank moves and they reduce their own exposure, but it catches other banks offside. And you're seeing that play out today.
Yeah, Morgan Stanley down by about 4.75%, but it's really Nomura who says that they are on the hook for $2 billion. And then Credit Suisse, those two stocks, Credit Suisse down by over 12%, Nomura down by over 16%. That's the type of thing for those banks that it's going to be a little bit more of an issue.
Right, and we've got to wonder why Goldman and Morgan Stanley haven't come out yet and said this is the extent of the damage. I suspect they are assessing it. But the faster they come out and say, this is the extent of the damage, if any, the calmer the market will be. The market doesn't like uncertainty when it comes to prime brokerage, because the way you deal with that if you're having an issue is you pull back on other lines. And that's what we don't want. That is the contagion element. That's the slower moving contagion element that you got to keep an eye on here.
Hey, Mohammed, I want to get to this other idea of what I think people are describing as a bit of a head fake, potentially, which is we've talked about these quote-unquote so-called Reddit stocks over the past couple of months, where we've watched companies rise, including Discovery and Viacom and the like, without news. And now it's starting, I think as you peel back the onion, we're going to start to see more and more that actually it was the institutions, professional investors, family offices levering themselves up. I mean, is that the lesson here, that maybe we were looking in the wrong direction?
Look, when you're an investor, Andrew, you ask the question, who's going to buy after me? And if you can figure out who's going to buy after you, you buy before them. And if you're a hedge fund which can lever, you lever your position ahead of them, because it's very reassuring that someone buying behind you. They validate your own purchase and they provide you liquidity. So I think that this is actually very, very interconnected. This is not the hedge funds in this world, and this is not the retail investors. I think they're interconnected. Phase one, where they were on different sides, and the hedge funds got hurt until Robinhood clamped down on the short squeeze. Phase two could well have been that they're on the same side, and that is where the systemic risk comes.
Always good to see you this morning, but especially when we can talk through some important issues to the market like this. So thank you for your time.
Thanks for having me.
Coming up, the very latest on efforts to fully free that great big container ship, 1,300 feet, blocking the Suez Canal. Workers making some progress, in fact, in just the last few hours. We've got a live report from Egypt right after the break. Stay tuned. You're watching Squawk Box on CNBC.
Imagine yourself in a new Toyota. With great deals, get ready to turn your dreams into reality.
Right now, save big with a complimentary first month's lease payment on a new 2021 Highlander or Highlander Hybrid. Plus, every new Toyota comes with Toyota Care, our no-cost maintenance plan.
Ready, set, go get your Toyota today.
Toyota, let's go places.
Don't like veggies.
What? Whatever you have at home, Knorr sides can turn nutritious veggies into mouth-watering meals. Veggies taste amazing with Knorr.
We're for those who love to discover, who know an open mind is the only kind, who don't need to travel to find something new, who know where to escape, even just for a moment, who don't need a fortune to find a gem, and who know when you spend less, you can discover even more and never, ever stop discovering. Spend less, discover more at TJ Maxx and Marshalls.
We are the Thrivers, women with metastatic breast cancer. Our time for more time has come. Living long.
How do you top the perfect cup of Dunkin' Cold Brew? With the perfect top of sweet cold foam. Sip into a smooth Dunkin' chocolate stout cold brew topped with sweet cold foam. Order ahead on the app. America runs on Dunkin'.
These are the people who work on the front lines. They need a network that's built right. That's why we created Verizon Frontline, the advanced network and technology for first responders. Built on America's most reliable network. Built for real interoperability and built for 5G. It's America's #1 network in public safety. Verizon Frontline, built right for first responders.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Burger King's got a breakfast classic made for a king. French toast sandwiches are back with sweet French toast and your choice of sausage, bacon, or ham, plus our new buttery maple spread. Treat yourself like the king you are for breakfast with a French toast sandwich. Your way better.
The UK has applied to join a trade alliance with Asia-Pacific countries.
It's a really exciting opportunity for UK companies to enter Asia-Pacific. There's huge opportunities for investors to find investment opportunities.
Now let's look at the ever-growing UK tech sector.
It's been growing quite rapidly over the course of the last 5 years. Investment has really increased and is now at record heights. Right now, we're third behind China and the United States.
If there's one lesson to be learned from COVID-19, it's that we need to focus on the totality of the risk landscape.
Companies have always operated in a risk environment. Resilient companies have the ability to, I think, take advantage of these issues.
Check out other episodes and related content at biggerpicture.ft.com.
Saint-Gobain is one of the largest
building material manufacturer in the world. We have to optimize cost and energy consumption. Thanks to the EcoStruxure, we have saved hundreds of millions of dollars.
This is the gap that opened up when everything shut down. But entrepreneurs never stopped and found solutions that kept them going. At US Bank, we can help you adapt and evolve your business, no matter what you're facing. Because when you close the gap, a world of possibility opens. US Bank, we'll get there together.
Shouldn't happen again. Are there ships that are actually bigger than the Evergreen, or is this as big as they get?
Well, look, Joe, this is definitely one of the biggest in the world. The Ever Given's about 200,000 tons, and on top of that, you have about 20,000 containers. So it's certainly one of the biggest in the world. Look, the Suez Canal has been so important for global trade. It was important in the 1800s when it opened. It was important when it was expanded in 2015. And I think this incident ultimately just shows that it's still important today. How the Egyptian government responds to this is also going to be very closely watched. We know that not only is this a big revenue driver for them, but it's also a project of national importance. It is a legacy project for the president, and certainly something that he would like to see resolved very, very quickly with the eyes of the world on Egypt and looking at how this country responds. In the future, though, are we going to see the canal perhaps being expanded? Well, that's certainly going to be up for conversation. I think it's one thing we should be looking at.
Yeah, with ships that big, 200,000 tons, and you think of the inertia that has as it, you know, as first going into the bank wherever it was, and I can't believe they ever got it out. But
you got it.
But that's good news. Dan, thanks for your reporting on that. Back.
And Joe, that's the question. I mean, unless and until they expand the canal, will they allow ships this big to go through it? Because these ships have gotten bigger and bigger. These are new ships that have gotten bigger like this, and way bigger than when the canal opened or when it expanded. So that's the question. Yeah. Until they do that, you keep letting them through.
Right.
When we come back, we're going to talk taxes. Oh, what's that? We'll talk taxes and potential tax hikes as President Biden prepares to lay out an infrastructure proposal this week. When rates go up on corporations, who actually pays? We've got that story next. Squawk Box will be right back.
All the things, all around you, where you learn, work, and fly, we help make them healthier. We are the people of ABM. For more than 100 years, we've been a leader in making spaces cleaner, from the things you touch to the air you breathe. Today, more than 100,000 of us are innovating to ensure spaces are more efficient, healthier, and safer. ABM, making spaces healthier for you.
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. Their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Well, except now you're binge learning.
See how you can become a smarter investor with a personalized education from TD Ameritrade. Visit tdameritrade.com/learn.
Confidence from winning family game night? No, it's the confidence of finding a great deal with Car Gurus. That smirk, that's knowing only 30% of cars get top ratings. That poise, that's seeing the details that matter before contacting a dealer. That's the confidence of Car Gurus.
Does your vitamin C last 24 hours? Only Nature's Bounty does. New Immune 24-Hour Plus has longer-lasting vitamin C, plus herbal and other immune superstars. Only from Nature's Bounty.
I always tell aspiring cooks, focus on mastering your technique, hone the muscle memory, and use the highest quality tools you can get your hands on. Stainless steel that heats evenly, carbon steel that gets crazy hot on the stovetop and will give you the perfect sear for your steaks, a really sharp knife. I use Made In both at home and here at Kraft in New York City. They're beautifully made, and they let my team and me focus on making memorable meals night after night.
Her story is our story. CNBC celebrates Women's History Month.
Your mission is to, quote, give kids a shot that can't be blocked.
And it hopefully puts them on a path
to becoming scientists, technicians, engineers. This is where we start that.
I want these kids to be financially literate because it's all about closing the income inequality gap that we have today.
This is about helping kids succeed in a more digital world.
Right.
Take charge of your financial wellness at cnbc.com/investin.you.
Welcome back to Squawk Box. This morning, the Biden administration looking seriously now at corporate tax hikes to help pay for its next big priority, a massive infrastructure package. But it's probably not just corporations who would end up paying. And for that story, Robert Frank joins us right now. Robert, good to see you.
Good morning, Andrew, and welcome back. Opponents of a corporate tax hike say workers will end up paying more than 2/3 of the cost. Supporters say companies and shareholders will foot the bill and need to pay their fair share. The true impact is probably somewhere in between. Economic studies cited by the Heritage Foundation and others find that workers pay more than 70% of corporate taxes through lower wages. The Tax Policy Center and Congressional Budget Office find workers bear less than 20% of any corporate tax burden, with shareholders and capital paying that other 80%. So why the big difference? Well, it depends on how you think investors of these companies respond. If they shift their money overseas due to the tax hikes, workers and consumers pay more of the cost. If you think those investors won't go away, workers pay less of a share. And pricing power also matters a lot here. If companies, of course, can pass more of those tax hikes on to consumers, the workers will pay less. Now, more recent studies suggest workers and shareholders each paying about half of any corporate tax hike. Andrew?
So the real question is, do we know what share workers got of the 2017 tax cuts then?
The problem is one, Andrew, of attribution. We did have all those strong wage hikes in 2019 leading up to the pandemic, and a lot of people say those were due in large part to the tax cuts. Others say, despite those highly visible bonuses that were paid early on, that most of the benefits flowed to corporate share buybacks and dividends. So, you know, it depends on the political partisanship of the economists and who's looking at that picture. Clearly, we had strong wage gains leading into the pandemic, and clearly those tax cuts were part of that.
Okay, Robert, thank you for that report. We're going to continue this conversation now. Joe, right?
Yep. Joining us to talk about the impact of potential changes to the corporate tax rate, Senator Steve Daines of Montana. He sits on the Senate Finance Committee. I've been seeing a lot of articles written, Axios, Jonathan Swan, and others, not just about the Senate, but about the House as well. Nancy Pelosi can't lose a lot of people in the House either. And we had Josh Gottheimer on last week saying unless they're, and Tom Suozzi both said if there's no SALT repeal, they're not going for this. Is this going to be doable, Senator?
Well, that remains to be seen. Raising taxes is generally not a real popular issue for the American people. You look back in 2017, we worked hard to cut taxes and unleash the economy. My colleagues across the aisle, the Democrats, they've most recently now unleashed big government with this massive spending and now proposed tax hikes. You know, the bottom line is tax policy is a means to an end. Cutting taxes helps us become more globally competitive. It creates incentives to reinvest capital and grow businesses, create jobs, increase wages. Bottom line is Republicans want to drive more tax cuts. Workers win with that. As you saw the data, you can look at various studies, but we've seen wages go up as a result of the tax cuts. In fact, 2019, we saw 6.8% growth in median household income. That was the largest one-year wage growth in the history of our country. And so this is really about global competitiveness. Notice inversion stopped. Inversion stopped when we cut corporate rates.
Senator, what about a 25%? That's what we're hearing that Senator Manchin or there could be some, I don't know whether, he's a Democrat obviously, but would any Republican go for anything above 21% if there was a compromise that was put on with some, I don't know, something that Republicans want involved in there as well? Would you ever go back to 25%? Could you support that?
Yeah, well, no, I don't. I don't support that, and here's why. Now, what's on the table now we're hearing is taken to 28%. Let's put this in perspective. An increase to 28% in the corporate tax rate, that would raise the U.S. federal plus state combined rate to over 32%. That'd be the highest in the OECD and highest in the G7. So this is about global competitiveness. If we want to talk about keeping capital investment in America, creating jobs here in our country, we've got to have competitive tax rates. So even going from 21 back to 28, remember we were at 35, take it to 28, add the state rates on there, puts us the highest in the OECD. That's not the right thing to do.
But, well, I asked you about 25, because at 28, they're saying that there may be some, a place for people to come together at 25. I don't know whether that...
Well, here's the other point, though. It's not just the corporate tax rates. They're looking at raising the estate taxes as well, and the pass-through rates. These are the LLCs and the S-Corps. And you look at the economy and the engine that drives it. In fact, there's more on the pass-through side than on the C-Corps side. And so they're looking at tax increases across the board, not just on the C-Corps rate.
Well, if we just spent $1.9 trillion and you're looking at the potential of another 3, or I've seen parts of the Democratic Party say that's not nearly enough, and they want upwards of 5, 6, 7. I've seen $8 trillion. Would you not raise taxes anywhere if you were going to spend it, or you just wouldn't spend it?
Well, no, it's a spending problem there. I mean, we've pushed nearly $6 trillion of COVID-related spending in the last 12 months. Now add another, what, $3 trillion or more? They're talking about massive spending increases, high tax increases. This is a recipe that's going to take us to a bad place in our economy. And so this is the fight right now, and it's very, very narrow. You know, it's 50-50 Senate right now, narrow margins in the House. This will be an interesting battle, but I can't support these massive spending increases, and looks to be perhaps massive tax increases as well.
All right. Senator, thanks for your analysis. Obviously, you're on the other side of the aisle from the current administration, but I'm just wondering what is actually possible, and if it's not possible, I don't know what we're going to do with a lot of the spending that we're seeing. But appreciate your time today, Senator.
Thank you.
Okay.
When we come back, we're going to dive into 2 important stories at the intersection of markets and technology. The first is the conclusion of a closely watched union vote by Amazon employees in Alabama. And the second, big-time drops in a number of media and U.S.-listed Chinese stocks last week, and the still developing drama behind that selling. Insider Inc.'s Henry Blodgett will join us to talk about both those stories. Stay tuned. You're watching Squawk Box, and this is CNBC.
At EY Parthenon, we know that companies need a strategy they can execute. A strategy that incorporates growth potential and digital investment, that works across the entire business and delivers long-term value.
What's next for business leaders?
CEOs are very focused on understanding shifts in customer demand.
This is not the year to sit on the sidelines. It's absolutely the time to jump in headlong.
Watch episodes of Real World Strategy with EY Parthenon.
Many U.S. tech companies are global leaders. In this constantly changing sector, it's hard to know which companies will gain, maintain, or lose industry leadership. So why choose? The Technology Sector Spider ETF offers the diversification of the entire technology sector of the S&P 500 while reducing single stock risk. The Technology Sector Spider, the next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
These days, we want sophisticated but simple. Cutting edge, made user-friendly. In other words, we want a hybrid. And so do retailers, which is why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps manage supply chains while predicting demands with ease. From retail to healthcare, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
A hearing on Capitol Hill looking at whether Washington, D.C. should become the 51st state.
This debate has become front and center for Democrats as a voting rights issue.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Looking to refinance your mortgage? The first thing you want to do, find out how much your home is worth.
Just go to ownerly.com, enter the address, and see the home value. Come to ownerly.com and see what your home is worth for free.
If you've got a military, first responder, or law enforcement background, GovX.com is for you. Members save on epic brands and the gear they need for on and off-duty lives. Signing up is fast, easy, and totally free. If you qualify, visit GovX.com.
Here comes Greg with your organic carrots. He credits sun, good soil, and a little something he just won't tell. Here comes award-winning cooking without having to get the tattoos. Here comes the sun basket.
So, you took a masterclass and learned to make egg toast really good. But what about making egg toast while you learn to find your style, and your walk, and his walk, and your confidence, and your voice, and how to make everyone hear it? There's so much new to know. Masterclass.
Amazon workers at a warehouse in Alabama have been voting by mail on whether to unionize. The ballots are due today. Counting starts tomorrow, and there is a lot at stake. Deirdre Bosa joins us right now with more. And Deirdre, people around the country are watching, but especially in Washington.
Yes, and certainly other warehouse workers at Amazon are watching as well. That's why the stakes are so high here. Now, the results will determine whether Bessemer, Alabama workers will become the first group to unionize among Amazon's 800,000 U.S. workers. But guys, don't expect this process to be quick or smooth. The mail-in voting period that ends today, counting starts tomorrow. That's likely to last days, in part because both sides can dispute votes. There are about 6,000 workers at that warehouse, guys, the majority of which would have to support unionizing in order for this to pass. But even if it does pass, it could take years of bargaining to reach a first contract, and either side could and is likely to contest the results. Now, tensions over the union battle have escalated over recent weeks. Last week, we talked about a Twitter spat between one of Amazon's most senior executives and lawmakers. That received a lot of attention. On Friday, Senator Bernie Sanders visited workers, telling them, quote, "They know if you succeed here, it will spread all over this country." And guys, that idea of a domino effect is why those stakes are so high here. Labor challenges, they could push Amazon to alter its policies and ultimately threaten that efficiency, guys, that has turned it into a $1.5 trillion market cap powerhouse, Becky.
Hey, Dee, over the weekend, there were those reports that suggested that Jeff Bezos was the one who was pushing for a more aggressive response to the critics, that he maybe got people fired up about that. What do you know about that? What do you think? And where does Andy Jassy fit in with all of this?
Right, Andy Jassy, who's supposed to be taking over the reins later this year, but no one expects Jeff Bezos to go anywhere. He's going to remain executive chair. And it may be a little unusual for Bezos to sort of direct this, but it's certainly not unprecedented. A few years ago, there was that New York Times article about harsh working conditions for white-collar workers, and you saw this response from their head of policy, chief communications officer, Jay Carney. He was Obama's former press secretary, came out hitting hard against it. So the report over the weekend from Recode says essentially that Jeff Bezos has been watching this, and he wasn't happy that they weren't pushing back hard enough. So this was actually a mandate from him to do so, and it's got a lot of people talking, of course. We talked last week, rather, about that back and forth, and people are kind of shaking their heads thinking, what is the strategy here? Perhaps rile up the other side, Republicans who may be against this unionization effort or against changing some of the corporate tax initiatives. But it certainly is one to watch this week as we get closer to that outcome. Again, votes, they start to be counted tomorrow. So we'll see what the Amazon Twitter handle and Dave Clark, their SVP of Worldwide Operations, is thinking about tweeting over the next few days. It'll be one to watch for sure.
Yeah. I don't know what happened here, but we've all seen it in the workplace where the boss says something and people jump over themselves to try and respond, sometimes react a little too much, maybe too aggressively in some of these situations. We've all watched it play out in the workplace, though. Dee, thank you. Good to see you.
Okay, we're going to continue this conversation right now, talking about what this unionization vote could mean for Amazon. Henry Blodgett's here. He is, of course, the CEO and co-founder of Insider Inc. Henry's also going to weigh in on this huge selling in media stocks related to this Archegos capital management margin call that took place last week. But let's start with Amazon and the way you see it, Henry, in terms of what's at stake now and what's at stake longer term for Amazon.
Well, I think it's interesting that Amazon is the company that's being targeted because they have been more proactive about raising at least salaries for employees, but incredibly high profile. Obviously, a lot of people work there now, so it's not surprising. I think stepping back from it, the really important, larger story here is just the increasing bifurcation in the economy between shareholders and everybody who works for a living. And I think that there have to be ways for companies to share more of the value that they create with the people who create it, their employees. And I think that that's at the heart of this. I think for Amazon, I think they will work through this. I don't think it's devastating if a union is created, as Deirdre just said. You have many years of negotiation, and it's one place, and maybe in other places there won't be unions. But I do think this is a story about the U.S. economy, and I think we will continue to see more of this.
But Henry, I think going to this issue of even just how Amazon's dealing on social media with the likes of Bernie Sanders and Elizabeth Warren, do you think that the strategy of pushing back on them, on pushing back on unions, is the right one? Amazon's considered one of the most popular companies in the country, if not the most popular. And so maybe they have an authentic claim on being able to push back, or do you think that that is a losing strategy longer term?
Well, I don't think the execution over the weekend at the end of last week helped them particularly. I think they do have a strong case to make, which is they led their industry in raising wages to $15 an hour. They have health care. This is something that other companies like Walmart and Target, all the fast food companies have not yet done. They've been fighting it. They will move toward it over time. So I think Amazon does have good arguments there. And I do think that people actually do generally like Amazon. So there is
Henry,
probably
why do you think that Amazon...
I don't think their Twitter war was smart.
If you think Amazon's on the right side of things relative to the Walmarts and Targets of the world, why do you think they get the, and I don't know if you think it's disproportionate or not, but they get a lot of attention, as you know, from the left, from Elizabeth Warren, from a Bernie Sanders? Appropriate, not appropriate?
Well, they get what Walmart in its heyday got, which is you're destroying small businesses. You're funneling all the money now to the richest person in the world. It's just an easy company to attack that way. And they're huge. They employ almost 1 million people. Right. So there's a lot to gain from that. The stock has done so well. It's so high profile. So very easy target. But I do think they are headed in the right direction. I think everybody else needs to follow them. And I think as a society and economy, we need to think more about, big, rich companies can afford to make sure that their full-time employees aren't poor. And that's the case with a lot of our big, rich companies.
Henry, let's pivot right now to this blow-up of Archegos, the margin call that took place last week. You're seeing the fallout on Mura, for example. You're also seeing the fallout for Credit Suisse. Those were the folks that had lent them the money that was used in terms of levering up some of these big positions in media companies like Viacom, CBS. Curious how you see that trade unwinding, what you think the larger implications are for Wall Street, but also for these stocks unto themselves.
Well, I think it's a good reminder that there are a lot of big players in the markets who use a lot of leverage, and leverage makes you look like a genius when you're right and an absolute reckless moron when you're wrong. And hopefully this is just one isolated dice roller who got blown up along with all of his or her enablers, and it won't cascade from there. But I just think it's a good reminder to everybody that what seemed so rock solid may in fact be built on this enormous leverage with tiny actual capital.
I think the question is this the tip of the iceberg? Is this the piece of the iceberg that's jutted up above the water? We can see it now, but that underneath it there's a lot more, or you really think this is a one-off?
Let's hope it's a one-off. I don't know any more than anybody else. Mohammed El-Aaron was saying the same thing earlier. It'd be unusual to see a huge cascading issue in the equity market like this. Usually it's in the bond market or currencies or what have you, but possible.
And then when you look at the media companies, and I'm thinking Viacom, CBS, we were talking to Rich Greenfield about this, they raised $3 billion last week. Obviously, there's a lot of investors that are furious right now because they were buying that at $85 a share. Was it the right move long-term to take that cash and hopefully invest it in the right things, and we'll see whether they do? Or was it a mistake in terms of the long-term trust issue that has now been developed in this case?
The right time to raise cash is when people are eager to give it to you and buy stock, and when markets are good. You never want to wait until you actually need it, because then it's a much harder thing. Everybody who bought on a big institutional offering like that is an adult. They are very good at analysis. They can make their own decisions. So I don't think management should be beating themselves up about that. At the same time, it's a good reminder. The stock has gone from 12 to almost 100 over the course of a year. Maybe you're buying it at the top, what have you. So again, I think it's a good reminder to everybody that stocks do occasionally sometimes go down.
Henry Blodgett with the insights this morning. Appreciate it. Great to see you, my friend.
Thanks a lot, Andrew.
All right, coming up, Jim Cramer and his first take on another big trading week ahead. We've got the end of the first quarter, big jobs report. Right, and the market's not open, but we are. And a programming note, the global pandemic has fundamentally disrupted how we work. What's next in your company's transformation? Find out at the CNBC At Work Summit tomorrow. Register now at cnbcevents.com/work. Stay tuned. Squawk Box is coming right back.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving.
Does she get one?
Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
At Nuveen, we believe income investing can benefit both investors and communities. For over 120 years, our income-focused strategies have been building roads and bridges, hospitals and schools, and helping small and large businesses to grow. Investing to make an enduring impact on our world.
This is Hannah. She's a posh virtual receptionist. When you're busy, she answers the phone.
Thank you for calling the Anderson Group. Hannah speaking.
When you're in a meeting, Ashley can take a message.
She's not available, but I'd be happy to take a message.
And if you're stuck in court, Lisa will let your clients know.
Thank you. Mr. Decker will call you back as soon as he's available.
When you switch to Posh, you could save up to 40% off your current service provider's rates. You can't be in two places at once. Let Posh answer. Posh virtual receptionists.
It's a familiar story. Allergies ruining your sleep, and next day too. Taking Zysol at night relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin, and on first dose provides the same relief as Zyrtec at nearly half the size. Be wise all. Take Zysol at night.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
Our government has forgotten how to build things, so it takes forever to get these projects off the ground. That's why you want infrastructure stocks like Martin Marietta and Nucor that work regardless of what happens in Washington, can never be counted on. Watch or listen live on the CNBC app.
There's only one Barbara Corcoran.
But you don't sell a lot of that.
And only one.
The last time somebody told me he loved me, he left me and married my sister.
Shark Tank. Tonight, starting at 8 Eastern, CNBC. Get yours.
Let's check in at CNBC headquarters. Jim Cramer joins us right now. Jim, been waiting to get this chance to talk to you this morning because you know how Wall Street works. You know how these things play out. Explain what you think happened with Archegos and what the potential implications are for the broader market.
Well, I think obviously there was a foot race on Friday. Goldman won it. They had those pieces done before the market opened. Looks like Nomura and Credit Suisse were too late and ended up holding the bag. I do think that you guys have had excellent coverage of these companies. The question is about Viacom and whether they basically hurt people. Well, yeah, I mean, I think that people are big boys, and as Henry said, they got smoked. Discovery got smoked. I think that the Chinese stocks come back first because when you see Tencent Music already making a comeback. But it's emblematic of what I think will happen, which is that younger people, Becky, are going to say, I told you it was rigged. I told you the whole time that Twilio was going down, it was rigged. I mean, they're going to look at the stocks and say, oh, Zoom, I knew that was rigged. And Andrew raised a great point this morning, was who moves stocks up? And if it is the Robinhood crowd, I think they're going to say, I've had it. And if they say I've had it, right, of course, when Robinhood's doing their IPO, the market's going to change. And they always call the boomers and the suits the enemy. Well, it means the boomers and the suits won. And, Becky, they don't want to hear that.
That is an excellent point that we have not mentioned at all today, Jim. Just the timing on this with the Robinhood IPO that's coming up. And I guess that's the big question. Who else was holding on or got in at the highs? Because if you watch that over 2 months, I mean, that's the crazy thing. You look back 2 months, and the stocks are basically unchanged. Discovery and Viacom, at least, from where they were 2 months ago. So this was everybody who got sucked in on the upswing, and then who got left on the down.
Well, we would talk endlessly, David and I, about, like, what is Viacom doing up like this? What is Viacom? Then obviously there were people who were, I think they were shorting it and getting crushed. It's very interesting because I think a lot of the non-boomers should be asking themselves, well, what did you think happened with GME? What did you think happened? It's the same thing as what happened to, to this fund, to Argos. I mean, geez, they just got completely wiped out. And obviously, we don't hear from Melvin Capital. We don't hear from these guys. It's just, it is regarded as sinister by this younger cohort. And they'll go home. And what a shame. But they'll go home. They don't stick around. They're short timers. It's really a shame because they got smoked.
And the bad news is the lesson that teaches them for decades. I mean, you do need to be invested longer term to make money over this. I hope they don't get burned and then turn away from the markets for good.
We don't want it to be 2000 where we lost a quarter of the people who were in, and it just can't be like that. You try to teach them, Becky, we just keep teaching. Keep teaching. They don't want to hear from the suits. They don't want to hear from the boomers. But the only thing that we really have for them is history, and they need to hear it. Stay in the game. Don't get blown out.
Jim, I can't wait to hear your thoughts. David and Carl coming up. That's going to be in just a few minutes. We'll see you in just a few. Thanks.
Turn today's dreams into tomorrow's trips with millions of flexible booking options all in one place. Expedia.
Flex shares are carefully constructed to go beyond ordinary ETFs and strengthen client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
Sales are down from last quarter, but we're hoping things will pick up by Q3. Yeah.
Doug?
Sorry about that. What? It's,
You all right?
Never settle with Power E-Trade. It has powerful, easy-to-use tools to help you find opportunities, 24/7 support when you need answers, plus some of the lowest options and futures contract prices around. Don't get mad. Get E-Trade and start trading today.
Millions of people are saying yes to Allegra, including the experts. It's the #1 allergist-recommended brand for non-drowsy relief. Allegra works 2 times faster than Claritin, so you can get going first thing. It lasts up to 6 times longer than Benadryl, giving you relief through the late shift. And unlike Zyrtec, Allegra is non-drowsy for all your non-stop adventures. Join the millions saying yes to Allegra. And for kids, try Children's Allegra, the #1 allergist-recommended non-drowsy brand.
It's Women's History Month,
but women are making her story
every single day.
We are living our history and telling the stories of everything that we are.
So what do you love about your Always pan?
It's a kitchen magician. Have you ever seen a pan cook 3 things at once?
The non-stick, incredible. The built-in spatula rest,
Genius. I just learned to cook, and this pan makes it so easy.
I gave away half my kitchen when I found the Always pan. It does it all. Boils, steams, fries, sautés.
The future of fitness isn't dumbbells. It's revolutionary digital weight that learns as you get stronger. So you can be your strongest. Tonal, now at 40 Nordstrom locations nationwide.
As we get set to wrap up this hour and today's show, let's talk a little more about the extreme volatility that we saw late last week in Viacom, CBS, and Discovery, exacerbated by pressure on Archegos Capital Management. That's what's known, and we said it a few times, as a family office. And Robert Frank is back with us to explain how these firms have grown in recent years. There's more than a couple, Robert.
A lot more than a couple, Joe. There are now somewhere between 5,000 and 10,000 family offices around the world. They manage more than $6 trillion in assets, those numbers tripling over the past 2 decades. Now, despite their huge size and impact on the markets, they are actually exempt from most of the SEC disclosure requirements imposed on hedge funds and other private funds. And that's because back in 2010, as part of the Dodd-Frank legislation, family offices fought hard and won a special carve-out from Congress, allowing them to avoid SEC registration as long as they serve a single family and don't provide any outside investment advice. Now, Archegos did not make a single filing with the SEC in its entire history, despite, of course, making billions in bets. Now, technically, a family office with over $125 million invested has to file some 13Fs or stock holdings with the SEC, but those are rarely filed. And by the way, they're only visible to the SEC, not the public. Joe, after all of this news, I suspect someone in Congress is going to push for them to get rolled back into that disclosure legislation so we start to learn more about this $6 trillion and how it's invested.
You're required to file a 13F, but no one does. What is that? I don't even understand that, Robert. That, you know, once again, with great power comes great responsibility. Hopefully, you know, they're not all going to act like the Manson family, these family offices, but apparently this escaped all scrutiny. And look what happened. And if it happened too many times, it could be a problem. What do you think? I mean, look, go ahead.
No, I just think that, you know, these family offices used to be very sleepy institutions that bought some muni bonds and managed the family accounts and paid their bills. These are massive, very sophisticated institutions now, much like hedge funds, but they don't have the same requirements. So I just think that the regulations need to catch up with the reality of where family offices are today. You know, all these hedge funds, whether it's Carl Icahn, George Soros, they're all family offices now, and part of the attraction was they don't have to disclose.
Must file a 13F, but they don't. Never filed. So even the existing law isn't being filled. I don't know. Maybe we don't need more. But anyway, thank you, Robert. We appreciate it. We got to run. See you.
Okay. Let's get a final quick check on today's top pre-market movers from our good friend Dom Chu, who's got those stocks for us. Dom.
All right, so Andrew, we're keeping a close eye on that fallout from the liquidation trade tied to the family office, Archegos Capital. First off, some of the larger international banks are taking a hit, like Credit Suisse. The U.S.-listed shares right now down 14%, as you can see here. Roughly 750,000 shares of volume. The Swiss banking giant, along with Japanese bank Nomura, have both warned of significant losses tied to an unnamed U.S. hedge fund's margin calls last week. Now, reports are that Archegos could be the hedge fund in question, so watch those shares. One of the stocks seeing a massive amount of movement here so far, also selling pressure, was Chinese streaming music company Tencent. They've lost nearly 40% of their value, but now they're up 8% pre-market. They are seizing on the opportunity by buying back $1 billion of their own stock in that program coming up, so those shares up. And we'll end on Discovery Communications, moving higher, up 1% pre-market. Remember, this is a stock that's lost about 46% of its volume, also caught up in that liquidation trade, so keep an eye on those ones. Funds, Credit Suisse, 10 Cent Guys, and Discovery Communications. Andrew, I'll send things back over to you.
Okay, thanks for that. Make sure you join us tomorrow. Squawk on the Street begins right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. David Faber is going to join us in a moment. We are expecting some chop to start the week. Futures a bit soft here as we monitor the fallout from these reported margin calls at Credit Suisse, Nomura, Goldman following Friday's block trades. Busy week ahead. Jobs report on Friday, of course, with the market closed. Our roadmap begins with that massive margin call. Some banks warning of significant losses. Plus the latest on the container ship still stuck in the Suez Canal. And Boeing rallying as Southwest orders at least 100 737 MAX planes. Jim, it is great to see you again, and we'll talk to David in a couple of minutes here. In general, how are you viewing this margin event? El Arian earlier on Squawk saying it appears to be a one-off, but you definitely do not want a pile-up, in his words.
No, and I do think that when you get some pretty harsh statements out of Nomura and Credit Suisse saying highly significant losses, then what people are going to do is shoot first and ask questions later. They're going to take the whole group down, brokers down. It doesn't matter whether they were quick to evade Archegos, which is the apparently the office in question, family office, or did everybody just get completely smoked? And I have to tell you, Carl, I think that some people are saying Goldman made money on the trade. Having executed margin calls, let me tell you something. You just get out of this stuff. I mean, they're not playing the market. You don't say, well, I'll buy 10 cent and then we'll see how it does. It's boom, it's out, which is why you're seeing, and I'm sure that's everybody's doing that, it's why you're seeing such declines. I know we're going to hear from David. David's close to it because his tweets yesterday pretty much defined the story. But I'm not going to say it's one-off, if only just because we have to go through the who really had it, who didn't have it, before we complete the day. And, you know, you'll see a stock like Morgan Stanley. It'd be very unlike them to really get hurt here. But look at what they're doing. And there's also these ETFs that connect them all. So if you want to buy these stocks, I'd wait till a little later today, because a lot of them we have to hear from before we buy.
Right. And that process, Jim, of course, comes not just through disclosures, but through a lot of solid reporting. Speaking of which, David Faber has been covering this ever since the block trades really hit late last week, and he joins us this morning on the phone. David, happy vacation once again. What's important to know this morning?
Yeah, thanks, guys. I'm sorry I'm not with you, and it does seem inevitable. First vacation in 8 months. It always happens. And, you know, it's funny. Literally on the plane, 7 a.m., my phone started to light up with calls from people saying there's some very strange block trades. Now, that wasn't yet Viacom and Discovery, which, of course, as we know, are sort of at the center of this, but it was any of these other names. Baidu, you mentioned 10 Cent. You heard Dom mentioning at the end of Squawk Box. Block after block, and people starting to wonder what was going on as Friday went along. Of course, we started to see those enormous blocks of both Discovery and Viacom. We have all three of us sat there and talked endlessly, as you know, over these last few months about the enormous move up in both Viacom and Discovery, in particular, two companies that I happen to know very well, far beyond what many at least had anticipated would be the fundamental strength of these companies, even with counting for their success so far, if you want to call it that, in direct-to-consumer. And now we have an answer as to what was going on, but we have an awful lot of questions still in terms of how this was allowed to happen. And if I could just back up for a minute and try to explain to our viewers, what are we talking about? Well, it does appear that Archegos, this family office / hedge fund, whatever you want to actually term it, had swap agreements across Wall Street with all sorts of different prime brokers, whether it's Goldman Sachs, whether it's Morgan Stanley, whether it's Credit Suisse, which, as Jim just mentioned, may have significant losses, whether it's Nomura, and on and on. And none of them seem to have an understanding of exactly how large the positions were at the other firms. And a swap basically gives a derivative. The stock is held in the street name, but the derivative that's tied to it gives the economic value to the owner there. And so Archegos had, well, now we know perhaps as much as 15% or more ownership economically of Discovery and Viacom. Those numbers are just astronomical, and apparently buying them all through, the main reason they may have moved up to the levels that they did, and then having been thrown as Viacom proceeded to do that offering early last week at $85 a share and the stock suffering, that may have started this cascade where the selling began. And by the way, it's not just owning it on swap where there's no transparency and nobody really knows, including the companies, who their true owners are. It's also the leverage being provided by the prime brokers, Jim. 5, maybe as much as 7 times. And that's where we are right now. And this may not be over. I've heard from numerous people this morning that Wells Fargo may be shopping a large block of Viacom as well. And so we'll see. They did the $45 million last night at, what was it, 47, I think it was. But there may be more downside here. We'll have to wait and see. But this has been a fascinating story, Jim, both from the lack of transparency, the leverage that was being used, and the size. Nobody knows exactly what this guy who runs Archegos was thinking. It seems almost insane, his behavior.
Yeah, I mean, David, when I think about this, I think about what would have happened if you had done, I mean, let's say I ran a hedge fund and you borrowed money and you didn't tell the other brokers that you were doing this, and you just had everybody on the hook. So I think people at home, David, are wondering, how is it possible that this man could have fooled every single broker?
Yeah, listen, there are, you are supposed to say that you will not own more than 10% of any one company, period. Apparently, he didn't listen to those rules and didn't obey those rules. I mean, that's all I can think. Now, there are various rules as well, but, the swap market perhaps is more opaque, as we've said. It's unknown to the other prime brokers if you don't disclose it, what your economic position is with others. And so clearly he seemed to be above 10%. Clearly he very well may not have been obeying rules at least set by the prime brokers, Jim. And then why he would make the decision to buy and buy and buy over those last weeks and months as that stock went ever higher and many shorts covered, it's not clear exactly what his thinking was. And here we are.
Well, David, I mean, I think people at home are trying to figure out how a $3 billion offering of Viacom, of which, by the way, you talked about Viacom doing one every day if they had a brain, how $3 billion Viacom could send everything domino-like, that you could actually have the language of a Credit Suisse saying, look, these are highly significant losses. David, these are very big banks. I mean, I think people say, are they all that fragile?
I know. I mean, listen, it's prime brokerage. Certain ones are much more focused on the leverage that they're providing a client. But at the same time, if the client is not being straightforward with them and they don't understand the exposure the client has across Wall Street to one name or two names and how large they are in that name, it's very difficult for them to ascertain. And again, it's both the lack of transparency and the leverage here that conspired to bring this firm down, clearly. And it's going to result in these enormous losses that we're seeing. I mean, Nomura last night, we saw, as much as $2 billion. We don't know the number on Credit Suisse. We have other suspects that perhaps that there's some concern about. So we're going to learn a lot more. There's going to be, guys, going to have to be an investigation here of some kind. Most likely there is going to be a rewriting of rules and regulations around swaps so that there is more transparency. That's why this is an important story, even if it doesn't spread far beyond. And obviously it's already impacted the stocks that we're talking about. It's not as though Tencent, Jim, is not an enormous company. The idea that stock was down as much as it was is frightening, given how important it is in China and how enormous it is in China.
Well, David, last night you tweeted that there could be more Viacom done, and Viacom was up earlier today. Again, what this shows is that this opaque world is going to freak out a lot of the younger people who really didn't even know this could happen. So, David, we don't know who prime brokerage is because the prime broker should have been able to detect that, unless it was done somehow off the books, should have been able to detect that there was some sort of violation here.
Right, yes, but it's funny, Jim. I mean, listen, as you know, I'm close to these companies, and I was asking them and trying to understand, who is doing all this buying? And frankly, they didn't, because when you would look, if you were running IR at any of these companies, you would see a lot of the stock in street name, right? You'd say, oh, okay, Credit Suisse owns our stock. Right. Well, why? And you might ask and say, well, we're JP Morgan. And some of this actually was because, well, we're putting together a reopening basket, and your name is one of the reopening basket names. But you didn't know who the underlying economic interest was tied to, derivatively tied to. And that was the problem here. Even the companies in question didn't really know who was behind this buying.
Well, but David, one of the things that's happening right now is you watch the crawl underneath us, is you're seeing stocks of companies just being tossed out. JP Morgan, Morgan Stanley. Will everyone have to address this, David? Will everyone have to say, here's my loss from this, as if it were some sort of whale? Because these stocks are all being carried down. Not everyone could have been, well, could everyone have been hurt by this?
I don't know. I mean, that's a great question. I think we're still only somewhat early days of the story, and I think you're right. I think all of them are going to have to address it and say this is what our potential loss may be as a result of unwinding these positions. You know, we don't know what's still what's so interesting here is that we still don't know how much more stock there is to sell. And they may not even know. Again, back to what I'm hearing this morning, Wells Fargo may have more stock to sell. Or Wells Fargo, right? I mean, that's not okay, a Viacom. We'll see. Again, I haven't confirmed that with Wells, so I want to make it clear, but I have heard from 3 different accounts that have been approached. So I'm assuming there is stock to sell there. And so you don't even know, Jim, at this point. Did he have another prime brokerage account at another firm that we're unaware of that may have to be forced to sell? We're just not sure. We just don't know.
Well, Carl, I think what this does is create another level of distrust. It's been bad enough that some of the great high growth stocks have really just been annihilated here. But I think there are going to be a group of people, in the younger set in particular. I mean, you know, we're suits, so to speak. I'm a boomer. Well, sorry, I apologize. But, Carl, I think what's going to happen is people are going to say, it's rigged. It's rigged. I mean, and it's rigged in favor of hedge funds. Because remember, hedge funds have been the villain, so to speak, over at the Reddits of the world. And now they really have a definitive villain that's taking down everyone, Carl. And I've got to tell you, it is of great interest to me whether Morgan Stanley should be down 3. Maybe J.P. Morgan had control of the situation. But now you're going to have to deal with one of these situations where does J.P. Morgan want to come out and say, we were not hurt? You know, that's something that historically J.P. Morgan himself would say, if you have to say that, then you obviously are in trouble. So I think there's a level of distrust right now, Carl, that is going to make it so the market could be down more than people realize right now, just because I think there's going to be a sense, wow, this game, it is just a mug's game. I think that's a shame. It's not, but I understand.
It is cloudy. Right now, Bloomberg's got a story about Deutsche Bank, guys. Even though they agreed to exit prime brokerage a couple of years ago, still may be exposed to some of these losses, including those from Archegos. David, I wonder, are we giving Goldman this morning credit for being a little bit nimble and maybe exiting early? Or are we wondering why they were doing business with Wong in the first place, given that he was long in the penalty box?
Yeah, I think you could ask both questions, I think, right? We know this guy's track record was not the best, and so that becomes a question for everybody who did business with him. At the same time, it does appear, at least, that Goldman may have been able to sidestep some of the significant losses that others may be facing as a result of perhaps being more focused on the leverage and more understanding of the risk at hand. We just don't know, Carl. And I think what's going to be interesting about this story is how it unfolds in the next few days, weeks, and even months, as we understand more, and then as perhaps the regulators move in to take a closer look at this particular market, which again is lacking in transparency, and we can all see what that means.
Where is
David,
the SEC?
keep your phone close.
Where is the SEC, Carl? Where is the SEC? How about a statement from the SEC saying that not as many teams got to the final 8? No, Elite Eight, no. We need to see the SEC say something. Now, we know the SEC doesn't necessarily, is not staffed right, but I think the people, the American people, are trying to figure out, is the regulation? So right now, the SEC should be saying we are looking into it, because otherwise people are going to say, you know what, it's self-regulating, Carl, and it doesn't work.
Right. David, thanks as always. We miss you, and we hope to talk to you obviously later today or later in the week. That's our David Faber on the phone. Reuters, guys, is running with a headline that says the stranded Suez Canal ship has been freed. That's Reuters citing some sources. Of course, we'll be waiting for some confirmation on that. Let's check in with our correspondent, Dan Murphy, who is in Egypt and on the CNBC Newsline. Hey, Dan.
Right now, and I'm seeing a pretty significant breakthrough here at the Suez Canal. Rescue operators have been able to partially refloat the Ever Given, which has been stuck sideways in the canal since Tuesday. Look, earlier today, authorities said that the vessel had responded well to push and pull maneuvers in high tide, and we know they've been using tugs and sophisticated dredging equipment to pump sand and mud from underneath the ship to clear its engine and propellers. Well, right now I'm looking at it, and the ship is really starting to maneuver in the right direction. Actually, I'm not sure if you can hear that behind me, but it's been sounding its horn in celebration, perhaps sending a message to the flotilla of ships that it's been holding up over the past week or so. Now, of course, we have to look at the economic impact of all of this and the market impact too. This blockage has held up about $9 billion a day in global trade, according to some estimates. It's caused big disruptions to global supply chains. Remember, the Suez Canal carries about 10% of global trade, about 7% of the world's oil as well. And we've been speaking with analysts who say that even if the ship is cleared soon, it's probably going to take at least 10 days to clear the backlog of the some 400 ships still waiting to pass through. So ultimately, this mishap all underscoring just how vital the Suez Canal is for global seaborne trade and also for Egypt, which has lost about $95 million in canal revenue as a result of this incident. So I'm looking at the ship right now. It does appear to be moving. We're not sure if the ship is underway by itself or if it's being pushed and pulled by those tugs, but no doubt a significant development emerging on the Suez Canal as we speak, guys. Back over to you.
Dan, really quick, before we let you go, is there a sense as to how long it will take to move some of those tugs out of the way so that those 400 ships could at least begin to follow through Ever Given's path?
It's a great question. We understand that the ship is probably going to have to go into mechanical inspections from this point on. It's unlikely that it's fit to sail. Of course, it's been stranded on the banks of the Suez Canal, so it needs to be given a once-over to ensure that it's seaworthy. We understand it's going to be taken north and then put into a separate holding area in the Suez Canal. Not until it passes through to that holding area will we see the other ships beginning to move through the Suez Canal themselves. As I mentioned, analysts saying it could take up to 10 days to clear that backlog, and 10 days is also a pretty optimistic forecast when you consider just how many boats are out there and how much cargo they're carrying. So it's likely that this issue could really extend, this blockage could perhaps even extend into the coming days, maybe even another couple of weeks, but it looks like good progress is being made on the ground here right now.
Dan, Jim Cramer, fabulous reporting, and this is a story that's captivated the whole world. But I wanted to ask you, a lot of people are saying, how come oil isn't higher? The shipping companies I contacted all say, look, it's derivatives of oil, liquefied natural gas, ethane, and it's not necessarily oil itself, because oil doesn't necessarily go through the Suez Canal. Can that explain why we're not seeing oil spike on this?
Yeah, you got it, Jim. So, look, I thought the oil reaction was interesting, right? As soon as this headline broke this morning, we actually saw oil prices falling. And that's curious, right? Because normally this blockage would have resulted in a spike in prices that you've been referring to. News that the ship could perhaps be showing signs of becoming unstuck sent the oil price lower. Now, the Suez Canal is not necessarily a huge conduit for oil and LNG. It only carries about 5 to 7% of total seaborne supply. Of course, pipelines carry much more crude. There's heaps of crude in storage as well. So I would contend that there's probably other factors that are influencing the price of oil right now. This is probably more so just a headline-driven event.
Dan, perfect timing to have you on as we begin to see some real progress here, according to reports and your own eyewitness account. Thanks very much. Dan Murphy joining us from CNBC on the Newsline. Take a break here. A bunch of individual calls we got to get to, including some calls on Twitter, Etsy, GM, Facebook. Got some news on DraftKings, and of course, that Boeing plane order from Southwest. We're back in a minute.
This CNBC program is sponsored by Baird. Visit BairdDifference.com.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
a time frame that is really unprecedented.
Do you take responsibility for that?
115 sustained wins.
Everybody is back in the game. Where do we go?
What do you make of this report?
How does the moment become a sustained movement?
I've reported from here during 3 different presidential administrations.
Should we be lifting the tariffs?
Because words matter.
Hi, I'm Dr. Anthony with RexMD.com. If you've ever considered trying ED medication, right now you can go to RexMD.com and get real prescription ED medication delivered direct to you. Here's how RexMD.com works. Just fill out a brief survey, and if appropriate, you can try a sample pack of ED medication, which are currently available to new customers. Your consultation is free. There's no copays, no doctor office visits, and your shipping is always free. Sample pack prescriptions of ED medication are now available at RexMD.com.
I think we can all collectively agree that 2020 sucked. Hi, I'm Yaya, founder of Truebill. Let's make 2021 better, starting with your finances. Truebill shows you a clear picture of your accounts, cancels unwanted subscriptions, and lowers bills by up to 20%. Download Truebill today.
Watch Boeing in the pre-market looks to open up about 2% here as Southwest announces 100 firm orders for the 737 MAX, takes an option for about 155 additional jets. Jim, it was on our show in 2019 where Gary Kelly said, look, the board's going to look at maybe diversifying into Airbus. And it was later that Boeing's Dave Calhoun said, we let him down.
You know, this is a surprise. Phil LeBeau with an excellent report earlier. I did think it was going to go to Airbus because you remember how angry Gary Kelly was. Who can blame him? But this plus a note from Goldman Sachs saying 787 deliveries resume, it is a statement that maybe that Boeing's going to return to the the stock's been signaling this, return to one of the blue chips that is going to be the great reopening trade. And the reopening trade is still very strong. And I find that the Keep America Closed trade diminishes by the day. This is a very big deal, Carl. And I do think that when I think about Boeing and this is the 737 MAX, I think that people felt no one would ever ride it again. Carl, I don't think no one even knows whether they're in a 737 MAX.
Yeah. Speaking of which, Jim, American had some updated guidance on net bookings. As of the 26th of March last week, the 7-day moving average of net bookings at American is 90% of the 2019 total. Wow. And they see that continuing through Q2. But, Jim, capacity's down 40%. So I don't know how we work their way out of that except for higher fares.
Yes, absolutely. The fares are going up. Especially, remember, what's really incredible is you can't go to Europe. So, I mean, these companies are going to make a lot of money. Good for them. I know that when people say, well, wait a second, they got a government bailout. But if we recall, at this time last year, we thought that the way you got COVID was to go on a plane. It took a long time for Boeing and for the airlines to be able to actually state their case, which is that the airflow is 16 times better than a building. And so I absolutely feel that this is, again, a sign that you got to own the airlines. I don't think people understand that when Europe comes back, it's just going to be really bountiful. Southwest, obviously, right here, right now, levered to the price of oil, too, but expanded. Some of these companies took advantage of this moment, Carl, and really expanded. And I think that that's why Southwest needs so many planes.
Yeah, certainly JetBlue and Gary Kelly at Southwest have been pretty opportunistic about entering some markets they maybe weren't in previously. It kind of brings to mind, Jim, this Goldman note this morning on the economy, Jan Hatzius, that's actually titled Anatomy of a Boom. And they say accelerating sequential growth is transitioning from our forecast to a fact. They leave Q1 GDP at 7.5, largely because of the weather drag, but they take Q2 up a full point to 10.5. Jim, as they say, look, the timing of these stimulus payments and the reopening is going to mean the springtime is just going to be hot.
Oh, wow. That's a good note. And I think that, again, that is what the story is in our markets. Restaurants, travel. I saw Disney down because people felt that maybe Disney's caught up with the great the Archegos fool. Well, I don't want to call it. I don't want to call it fraud because that would be too strong. But I do think that anything that is opening, anything that's in the mall. I mean, how about this lag trade? This is the trade that Matthew Boss mentioned. LB is doing great. American Eagle's doing great. I mean, Gap is doing great. Carl, I don't want to. Whoa, I don't want to say we're back, but we're close to it. We're close to it.
Right. We're going to talk about some of those calls and some names, including a big call by J.P. Morgan on the internet space. We'll take a short break here. Opening bell in about 5 minutes.
Get the edge in a hot investing trend. ETFs. Build your best portfolio and profit from the $3 trillion ETF market. Bob Pisani gives you the ETF edge. Only on etfedge.cnbc.com.
This is my body of proof.
Proof of less joint pain and clearer skin.
Proof that I can fight psoriatic arthritis.
With Humira. Humira targets and blocks the specific source of inflammation that contributes to both joint and skin symptoms. It's proven to help relieve pain, stop further irreversible joint damage, and clear skin in many adults.
Humira can lower your ability to fight infections. Serious and sometimes fatal infections, including tuberculosis and cancers, including lymphoma, have happened, as have blood, liver, and nervous system problems, serious allergic reactions, and new or worsening heart failure. Tell your doctor if you've been to areas where certain fungal infections are common, and if you've had TB, hepatitis B, are prone to infections, or have flu-like symptoms or sores. Don't start Humira if you have an infection.
Ask your rheumatologist about Humira.
Go to Humira.com to see proof in action.
If you can't afford your medicine, AbbVie may be able to help.
When you order today. We see breakthrough medicines getting to patients in record time. At Emerson, our automation software is empowering pharmaceutical companies to accelerate their production of critical vaccinations for the world. Emerson, consider it solved.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this, you're a mover, Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and only pay for the features they need.
I'm not ready to lose my hair. Not now. But I never thought there was a real solution. Now I use Keeps, the easiest way to keep my hair. And I can get my treatment without leaving the couch. Go to Keeps.com to learn more.
At Nuveen, we believe income investing can benefit both investors and communities. For over 120 years, our income-focused strategies have been building roads and bridges, hospitals and schools, and helping small and large businesses to grow. Investing to make an enduring impact on our world.
The opening bell is brought to you by Nuveen, a leader in income, alternatives, and responsible investing.
Let's get Kramer's Mad Dash this morning. Watching some Lulu today, Jim.
Yes, Carl, this is the, I think this is the fulcrum moment. We have to find out whether the stay-at-home trade is completely over or not. Is there any hope for it? Lululemon, which reports tomorrow, has widely been viewed as a work-at-home, stay-at-home clothing play. That you can put on Lulu and sit there at home, and you can be on your computer, and suddenly the world is opening, and Lulu doesn't fly if you go back to the central office. So let's watch. Stock down 10%. Piper says it's going to be a very good quarter. The question is not whether it'll be a good quarter. Of course, Lulu always does good quarter. The question is, will anybody care? And I don't know. I want to find out. The stay-at-home trade had been a good one, Carl, but notice I'm using past tense. I think it's the grand opening trade only that's working.
Although, Jim, you know, I saw some discussion last week asking the question, how can the reopening trade be a pure thesis when HD and RH are doing so well?
Well, I think HD and RH are linked to, well, actually, just cribbing from a note today. They're linked to the stimulus. We're finding out that that's where a lot of people feel that the stimulus dollars go to. Wells also saying that it goes to Tractor Supply. That's an outfit that you use if you move to the country. So those are being viewed. Lowe's and Home Depot are being viewed as the exceptions, because you get the stimulus check and you don't go to Robinhood, you go to Home Depot. Quite a switch. You lose less money if you go to Home Depot.
Interesting. Yeah, I mean, it's. I guess at this point, Jim, the takeaway would be that there are so many stimulus dollars afloat that maybe these households can do both, right?
Could
go
be.
on vacation and upgrade the pool.
I think that they are going to vacation. They can spend a lot of money, and there's a lot of different weddings and things that have been held up. And by the way, on Home Depot, people feel if you invest in your house goes up in value. It's been a big winner to invest in your house this period.
Yeah, for sure. There's the opening bell, of course, and a look at the S&P 500 at the bottom of your screen, coming off of a record close on Friday. Jim, we discussed the margin event with David at the top, and we have seen some upgrades this morning of Viacom over at Loop and BMO. Tencent, of course, with $1 billion buyback. It's the biggest ever. Do you think there's value in some of these names that have been essentially cut in half?
Yes, I do think that Viacom, one of the things that Viacom CBS got is from BMO is that the streaming biz may have a lot of value to it. They're talking about $45 in value. One of the funniest things, Carl, they kept their price target unchanged to 70. You know, stock went to the 90s, and they fortunately didn't change so that they're using a $9 price target. I do think that there is value with Viacom, but I do think, again, you have to wait for things to settle because you don't know where more Viacom is. I mean, obviously, if someone could be as nefarious as they were to a couple of firms, they could be nefarious to everybody. And I say nefarious, trying to find a word which describes taking out, borrowing a lot of money from everyone and not disclosing that they're doing it. Because, Carl, had they, then these firms would have closed it out a long time ago. Obviously, the firms were clueless. You can't detect fraud. I remember when I was at Goldman, I learned, you can't detect fraud. It's just too hard. I do think that it was important to recognize that if you got out of it first, as Goldman did in the morning, I couldn't figure out the trades. I thought it might be something with the PRC. But if you got out of it first, the firms tend not to hang around. They tend not to hope that Tencent will come back. I mean, a lot of people feel, oh, man, Goldman must have cleaned up. I know from my time on the desk and to spend some time in margin, the goal is not to make money. The goal is to get out as fast as possible because you don't know what's wrong with Tencent. I mean, obviously, you don't know that it's owned by everybody. So those who think that Goldman made a lot of money on this, no. I mean, Goldman may have been able to limit its losses, but the goal is not to profit from a margin call. The goal is to save your skin.
Right, right. Morgan Stanley, Jim, is the worst performing S&P-er, and that's going to take you below the 50-day for the first time since February 1st. And Wells is not far behind off of the heels of David's comments at the top of the show.
I think these might be opportunities if you believe that interest rates continue to trend higher. J.P. Morgan, really great firm, big balance sheet. Morgan Stanley, historically not a big risk taker. Wells Fargo's Charlie Scharf. Remember, we're waiting to see these banks. They were up a little last week because they are more in control of their dividends if they've got the right regulatory structure. But I do think that if you think rates are going to go up, pick your timing. Maybe wait until after margin calls, say about 2 o'clock. And I think you might have a good investment here. These companies are doing quite well, and they're part of the reopening trade, Carl. So I would don't necessarily one city. New CEO, got to find out how she's doing. But Charlie Scharf's been doing a great job. Wells Fargo's up in a straight line. And if you want to bet against J.P. Morgan here, Jamie Dimon, you want to bet against Brian Moynihan, Bank of America, I think that's a fool's bet. And those guys know how to handle this stuff.
Yeah. Speaking of J.P. Morgan, a 240-page report out of the bank this morning on the internet space. Their top picks are Google, Facebook, Amazon, Peloton, and Twitter. At the same time, Jim, Deutsche takes Facebook to 385. That's going to be a street high in the face of what we know is ongoing regulatory scrutiny.
I think that this is precisely what I would do as an analyst. You let the CEOs get grilled People start worrying about regulation. A couple days go by. People recognize that that show is over. How are the companies doing? And it turns out the companies are doing quite well. Facebook, the numbers are too low. One of the things that's amazing about Facebook is it's cheaper than almost every growth company out there. Not the same for Amazon, but I think Amazon's doing well. Apple's obviously service revenue. Twitter, what a great opportunity. Jack Dorsey on the Hill. Jack Dorsey gets grilled. Nothing really happens, but we realize that Twitter's doing quite well. It's just kind of a great opportunity. And I think that people have been holding back from buying these because they didn't know what Washington would do. Now they're looking at the numbers and realizing the numbers are coming in really good, Carl. And once again, people switching from linear TV, going to these guys. And it's been, I think it's happening even quicker, more quickly than it was happening even 6 months ago.
Yeah. Yeah, you might be right, Jim. I know I missed SNL over the weekend, but I watched essentially all the big clips on SNL's Twitter account on Sunday morning. By the way, Twitter, which has come down from 80 back to 62, gets upgraded today over at Truist. Jim, they say it's the most exciting product roadmap we've ever seen from the company, and I know you've gotten a sneak peek at some of the things they're rolling out early this year.
I talked to Ned Siegel. I was a beta for Places for their, their parent, their equal to Clubhouse, and it's crushing it. It's just crushing it. And one of the things that people have to realize is Ned Siegel comes on every quarter. And Ned always is like, I think it's going to be pretty good. No, he exploded this time. He was like, man, is it coming together? And Ned is a great barometer because he is a very steady CFO. And I just feel like you could barely contain the man. There's a lot of good things happening at Twitter. They are getting, remember, they had something like 40 out of 44, maybe 40. I'm sorry, Ned, if I get the number wrong. Ned will tweet me quickly. But I do think that they Ned, go ahead. They crushed it at the Super Bowl. If you want to start a campaign, people go to Twitter. And this has been an amazing time because a lot of people felt that when the real Donald Trump left Twitter, it would hurt. Nope, it helped. I think that people feel Twitter has been very good at getting rid of hate, really good at getting rid of, trying to get rid of bullying. Are they there perfectly? Not yet, but they're doing a great job. And I think that what matters is that the daily average users they're pretty good. I think numbers are coming back there. Carl, one of the things when you talk to these consumer product companies, they're kind of like, how do we reach the non-millennials, how do we reach the even younger than millennials? Well, you can also, Rich Greenfield said you can reach them with Snap. All of these companies are doing quite well, but it is at the expense of linear TV where people feel it's not a bargain anymore.
That's right. The cord cutting phenomenon is something we've covered for years. Jim, I did want to get you quickly on cannabis. New York lawmakers, of course, reached an agreement over the weekend on expanding state regulation from medical to recreational. They could vote on it as early as tomorrow. The Dems have a veto-proof majority in the state legislature. They're talking $350 million in annual revenue. Stifel's out with a note this morning, Jim, calling it a potential $5 billion opportunity, as it would be the 15th state to go recreational.
Well, look, I do think that this is one of those where the devil's in the details. Massachusetts got it, and you thought that Massachusetts would just line up. There'd be like, south of the border. You thought it was going to be like Dillon with fireworks, South Carolina. No. I mean, there's just a lot of different towns that get involved. I want to see exactly how big this is going to be. I mean, New Jersey did it, and it's impossible to find. I've been recommending Grow Generation because that's the company that sells very special equipment that allows you to grow it. But the recreational so far has not been a great thing for these stocks that we're showing. So don't get too excited. I mean, people do tend to rush into these. They rush into the bottom one, sundial growers. They bullet to $1.80, and then the sellers come out. Grow Generation, I spoke with them last week. They got a good model. And a lot of what you need to do to grow a lot of cannabis is spend a lot of money, because it's not easy to do. Will the stores come out and the buyers come out? I don't know. And I think there's still a stigma. My favorite has been Canopy because they're mostly owned by Constellation, so they apparently have a great taste, no filling drink. I've not had that. It will be separate in bars. I don't think regular bars will carry it. But Canopy has a lot of money. Even though they burn through a lot of money, they still have money to burn if they need to. Constellation's doing really well.
Yep, and it brings to mind, Jim, TAP this morning reiterating their guidance, saying a dividend's possible in the second half. That's going to be about a 2-month high on Molson Coors.
People, it's very interesting that the companies that sold beer did quite well in the stay-at-home trade. Like Peloton did quite well the stay-at-home trade, but I think people feel I'm getting a lot of heat from I had a kind of a negative piece on Peloton. Well, it was at 120, so maybe I rest my case. But there's a couple of the stay-at-home, so a couple of the stay-at-home trades that have that are trying to morph into go-out trades, and I think beer is real. I think that people love beer. I think they would love to try the cannabis drinks, but I do think that when you get these bars open, Carl, it is going to be the Roaring 20s. And if you get that 10% growth, it's Roaring 20s. And this time, there's no prohibition.
Yeah, that's you may be right, Jim. Obviously, I read something the other day that they called it the Roaring 20s to a degree because the people who had lived through the prior pandemic at the time felt like, well, I survived that. Nothing can kill me, and that was sort of what led to those incredible animal spirits.
Well, I had Dr. Eric Topol on, whom I regard as being, by the way, the greatest follow. He's at Scripps. And he said to me, no one should die anymore. We have them at no one should die from COVID if everything's done right. And I was saying, look, I think that the COVID is back and is surging. He said, be careful. If you're vaccinating more than 1% of the people in a day, don't be surprised when we get to May and everybody's got it.
Jim, you're right. We just did 3 million for the third straight day. We've now got almost half of Americans who are 65 plus, fully vaccinated, not one dose, fully vaccinated. And there's a good piece this morning, Jim, in Politico, that the White House may rejigger some of their vaccination strategy because they're finding that Americans don't necessarily want to go to a mass vaccination site. They'd rather go to a drugstore or a pharmacy, and that may be a better way to get this thing finally done, to your point, to those Americans who actually want it.
Yeah, I mean, my wife got it at Walgreens in Florida, and she said it was, I know this sounds strange, but it was a pleasant experience. I think that's what happens when she had the J&J. So it was pleasant. She got back. She didn't feel well, but now she's queen. She's queen of Florida. And I think that you see CVS and Walgreens, I think they're getting business. I was surprised. I didn't think they would. We hear from Roz Brewer, the unbelievable executive who left Starbucks. Big loss for Starbucks, who's running Walgreens. I think she's got a big story to tell this week. And a lot of it is that, well, you feel good. You buy something when you're there. And it's real. I mean, Carl, I think that the numbers are those numbers are amazing, 3 million. They're amazing. Think about it. The population of the country is 330 million? I mean, we're going to be there. And people are going to go out. And I'm targeting Cinco de Mayo as the day that everybody goes out.
Yep. We're going to be there. David and I are going to be there on that day, Jim.
Well, it's going to be private.
By the way, Moderna this morning announces the shipment of the 100 millionth dose to the government. So those are numbers that we used to talk about sort of as pie-in-the-sky targets, but it's actually in the mail.
Moderna has proven to be maybe the most amazing company because Moderna didn't exist not that long ago. And now people, when you ask people which one they got, they're always very proud when they got Moderna. Oh, I got Moderna. Me, I got Moderna. Okay, so it was 2 shots, and the second shot I was really tired. But I think Moderna's got really good numbers. Look, J&J has got great numbers too, but this thing is just incredible. It's what people, if you're not talking about the Suez Canal, you're talking about what shot you had.
It's true. Is your arm sore? And congratulations. Those are the 2 big topics of discussion in the country right now. Overall, financials down about 1%, but as you can see, some limited selling this morning. Let's get to Rick Santelli today. Hey, Rick.
Good morning, Carl. Welcome back. I just scratch my head. Look at the 20-year chart of the S&P and Dow, and if you haven't realized it by now, they're just having a stellar run Friday. Of course, they both closed in record territory. The NASDAQ may be having a tougher time. And amidst all of this, there's actually head-scratching and questions as to whether some of these areas of capital loss and over-margin and leverage are one-offs. They're not one-offs. It's the plan. It's what central banks and our Fed have been seeding They've been seeding these clouds. Leverage is what saves the system. This is what they want. And to think that the CEOs of many of these companies that are stay-at-home were telling us that this is the new normal, did we really believe them? Do you really think that's the way it's going to turn out? I'm very impressed the market's doing as well as it is. And if you look at interest rates on the 10-year going back to 2012, what you'll see is this 1.5% area is huge. Look at it. Whether it's from 140 up to 160, 2012, 2016, the fact of the matter is you could look at that chart and make a very easy blanket 2021 statement. We're probably going to do most of our work between 1.5% and 2%. If we get on the extremes in either case, to the upside or the downside, it could have some follow-through. The downside's easier to quantify. I can tell you for sure it's going to stop in the mid-130s. Those were the all-time bottoms of 2012 and 16. And it's going to stop at 119, 120. That's where it stopped early in COVID. Those are going to be key points. Now, if you look at a 20-year chart of Boone's, it looks completely different. It just keeps going down, down, down. You know, they haven't closed above zero. They haven't closed in positive territory since May of 2019. And we're scratching our heads that there's firms that have margin calls and have over-leveraged and that CEOs aren't going to tell you about it? Come on. Now, if we look at what's going on in foreign exchange, it's always the dollar's going to have problems. And I agree with that to some extent. However, you know who's going to have bigger problems? Europe. Look at the euro over the last couple of years, and what you'll see is on this chart going all the way back to 2010, it just looks heavy. Take the name off, euro versus dollar. Look at that chart. If it was a stock, would you be putting your money in it? I don't think so. But yet, if you look at a picture of the dollar index just since September of 2020, it certainly looks like the momentum's to the upside. You could look at fundamentals, but sometimes it's just easier to look at a chart. Jim and Carl, back to you.
All right, Rick, thank you very much. Some mild selling here. Dow was briefly positive at the open, but basically flat. S&P 3966 as we took a look at the heat map here on our way to break. We're back in a moment.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
So who climbs ladders to clean their gutters?
Dad, I keep telling you it's dangerous.
Climbing ladders is too dangerous. Leaf Filter puts an end to that.
So how does it work?
Leaf Filter's three-piece system filters out leaves and debris, letting water flow through freely.
Do we need to replace our gutters?
Great question. Leaf Filter could be installed right on top of your existing gutters.
We're sold.
Call 833-LEAF-FILTER or go to getleaffilter.com for your free gutter inspection and estimate.
3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badging.
With a bang, energy and change came to every part of our universe. Seismic or small, it continues.
Change is all around us. Shaped by technology and human ingenuity. We can make it work for you and your business.
The At Work Summit is an opportunity to think about the future.
March 30th. Join Reid Hoffman and Game Changers in Innovation. Register now at cnbcevents.com/work.
Now what the hell's an NFT? Apparently cryptocurrency. Everyone's making so much money. Can you please explain what's an NFT? I said, what the hell's an NFT? It's like real life Monopoly. Everyone is doing it like Gronkowski. Can you please help me make an NFT?
Son, I didn't understand a word you just said.
Hey, thanks.
That's the SNL gang over the weekend with their take on NFTs, Jim, which is sort of a generally accepted sign of cultural acceptance.
You know, Brian Sullivan was interviewing the unbelievable CEO of the Philadelphia Art Museum and asked him about it. And the guy kind of punted and talked about digital need for video. But I know I entered this Time magazine thing to try to buy the token NFT for the Is God Dead cover, and I thought I was going to get it for 12 Ethereum, which was equal to, I don't know, at the time, like 20,000. And then someone comes in at the last minute and buys it for 100,000. I mean, obviously, there are people. Beauty's in the eye of the NFT beholder here, Carl. And I think that there's a little too much excitement, but then people who pay up, and the guy who flips the Time magazine cover for 200,000 will tell me, Jim, you're an idiot. Should have bought it for 20.
Well, speaking of all things crypto-related, Jim, I saw the governor of Texas, Governor Abbott, today say, count me in as a crypto law proposal supporter. Texas should take the lead on this like we did with the gold depository. I also saw that about 13% of Americans now have at least some form of ownership of crypto-related currency.
Well, that's interesting, because that does get to the point where it really is an asset class like gold. I don't even know if gold, people have that much gold. I totally get it. I know that it's very easy. The ease with which you can get a digital wallet is pretty amazing. I have PaySafe on tonight, digital wallet company affiliated with Coinbase. The easier it gets, the more people will have, and the more people will feel like, you know what, this is not only legitimate, but companies should be buying it. I find that the place that has done the most is Square. With their Cash App, they've been terrific because they let you buy slivers of Bitcoin, because obviously buying a Bitcoin is pretty expensive. You buy a sliver, put it away. People regard it as a great repository storage of wealth, and that's an astonishing number. Astonishing number, Carl. Wow.
Yeah, 58K, Jim, today for the first time. I think it was B of A the week before last, though, who did argue too volatile to be a mechanism of payments, too volatile to be a store of growth or store of value, that really, if you're buying it on price appreciation, and that's about it.
Well, I mean, sometimes that's enough. I mean, look, if they're saying it's tulips, I planted mine. They're looking good.
They do look good, Jim, and spring is coming. We'll take a break here as we kick off this holiday-shortened week. We're back in a moment.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V, only at the Honda Dream Garage Spring Event.
This is my body of proof.
Proof of less joint pain and clearer skin.
Proof that I can fight psoriatic arthritis.
With Humira.
Humira targets and blocks the specific source of inflammation that contributes to both joint and skin symptoms. It's proven to help relieve pain, stop further irreversible joint damage, and clear skin in many adults.
Humira can lower your ability to fight infections. Serious and sometimes fatal infections, including tuberculosis and cancers, including lymphoma, have happened, as have blood, liver, and nervous system problems, serious allergic reactions, and new or worsening heart failure. Tell your doctor if you've been to areas where certain fungal infections are common, and if you've had TB, hepatitis B, are prone to infections, or have flu-like symptoms or sores. Don't start Humira if you have an infection.
Ask your rheumatologist about Humira.
Go to Humira.com to see proof in action.
If you can't afford your medicine, AbbVie may be able to help.
The
UK has applied to join a trade alliance with Asia-Pacific countries.
It's a really exciting opportunity for UK companies to enter Asia-Pacific. There's huge opportunities for investors to find investment opportunities.
Now let's look at the ever-growing UK tech sector.
It's been growing quite.
Imagine yourself in a new Toyota. With great deals, get ready to turn your dreams into reality.
Right now, save big with a complimentary first month's lease payment on a new 2021 Highlander or Highlander Hybrid. Plus, every new Toyota comes with Toyota Care, our no-cost maintenance plan.
Ready, set, go get your Toyota today.
Toyota, let's go places.
Think you're managing your moderate to severe ulcerative colitis or Crohn's disease?
Are you okay?
I did. But even when I was there, I never knew when my symptoms would keep us apart. So I talked to my doctor and learned Humira is for people who still have UC or Crohn's symptoms after trying other medications. And Humira helps people achieve remission that can last, so you can experience few or no symptoms.
Humira can lower your ability to fight infections. Serious and sometimes fatal infections, including tuberculosis and cancers, including lymphoma, have happened, as have blood, liver, and nervous system problems, serious allergic reactions, and new or worsening heart failure. Tell your doctor if you've been to areas where certain fungal infections are common, and if you've had TB, hepatitis B, are prone to infections, or have flu-like symptoms or sores. Don't start Humira if you have an infection.
Be there for you and them. Ask your gastroenterologist about Humira. With Humira, remission is possible.
Go at no cost to you. Act now.
Take a look at some of the biggest laggards on the NDX this morning. Baidu's gotten wrapped up in some of those block trades, obviously, and these margin events. The number one loser down 4%, although Moderna not far behind. The biggest gainer, by the way, this morning on the NASDAQ 100 is Facebook. We're back in just a couple of minutes. Don't go away.
Some trends are so influential they can move entire sectors of the market. Take demographics. Our aging population could impact the performance of all healthcare companies. But selecting precisely which companies will benefit can be challenging. The Healthcare Sector Spider ETF offers the diversification of the entire healthcare sector while reducing single stock risk. The Healthcare Sector Spider, the next chapter in investing. Before investing, consider the fund's investment objectives, risk, charges, and expenses. Go to sectorspiders.com for prospectus containing this information. Read it carefully.
It's hard to hope, hard to cope with crisis, so we get to work. We mend, fighting for every person in every neighborhood. We, the coming of the common good. So dare to care, to be hope-sighted. We're never divided. When we live to give, we always live united.
Out here, we know you're ready for a fresh start in a new season. When gardeners dig into fresh ground. When landowners need a little horsepower to get property looking its best. And when taking care of pets and animals gives us new purpose. Out here, 42,000 of us in over 1,900 Tractor Supply stores are here to help with homegrown know-how and everything you need for spring. And with the services that make shopping easier than ever. Tractor Supply, everything for your life out here.
So, what's your plan for retirement? See the world? See the grandkids? Keep doing what you love? However you plan to retire, you need to be prepared. Do you have a financial plan? Do you have a tax strategy? How much of your portfolio can you afford to withdraw? Learn more about these and 96 other retirement topics coming your way in this free guide from Fisher Investments.
If your portfolio is over $500,000, call for Fisher's 99 retirement tips. Our free guide shows you how to make your retirement more secure, even in volatile times like these. Call 1-800-940-1144. We'll also send you a timely bonus for a world upended by uncertainty. Fisher's Stock Market Outlook shows you where we believe this market is going and why. Get the insight you need right now. Call for your 2 free guides. 1-800-940-1144.
Don't just retire. Retire well.
Get an edge. Invest like a pro. Access CNBC's live streams around the globe. Unparalleled access to CNBC experts. Actionable investor insight and ideas. Start your free trial today at cnbc.com/pro.
Let's get to Jim and stop trading.
You know, all these brokers trade together, and it's somewhat quizzical, Carl, because Goldman Sachs has told people, and they're out, saying, look, it was nothing major to Goldman. They got out of positions with minimal losses. So if you're looking, as I was at the top of the show, of a way to be able to play the rebound, Goldman has been very articulate about what happened to them. Credit Suisse, obviously, you don't necessarily want to go there, given the fact they say highly significant losses. Nomura, we obviously don't know the extent of, may not be able to cover some of their claims. But Goldman's back. They did what they did. They got out very quickly. And so if you're really a believer that this is an opportunity, you go with Goldman, because that's the one that's already quantified things, said not to worry about it.
Right. Jim, you said it a few minutes ago, but Bloomberg's now citing an email saying that the SEC says it's monitoring the Archegos capital situation.
There we go. Monitoring. That's what we need. I mean, I think that they ought to call, well, I don't know if this fellow will come in, but they should ask all the firms to quantify the losses and then move on, so that people are not trading on lack of information, and that would be that'd be terrible. So they ought to get their stuff out, and let's see what happens.
All right. How about tonight, Jim?
Okay, I have Bill Foley, who is doing a couple of successful SPACs, including PaySafe. And then Dan Mondor, Inseego really missed the quarter badly. A lot of people were not that happy about it. It would be the only semiconductor company that's not doing that well. We got to find out if they're coming back. The breakout trade is still happening. I watched Nucor up 3. People believe in infrastructure now, Carl. They're playing infrastructure. Moving right on.
Yeah, and we might get some more details later in the week.
It's big.
At least that's the scuttlebutt this morning.
It's big.
Jim, we'll see you tonight.
Thank you.
Jim Cramer, Mad Money, of course, with Jim Cramer, 6 p.m. Eastern Time. Good Monday morning, everybody. Welcome to Squawk on the Street. I'm Carl Quintanilla with Morgan Brennan. David Faber has the morning off. Getting a check on the markets. Some limited fallout here as we watch the margin event reported over at Credit Suisse and Nomura, and maybe to a lesser extent Goldman. The cargo ship in the Suez has been refloated, and a big week as we get a jobs number on Friday. Our roadmap begins with that once-in-a-decade margin call. Shares of Credit Suisse and Nomura are tumbling after warning of significant losses.
And moving again, we're live on the ground at the Suez Canal as that massive container ship, the Ever Given, is freed. Plus, the path forward for live music after lockdowns caused a screeching halt for the industry. We're going to speak with the founding members of the band, can you guess? Guster, as they look to get back on the road.
We cannot wait for that, Morgan. In the meantime, though, we'll keep our eye on Credit Suisse and Nomura and the fallout regarding some individual stock tickers like Viacom, CBS, and Discovery. Our Leslie Picker has all the details. Morning, Leslie.
Hey, good morning, Carl. One source described the size and scale of Friday's forced sales as a once-in-a-decade event. It all started first thing Friday morning when Goldman Sachs sent a note out to clients offering block trades in several Chinese internet names at steep discounts. These included Baidu, Tencent, Music, and VIP Shop. But throughout the day, the stock sales kept coming. Discovery, Farfetch, GSX, Viacom, all offered into the markets. Now, quickly, traders, they scrambled to try and figure out what was going on here, what was driving this, and ultimately signs pointed to a little-known firm called Archegos Capital Management. It's a family office managed by Bill Huang. CNBC reported over the weekend that the firm faced a forced liquidation on several over-levered positions. Archegos did not respond to our request seeking comment about that event. Now, the Wall Street Journal reported that Archegos runs a concentrated, highly levered book and holds some positions through swaps. These derivatives aren't disclosed, so traders are now trying to figure out where else Huang was exposed. Many are bracing for potential volatility as a result today. Now, the situation is also raising broader questions about risk in the system. We've been talking about it all morning here on CNBC. As you mentioned, Nomura, Credit Suisse both warned that they could face material losses, in some cases billions of dollars in losses, due to transactions with that firm. Now, Goldman and Morgan Stanley trading lower as well today, although it appears they may be less affected by what happened. Another question, though, is what other hedge funds in particular will be impacted by some of these large moves that we've seen. We already know that at least one other firm has been hit, one called Tengyu. That's according to sources close to the firm. Like Archegos, it's managed by a former Tiger management analyst and was exposed to a significant amount of Chinese tech and media names, guys.
exactly where I was going with my question for you, Leslie, was the fact that could we see the ripple effects to other hedge funds, other family offices, et cetera? I mean, if there's one thing we have seen over the past decade plus, and GameStop was just another recent example, is that when you do see these big moves, these big leveraged positions in names, they tend to be crowded positions with other funds also doing similar things.
They do tend to be crowded names, and it's been kind of a curious rise for names like Viacom, CBS, and Discovery over the past few weeks. People were wondering who exactly was pushing those shares higher. I know it's been talked about a lot on Squawk on the Street in particular. Now it appears that we know, who had been behind, at least a key driver behind that specific move higher. But the question now is going to be the contagion, because these are not small names that suffered significant declines on Friday. And therefore, it could be that we see some other investors that have been highly levered to these names as well that start to get hit. And that's something that we're going to keep a close eye on today as more of the fallout starts to work its way through the markets.
All right. That is exactly where we're going to start with our next guest, Leslie. Thank you, our Leslie Picker. Bill Cohen is a Vanity Fair special correspondent and CNBC contributor. He joins us this morning. Bill, it's always good to see you. Thanks for the time this morning.
Hey, Carl. Sure.
So I wonder if your focus right now is on sort of episodic risk regarding these particular names, or the long-term fallout from either other names or general hedge fund deleveraging.
Well, it's probably a little early, Carl, to try to figure out how contagious this is going to be. Obviously, this one hedge fund is wiped out pretty much. You're seeing the fallout at Credit Suisse and Nomura. In some ways, to me, Carl, this is life-affirming because, for the last year I've been wondering what the heck has been going on at Viacom CBS. I mean, the stock has gone from 14 to 100 in the last year without any noticeable reason why. Last week I was talking to Rich Greenfield, who I know was on your show on CNBC this morning, talking about this, and we were just scratching our heads. How could this be happening? What is the reason for the rise in CBS Viacom? Could it be this Paramount Plus streaming? And it turns out it was just this crazy buying by this hedge fund without any disclosure. And I think, one thing Jim Cramer was making, a point he was making at the top of the hour, was there should be more disclosure. And it's a good thing that the SEC is monitoring this. But the fact of the matter is that this hedge fund did not disclose its positions that were very large. And this fallout is huge and is affecting all the shareholders who bought Viacom CBS at $100 a share. And now it's, 45. Yeah. That's huge losses.
So do you think we're going to be talking about a bedrock of hidden risk in family offices across the country or across the world?
Well, obviously there needs to be more disclosure by these family offices. There's no reason at all that they should be able to use swaps or derivatives to hide their positions. Other hedge funds have to disclose their positions once they get over a certain ownership threshold. And if this family office was able to hide those positions, that's not information that's getting to shareholders in the market. And so people see this sort of momentum rise in Viacom CBS, and they think, well, what's going on here? Is it a takeover stock? Sherry Redstone finally selling this company, as people have thought for a long time. And it turns out it's just this over-levered play without proper disclosure. And, and interestingly, it was all started because one of the reasons it was started is because Viacom was taking advantage of the rise in its stock by doing this secondary, announcing that it was doing this secondary, and that caused the stock to move down and cause margin calls to kick in, which had this huge cascading effect, and now we see the fallout. But I don't see this in the same way as the Bear Stearns hedge funds collapsing in 2007, which was a debt-related investment issue. This is equity-related. Investors in equities often realize that their stocks can go down and that they're not guaranteed any kind of return. And so at the moment, it feels isolated, but there could be some contagion with other hedge funds, as Leslie was saying, that have big positions in these names that have now collapsed.
Yeah, and I think to your point, Bill, the fact that we did see the major averages close higher despite all of this shakeout starting to really materialize on Friday afternoon kind of speaks to that. But I want to go back to the disclosure piece of this, like the opacity of the OTC derivatives markets overall, what gets disclosed, what doesn't, by who. After everything we saw with the GameStop, Reddit, run-up frenzy, targeting hedge funds that were short, et cetera, earlier in the year, could there be other instances of this that maybe have been incentivized? And what I mean by is, when you saw what happened with GameStop, that happened on the heels of disclosures by a hedge fund. Has that incentivized more family offices, more funds to potentially take on this type of investing tact that maybe is sitting in the market right now?
Morgan, after the 2008 financial crisis, there was a huge effort put into place to have more transparency in the OTC derivatives markets and more disclosure about who was on both sides of trades. It's not clear to me that really had the progress that many people hoped. And this is another example where you just don't know what is going on. Investors see momentum in stocks like Viacom, CBS. They want to get in on it. Is it another Reddit, GameStop, fear of missing out moment, you only live once moment, or is there something more to it? I mean, these family offices must be required to disclose their trading positions if they're not. And this is information that investors need so they can understand when a big investor is moving into a stock and not be surprised by these huge margin calls that have taken everybody by surprise, this morning. So more disclosure is needed.
You clearly were not the only one looking for reasons for the price appreciation. Prior to this episode, people thought, well, is it the fundamentals? Is it strictly a Reddit leveraging scenario? I wonder if you think we're going to be talking about Bill Wong, who was a bigger influence than perhaps the Reddit trade in general. Does it make the Reddit trade dispositive?
Well, I mean, there's been talk, Carl, that hedge funds were behind some of the Reddit trades, some of the GameStop trading. Don't forget, last year there was the Hertz trading where the stock ran up even though the Hertz was in bankruptcy. And the SEC essentially put a stop to that when Hertz decided it was going to try to sell some stock out of bankruptcy. Basically, Carl, my feeling is that for the last 4 years that the SEC has been non-existent in its oversight and regulatory responsibilities. And I think with Gary Gensler, we're going to see a change in that now. This is, Exhibit 1 or Exhibit 2, along with GameStop, that Gary is going to have to focus on. And frankly, I take a lot of comfort from him being there and being the guy who's now going to get to the bottom of why these things happen. There needs to be more disclosure about these kinds of this trading activity, as well as strange trading that happened at the Chicago Board of Options. I mean, another a series of trades that occurred all through the Trump administration that have people scratching their heads that were never really properly investigated. There's a lot to do.
Yeah, no, it's going to be fascinating to watch Gensler put his mark on the commission, and maybe this is the first chapter here. Bill, always good to get your take. We truly appreciate it. See you later.
Thank you.
Sounds like another book in the making, too, we'll say. Playing into the volatility, we're seeing a rule which exempts family offices from disclosing many trades to the SEC. We just touched on that. Robert Frank has more on how the market is being impacted, though. Robert.
Yeah, Morgan, you guys just hit on the key question was, why didn't we know more about what this family office was doing? And there are now more than 5,000 to 10,000 family offices around the world. They manage more than $6 trillion in assets. So they're just huge. Those numbers expected to increase even more in the coming years. But despite their growing size and their impact on the market, they're actually exempt from SEC disclosure requirements, those requirements that are usually imposed on other hedge funds and private funds. Now, why is that? Well, back in 2010, as part of the Dodd-Frank legislation, family offices fought hard and won a special carve-out from Congress that allowed them to avoid registration with the SEC as long as they serve a single family and they don't give investment advice. Family offices at the time made the case that they only make, quote, conservative investments to preserve family wealth, and they don't try to leverage or beat the markets. We saw in this case, of course, that was wrong. Now, Archegos did not make a single filing with the SEC in its entire history, despite placing those $1 billion in bets. Now, technically, some big family offices do have to file occasional 13Fs with their stock holdings, but those are rarely filed. And by the way, when they do file them, they're only visible to the SEC, not public investors. So you can guarantee there will be calls today for more disclosures around these family offices, given their numbers and their size and, of course, their impact on the market, Carl.
Wow, remarkable, Robert. What a story, right at the heart of your beat. That's our Robert Frank. We'll take a break here. We're going to go live after the break to the Suez Canal as the Evergreen Line does confirm that the Ever Given has successfully been refloated in the Suez. We're back in a couple of minutes.
This CNBC program is sponsored by Baird. Visit BairdDifference.com.
We see smarter software delivering cleaner power. Emerson's breakthrough technology enables the power industry to integrate renewable energy sources to modernize and improve the electric grid. Emerson, consider it solved.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech from Fidelity. You'll get proactive alerts for market events before they happen, and insights on every buy and sell decision. With zero commission online U.S. stock and ETF trades. For smarter trading decisions, get Decision Tech from Fidelity.
10 years ago, we founded Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation. At Loan Depot, we know home means everything.
Our government has forgotten how to build things, so it takes forever to get these projects off the ground. That's why you want infrastructure stocks like Martin Marietta and Nucor that work regardless of what happens in Washington, can never be counted on. Watch or listen live on the CNBC app.
Even from a small age, I've always watched Shark Tank, and as soon as I actually had a business, one of the first things, probably even the first thing I asked my dad was, we have to go on Shark Tank. So now
everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V, only at the Honda Dream Garage Spring Event.
No cost to you. Act now.
Welcome back to Squawk on the Street. Generac Holdings shares are on a tear, up more than 250% over the past year and continuing higher after the addition to the S&P 500 just last week. But can the growth continue? CEO Aaron Jagdfeld joins us now to discuss. Aaron, great to see you.
Great to be on, Morgan.
So the last time you and I spoke, which was on Power Lunch not that long ago, one of the conversations we had is that you basically can't make generators for residential use fast enough, given how strong the demand has been, especially since we've seen so many bad weather events in recent months and recent years. But there's a bigger, broader strategy afoot for your company as well, the shift to more clean energy, whether it's the solar energy battery storage systems or through the Enbala acquisition, this idea of virtual power plants, distributed energy networks that could actually help plug the gap, given what we've seen in places like California and Texas with utilities in recent months. In a week where we're talking about infrastructure, how should we think about changes or updates to the power grid?
Well, the grid is certainly changing, and that's really where we've been leaning into that with the decarbonization of the grid. So you think of the grid as, it's an integrated network. You've got supply, which has been the traditional power plant format, big centralized power plants distributing power to homes and businesses. That's changing. On the supply side, you're seeing more decentralized power. You're seeing more renewables, so solar, wind. We're decarbonizing our energy usage, which is great, but that creates volatility on the supply side. And then on the demand side, there's also big changes going on. We're electrifying everything, right? So as we bring EVs, as EV adoption increases, that's going to put tremendous stress on the grid. The grid's not built for those types of loads, and so you're going to have a lot more volatility on the demand side as well. So, it's a formula, right? So if you put more beta on both sides of that formula, what's happening is utility companies and grid operators are really having a tough time keeping that balance.
So in light of that, when President Biden unveils his infrastructure plans in the middle of this week, is your expectation that we're going to see more focus on power infrastructure? And if so, just how likely is it that we actually get something passed by lawmakers?
Well, the likelihood of that, I'll leave to those who follow the political arena probably a little bit closer than me. But as far as the what the bill, at least at this point, contains, there's a tremendous amount of spending around the grid, and in fact around renewables, and the federal tax credit that is available to homeowners today and to businesses. That's been curtailing, and I think the bill would basically renew that and hopefully restore it for a longer period of time, because it's going to take a long time to shift the grid from its current format to the next format, the next grid 2.0 or whatever you want to call it, the grid of the future. But we're going to need incentives. We're going to need a lot of incentives to continue that journey.
Aaron, I wonder on the demand side, at least within residential, is the growth really coming from new construction, or is this about the aftermarket, people trying to upgrade the homes they already have?
It's both, Carl. What we're seeing is, look, the last 12 months has been, a game changer, I guess, if you will, in terms of the focus on the way we work and the way we learn, right? And so what it's done is it's put this tremendous, focus on the home. We refer to it as home as a sanctuary, but whether you're in an existing home or whether you're thinking about building a new home, one thing is true, is that you're thinking about the continuity of your power, the importance of power in your home. We've all become hypersensitive to it. And we've seen that hypersensitivity and what that's done, at least in our demand for our products, but also, you've seen it in demand for other products in the home. People are investing in their homes. They're thinking about what they're going to do as they, continue to work from home and as they continue to learn from home. They're entertaining from home, shopping from home. Really, home has become the focal point, and having power makes all of that possible.
You're standing up more manufacturing on the East Coast as well. How quickly can you do that? And I realize that assembly would be taking place stateside, but have you been impacted by what we're seeing in the Suez Canal?
Not so much in the Suez Canal, thankfully. I think, that's seems to be more of a European, Asia impact. I'm sure there may be some impact here eventually. But we've got our own supply chain challenges with, just the snapback in demand that a lot of manufacturers here in the U.S. have seen. You go out and you shop for anything today, again, anything in your home, particularly appliances. You've got obviously the microprocessor shortages for automotive. We're standing up our own demand here in terms of new capacity that we're bringing online. We have a factory coming online in South Carolina around mid-year this year, and that's going to dramatically improve our own ability to ramp capacity. But as we said before, Morgan, when we talked last time, we just can't make enough of them. And with the Texas event that, is only a month old here,
Quickly, higher prices? Is that what consumers should expect?
Well, I think inflation has been creeping into everything. I think irrespective of what the Fed may be saying to us, I think we're seeing it certainly in our business. Materials, inputs, labor, logistics, all of those costs have been going higher. And at some point, that's got to get passed along to the consumer. We're trying to do as much as we can to offset that, but it's going to be very difficult. I think you're going to definitely see, consumers are going to definitely be seeing higher prices going forward.
Aaron Jagfeld, thanks for joining us.
Thanks for having me.
Virtual power plants. Something to dig into. Well, it's now time for our ETF Spotlight, taking a look at the S&P Aerospace and Defense ETF, ticker XAR, up more than 8% on the year. It's up fractionally right now, about 0.5%. A few names in the sector getting a boost this morning, though, ahead of ARK Invest's debut, expected tomorrow, of a space exploration ETF, ARKX, that will begin trading. Of course, there are moves from Cathie Wood and the ARK Fund that are so closely followed. So perhaps not surprising to see the upside moves in some of the space names. Boeing, Maxar, Lockheed Martin, Virgin Galactic, for example, all trading higher. Boeing and Lockheed are in the top 10 holdings of that new ETF. We're going to speak with the CEO of Virgin Galactic, meantime, tomorrow in the 10 a.m. hour, as that company unveils its new spaceship. Squawk on the Street will be right back.
ETF Spotlight is sponsored by Invesco QQQ, Invesco Distributors, Inc.
It's game time. Let's meet the defending champs.
G. Hargrave Thomas, point guard. Bryce Mathias, forward.
Kim Keats, investor. Oh, I invested in Invesco QQQ, a fund that invests in the innovations of the NASDAQ 100, like next-gen 3D rendering software.
You don't have to be an advanced graphics architect to help realize a more vibrant future. Become an agent of innovation with Invesco QQQ.
Millions of people are saying yes to Allegra, including the experts. It's the #1 allergist-recommended brand for non-drowsy relief. Allegra works 2 times faster than Claritin, so you can get going first thing. It lasts up to 6 times longer than Benadryl, giving you relief through the late shift. And unlike Zyrtec, Allegra is non-drowsy for all your non-stop adventures. Join the millions saying yes to Allegra. And for kids, try Children's Allegra, the #1 allergist-recommended non-drowsy brand.
Labradoodles, cronuts, squirts.
It's a skirt and shorts.
The world loves a hybrid. So do businesses. So today, they're going hybrid with IBM. A hybrid cloud approach lets them use Watson AI to modernize without rebuilding and bring all their partners and customers together in one place. That's why businesses from retail to banking are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
All the things, all around you, where you learn, work, and fly. We help make them healthier. We are the people of ABM. For more than 100 years, we've been a leader in making spaces cleaner, from the things you touch to the air you breathe. Today, more than 100,000 of us are innovating to ensure spaces are more efficient, healthier, and safer. ABM, making spaces healthier for you.
New projects means new project managers. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from a resume database. Claim your $75 credit when you post your first job at Indeed.com/home.
Our Confident Forever plan is possible with a CFP professional.
A CFP professional can help you build a complete financial plan. Visit letsmakeaplan.org to find your CFP professional.
Bravo's Top Chef is back.
Are you ready?
Woo! And the judges are tougher than ever.
This is going to challenge you in ways you've never been challenged before.
Uh-oh. Set your DVR for the new season of Bravo's Top Chef Portland, Thursday, only on Bravo.
Welcome back. Turning to the situation in the Suez Canal, where cargo traffic is resuming after that massive ship blocked the channel for nearly a week. It's finally free. Our next guest has been diverting some ships. Rolf Haben-Jansen is the CEO of Hapag-Lloyd and joins us now. Rolf, thanks for being with us.
Thank you. You're welcome.
All right, so we hear the Ever Given is finally on the move in the Suez Canal, but hundreds of ships have been waiting and stuck given this situation over the past almost week. How has this impacted your company?
Well, of course, it's impacting us because we have also up to 10 ships waiting, and then we have a couple also sent around Cape of Good Hope. And that's, of course, only the short-term impact, because now we need to make sure that we get things going as quickly as possible again, and then hopefully not face too much congestion as we start to unload the ships in Europe and Asia.
How long do you think it's going to take to move past this bottleneck?
Difficult to estimate. I think the canal is very optimistic right now. I think they are estimating that they can resolve this traffic jam within 4 to 6 days. If they would be able to do that, that I think would be a fantastic achievement. I think we're counting on the fact that it may take a couple days more.
Rolf, I guess, the question we've been asking for days now is, does there need to be a rethink of logistics through the canal? Can this happen again? Or was this just a particular set of circumstances that led to a very rough outcome?
I think that remains to be seen. I mean, people will need to investigate what really happened. I mean, in fairness, we have 19,000 ships, I think, going through the canal every year. That's gone without any major incident for a very long time, so I don't think we should jump to conclusions there. But, of course, a thorough investigation is definitely needed to understand what possibly needs to be done to ensure that this can't happen again.
All right. I assume you do not think this has any long-term implications for the percentage or share of freight that is seaborne?
No, I don't expect that. I mean, one would expect that over the upcoming couple of weeks the situation will normalize, and yes, it will take some time before all the ships are back into their original positions and before all the boxes get back to Asia, but that's Unfortunately, that's what these things take some time to get resolved, because it is, after all, a disruption of anywhere between 7 and 14 days.
I realize, Rolf, that this is a finite situation, and now, hopefully, perhaps we're through the worst of it. But then you take this and you couple it with what we've already seen globally in terms of supply chain issues, container shortages, ports that are overrun with gridlock. Certainly here in the U.S., the West Coast has been in focus, for example. How would you assess, I guess, the global shipping landscape in general right now, and how easy or difficult it is to move goods around?
Well, the situation is definitely difficult. I mean, in the second half of last year, we saw a totally unexpected surge in demand, and then combine that with quite a lot of COVID-related restrictions in many countries. And then, of course, you have a recipe for quite some congestion in the supply chain. On the other hand, if you take a step back, the global shipping industry last year has still managed to ship almost as many containers as they did the year before, despite the world facing a pandemic. So it's certainly not all bad. And when you look especially at the fourth quarter, we moved actually more than we did in 2019, and pretty much every available ship was sailing.
That puts it in context. What's the outlook for rates, for shipping rates, whether it's because of this situation in the canal or because of the fact that the global economy is coming back to life, especially when you start to factor something like insurance into it?
I don't know. It's always very difficult to predict. I would always hope that we could get back to a somewhat more normal situation than we have seen over the past couple of quarters. We are working very hard to make sure we come back to some kind of normalcy, hopefully towards the end of the second quarter, beginning of the third quarter, and then one would also hope that the market also normalizes.
All right. Rolf Haben-Jansen, thank you for joining us today.
You're welcome.
It is time now for a COVID update. Rahel Solomon has that for us. Hi, Rahel.
Hi, Morgan. Good morning, everyone. The national ban on housing evictions has been extended through the end of June. It was due to expire this week. The CDC says that keeping people in their homes and out of homeless shelters is a key step to help stop the spread of COVID. A joint report by the World Health Organization and China's government will say that the COVID pandemic probably started with the transmission of the novel coronavirus from bats to another animal and then to humans in Wuhan. That's according to the Associated Press, which has seen a draft of that report that's going to be released tomorrow. The report also says that it's extremely unlikely that the virus escaped from a laboratory in Wuhan. The TSA reminding everyone to mask up as it reports that almost 1.6 million people went through airport checkpoints yesterday. Its busiest day in a little more than a year. And a small batch of 24,000 AstraZeneca COVID vaccines has arrived in Kosovo. It's the only country in Europe that has not yet started inoculations. United Nations-backed COVAX Cooperative provided the vaccine. It'll then be used for healthcare workers, the elderly, and some people with underlying conditions. You're now up to date. Carl, I'll send it back to you.
All right, Rahel, thank you very much. When we come back, a lot more on Credit Suisse and Nomura as those shares move lower. We'll talk to a former SEC regulator as we're seeing a little bit of selling creep in now. NASDAQ's down almost 1%. We're back in a moment.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V, only at the Honda Dream Garage Spring Event.
So, you're my fairy god, Mayo?
Yes. I wield the power of Hellman's to magically transform any food into creamy, dreamy works of art.
With a butter knife.
This is a mayo knife.
These are the people who work on the front lines. They need a network that's built right. That's why we created Verizon Frontline.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V, only at the Honda Dream Garage Spring Event.
I don't like veggies.
What? Whatever you have at home, Knorr sides can turn nutritious veggies into mouth-watering meals. Veggies taste amazing with Knorr.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim.
An incomplete dose could increase infection risk.
Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Go at no cost to you. Act now.
We continue to monitor Credit Suisse and Nomura, warning of significant losses in the wake of those positions with a large U.S. hedge fund that defaulted on margin calls last week. It's widely reported that Archegos Capital is the firm connected to that fire sale. Amy Lynch joins us this morning, former SEC compliance official and founder and president of Frontline Compliance. Amy, welcome back. It's great to see you again.
Thank you, Carl. It's good to be on the show again.
So obviously early days, obviously we'll warn our viewers there's a lot we still do not know. We hope to learn in the coming weeks. But can we talk about to what degree compliance failed here?
Well, compliance definitely had a part in this. And I think it's too soon to say whether or not compliance failed. As a matter of fact, there are some reports that the compliance department at Goldman Sachs actually got in touch with management and said, hey, you should not open this account due to the previous fraudulent activity that was discovered with the associated individual. So they could have made their case and got overridden by the business line managers. And unfortunately, that does happen all too often in our industry. But let's say, for example, they didn't do what they were supposed to do, and that is conduct the initial due diligence on the account during the account opening process, find out who the beneficial owners of the account are, and conduct their KYC, know your customer, and anti-money laundering reviews to determine if there was any previous nefarious activity by those individuals associated with the account. And if they had done that, they would have found that Mr. Huang had previous SEC sanctions against him. And that should have been a huge red flag for the firm.
Right. So how should we be thinking about, or what do you say to those who are worried about the notion that that lure of revenue stream for the equities business at multiple banks was too seductive, and that in fact there is ongoing exposure to losses that we may not know about yet?
Right. So the business managers could have said, okay, we're willing to take this risk. We understand the risk, and we're going to take the account. And then in that case, what compliance could have done would be to put the account on a heightened surveillance program, which means that they are taking a look at the account and monitoring it frequently, more frequently than other accounts, and specifically looking for unusual trading activity, looking for high amounts of leverage or changes in types of securities being traded. So anything that could flag out as being unusual to that account, or particularly high margin, high volume of transaction activity would flag out and then be looked at by the trade compliance staff.
Amy, I'm curious if you think regulators are going to take a much closer look now at Credit Suisse specifically. I mean, obviously, there's the news of the day that we're talking about, but that's, of course, on top of everything we've seen with the Greensill fallout, the fact that the company is now, looking at options for its asset management division in general. There seem to be some fault lines appearing, at least within certain parts of that bank specifically.
Yes, it is possible. I know Credit Suisse has been in the news a lot lately for its asset management division and some of the missteps that have been taken there. And the SEC will look into all of these firms for this activity. And when they do an investigation, they're looking at the firm in general. So it would be their opportunity to take a look at those other instances as well while they're looking at this one.
We are getting some reports that the SEC put out an email saying they're monitoring the situation. I guess my question to you would be, what should we be looking for in the days or weeks to come that can maybe give us more granular detail on what that means? What that means when they say we are monitoring anything?
Right. So that right now they have jurisdiction over the prime brokers that are trading in this account. So this firm, Archegos, is actually not registered with the SEC. It is a family office, which is exempt from registration. So it's hard to get into that firm through the front door. They're going to go in through the back door, which means going into those prime brokers and taking a look at the trading activity in the account. And they will certainly be doing that. And now if they see that there is a potential fraud activity or anything nefarious going on, that will give them the in around to the front door to get into Archegos and look at what they're actually doing there at the firm, because they do have the anti-fraud statutes to rely upon for any firm, whether they are registered or not.
Amy, this is probably a pretty general question, and it probably relates more to the banks than anything else. But what will the Fed's role be in all of this in terms of review and assessing the possibilities of more risk, hidden risk within the market?
Well, the Fed is looking at the banking side. Frontline Compliance specializes in securities regulation, so I'll leave that to the Federal Reserve.
Okay.
Finally, Amy, you know, we've had... Oh, sorry, Morgan. I was going to ask you, Amy, we've had a couple of guests now who suggest that the Gensler era is going to be a lot more progressive and aggressive in terms of regulation. Do you think that's overstating it, or do you think he can actually, as commissioner, change the color and nature of the commission?
Most certainly. I fully expect that incoming Chairman Gensler is going to make for a tougher SEC, and he will put the industry on notice that that's exactly what he intends to do. So I would suspect there'd be an increase in enforcement actions against firms, and hopefully the examination program gets some focus and they can step up the number of examinations they're able to conduct, because they're only looking at about 10 to 15% of the registered investment advisors every year, and that's simply not enough.
Remarkable and eye-opening situation, Amy, that obviously we're just getting our sea legs on right now. We'll be talking about it for a while. With your help, we love turning to you. Thanks so much, Amy Lynch.
Thanks for having me, Carl. Thank you.
Wow, 10 to 15%. We're keeping our eye on energy today, meantime, as the blockage in the Suez Canal begins to clear up. The slow return to normal traffic there, plus coronavirus lockdowns in Europe, have oil and gas producers under pressure today. You can see right there some of those different names and different asset classes. WTI crude, for example, down about 0.4%. There's more Squawk on the Street after this break, though. Stay with us.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
Our retirement plan? Well, our advisor chooses mutual funds he likes and invests in them. Simple as that.
Yeah, he knows about this stuff.
Yeah.
That's nonsense. A bunch of mutual funds is not a retirement plan. Mutual funds often have layered fees, cost more in taxes, can leave you over or under diversified, and aren't tailored to your specific goals. You may retire, but you can do better. Do you know the downsides of mutual funds or what other options are available? Call Fisher Investments for your free copy of 6 Pitfalls of Funds. We'll also send you a bonus, the definitive guide to retirement income. Call 1-800-611-8899. You're unique. Why have cookie-cutter investments? If your portfolio is $500,000 or more, call us at Fisher Investments. It's your retirement. You can't afford to listen to nonsense. Call 1-800-611-8899.
March is Women's History Month, the time for our stories. We are reporters, producers, anchors. We are creators. We are hard workers. And we are unstoppable.
CNBC celebrates Women's History Month. a hearing on Capitol Hill looking at whether Washington, D.C. should become the 51st state.
This debate has become front and center for Democrats as a voting rights issue.
The facts, the truth. The News with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Why market bull Ed Yardeni lists inflation as his top market risk, despite encouraging new economic data. Find that story and more on tradingnation.cnbc.com. More Squawk on the Street ahead.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
At Kansas City Steak Company, we hold our steaks to a higher standard. These days, you can't get out as much as you'd like. That's why it's time to make your house the steakhouse. Now you can have the world-famous Kansas City steaks delivered right to your front door. Head to kansascitysteaks.com now and use promo code SIZZLE to get a full 15% off everything you order. Order right now, and we'll even give you free shipping. Visit kansascitysteaks.com/sizzle or call 800-987-8325.
Welcome back to Squawk on the Street. I'm Dominic Chu. Stocks are mostly lower to start out the week with just a few sectors in positive territory. As you can see here, consumer staples, one of them, utilities, one of them as well. Now, among the worst performing sectors are financials, energy, and real estate, as you can see, leading the way to the downside over here. Within the real estate sector, in particular, it's largely the office and shopping center REITs that are leading us to the downside. That includes names like Kimco, also Regency Centers and Cymer Property as well, which have all been relative outperformers on a year-to-date basis, up double-digit percentages. But with COVID cases on the rise in certain parts of the country, there's a renewed focus on just how much of that pandemic recovery optimism is being factored into those parts of the sector. So keep an eye on those. Now, Carl, I'll send it back over to you guys at Squawk on the Street.
All right, Dom, busy morning. Thank you very much, Dominic Chu. When we come back, concerts canceled, tours postponed, COVID's real-life impact for those who made a career playing music on the road. We're going to discuss that with the founding members of Guster in a minute.
Real-time exchange Sector Sort is sponsored by Sector Spider ETFs.
Hi. Have you ever heard of Beachbody On Demand? Hold on a second. Here is your free membership. I'm Carl Deichler, the CEO of Beachbody, and I just sent a free membership to another customer. And I'm giving away 10,000 free memberships a week to anyone who texts me right now to try our new Beachbody On Demand fitness and nutrition app. It gives you instant access to all of our best-selling fitness programs like 21 Day Fix, Insanity, P90X, T25, and PiYo. That's all $8,000 of our fitness content streaming to all your devices for free. I mean, look at these results. These are real people. No Photoshop, no tricks. These programs really work. And this is your one chance to try them for free. To get started, just text the word NEW to 303030. That's NEW to 303030 right now. And I'll send you your own free membership.
Grubhub Perks give you deals on all the food that makes your boogie. Get the food you love with Perks from Grub What You Love.
The At Work Summit is an opportunity to think about the future.
March 30th. Join Matthew McConaughey and Game Changers in Innovation. Register now at cnbcevents.com/work.
Your mission, stand up to moderate to severe rheumatoid arthritis and take it on with Rinvoq. Rinvoq, a once-daily pill, can dramatically improve symptoms. Rinvoq helps tame pain, stiffness, swelling, and for some, Rinvoq can even significantly reduce RA fatigue. That's Rinvoq relief. With RA, your overactive immune system attacks your joints. Rinvoq regulates it to help stop the attack.
Rinvoq can lower your ability to fight infections, including tuberculosis. Serious infections and blood clots, sometimes fatal, have occurred, as have certain cancers, including lymphoma, and tears in the stomach or intestines, and changes in lab results. Your doctor should monitor your blood work. Tell your doctor about any infections, and if you are or may become pregnant while taking Rinvoq.
Take on RA. Talk to your rheumatologist about Rinvoq relief. Rinvoq. Make it your mission.
If you can't afford your medicine, AbbVie may be able to help.
Work your style without overworking your hair. For salon-quality hair at home, Tresemme Keratin Repair with Bondplex technology builds new hair bonds with every wash. Get 20 times stronger hair with new Tresemme Keratin Repair.
The UK has applied to join a trade alliance with Asia-Pacific countries.
It's a really exciting opportunity for UK companies to enter Asia-Pacific. There's huge opportunities for investors to find investment opportunities.
Now let's look at the ever-growing UK tech sector.
It's been growing quite rapidly over the course of the last 5 years. Investment has really increased and is now at record heights. Right now, we're third behind China and the United States.
If you're shopping for a compact SUV, you're probably considering the usual suspects. But now's the time to consider a Volkswagen Tiguan. Because the Tiguan has a lower maintenance cost than Subaru, Honda, and Toyota. Which is surprising if you don't drive one, but not at all if you do. Now's a smart time to get into a Volkswagen SUV at our Sign Then Drive event. Lease a new Tiguan for 0 down, 0 deposit, 0 first month payment, and 0 due at signing, or get 0% APR financing for 72 months.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
We're Carvana, the company who invented car vending machines and buying a car 100% online. Now we've created a brand new way for you to sell your car. Whether it's a year old or a few years old, we want to buy your car. So go to Carvana and enter your license plate, answer a few questions, and our techno wizardry calculates your car's value and gives you a real offer in seconds. When you're ready, we'll come to you, pay you on the spot, and pick up your car. That's it. So ditch the old way of selling your car and say hello to the new way at Carvana.
If you're tired and you know it, skip the gym.
If you're anxious and you know it, take a break.
If your heart rate variability is 50 and your body temperature's normal.
If your breathing rate is optimal and you know it, bring it on.
Aura. Know why you feel how you feel.
I've been in this business for 25 years now. It has literally wreaked havoc on my hair. One day it just started getting thinner and thinner, and then I heard about minoxidil. The hairdresser was like, you need to use this every day. Through hers, I don't even have to go to a pharmacy. I use it twice a day, put it right on my scalp, and my hair has grown back, and it's thicker and fuller and more amazing than even it was 10 years ago.
Start your hair journey at forhers.com.
At Casper, we're delivering better sleep to homes everywhere. With a mattress so supportive and comfortable, it was awarded Best Overall Mattress by U.S. News. So, wherever home is for you, now's your chance to let great sleep be a part of it. Bring home superior Casper comfort and receive a special gift for a limited time, in-store or online at casper.com.
And also, I mean, for our band, we've kind of operated in these 2 or 3 year cycles between writing, recording, and touring. So we had to push up our cycle a little bit. We're going to the studio. We're having these week-long sessions where we all test up and bubble up and record. So we were just in the middle of a touring cycle, but we just have to kind of do a phase shift into writing and recording, and we'll hopefully pick up again. So we're kind of used to the longer term cycle.
Right. No, I think that's a fascinating point, how all of this is going to alter the creative choices, Ryan, that you're going to make probably in at least the next couple of years. I wonder, for example, just logistically, would it alter the bookings that you would accept? Would you ask fans to be vaccinated when they come in? I know Rutgers University, for example, is telling students, look, if you're coming back in the fall, you got to be vaccinated. But I don't know whether or not that's off-putting to a fan base or not.
I mean, it's such a minefield, and there are people that are on the front lines of this, like the promoters who are, I have a lot of friends who are promoters, and they're worried about the legal aspects of this. Like, if people show up and they get COVID, is this going to put a promoter out of business? So, that's why I think we're doing exactly what we're going to be doing, and we're going to take things very slowly this summer. At least personally, there'll be some social distance shows that probably come up, not unlike the one that we filmed in the documentary. And I think anything that's not socially distant will probably be a much smaller thing, or something that's been vetted. Like, we won't be on the bleeding edge of this stuff, mostly for just our own safety. But, I'm really hoping that the vaccine will give me a little bit of superpower. I've remained cautiously optimistic throughout this, so I'm hopeful that once we get the Fauci ouchie, that we'll be able to get back to normal as things progress. So,
Adam, there's a couple other headlines this morning. The Tribeca Film Festival, for example, is going to have live events. It's great for New York City. The mayor of New York, at least here where we are, says Broadway is going to return in September with spacing. But live music, with musicians right in front of you, it's kind of hard to sit 5 rows back, 3 seats away from somebody else. I imagine you agree it's going to be a slightly different calculus.
Yeah, I mean, hopefully it'll be better than the drive-in situation where people are really far apart. But yeah, I mean, the energy of a concert normally is everyone's shoulder to shoulder. They can feel that. It's we're connected, even physically, because you're touching. So yeah, it definitely disperses that excitement and energy. But I think it'll just be on the performances and performers to reach out as much as possible. I think that, combined with the fact that people are dying to see live music, that I think will overcome whatever weird transition back to being shoulder to shoulder whenever that can happen.
Yeah. Finally, Ryan, before we let you guys go, I don't know if, Morgan mentioned catalog sales. We've had other bands on. Airborne Toxic Event has talked about NFTs being the answer to songwriters making money once again off of their work. Are you guys thinking that far ahead, at least from a technology standpoint?
I mean, I've been intrigued with the NFT stuff for the last few months just because I'm a super nerd and I exist in this. I think they're really bad for the earth, so sorry, Adam, we'll have to figure out a way to deal with that. But I don't actually, personally, my interfacing with the NFTs as it relates to Guster is I don't think it will be like, here comes this huge new income stream for us. I just think it's going to be a way to take some of the, take some power back in the
Tire, but you can do better. Do you know the downsides of mutual funds or what other options are available? Call Fisher Investments for your free copy of 6 Pitfalls of Funds. We'll also send you a bonus, the definitive guide to retirement income. Call 1-800-611-8899. You're unique. Why have cookie-cutter investments? If your portfolio is $500,000 or more, call us at Fisher Investments. It's your retirement. You can't afford to listen to nonsense. Call 1-800-611-8899.
On Squawk Box, Morgan Stanley CIO Mike Wilson. A big picture perspective on the recovery, risks, rates, and business cycles. Squawk Box, 6 Eastern on CNBC. Watch Squawk Box anytime on demand.
Good morning. It is 8 a.m. at Amazon headquarters in Seattle, Washington. It's 11 a.m. on Wall Street, and Squawk Alley is live.
Happy Monday. Welcome to Squawk Alley. I'm John Fort with Carl Quintanilla and Deirdre Bosa. Ahead this hour, well, against convention. Margin madness, a closer look at the wild ride for old school media and Chinese internet stocks, plus Boston Dynamics out with its newest uncanny robot. But we're going to start with Amazon's unconventional Twitter beef. A new report over the weekend found that Amazon's confrontational tweets that hit the internet last week came after CEO Jeff Bezos, soon to be just founder and chairman, told execs they weren't pushing back hard enough against critics. This, of course, as Amazon union votes in Alabama are due today. And joining us now to discuss, Recode co-founder, CNBC contributor, Pivot co-host, Kara Swisher. Kara, you know, Dave Clark was very direct, tweeting at Bernie Sanders, Senator Elizabeth Warren. I know that convention or PR wisdom is that this was a bad idea, but what if it works?
What if it works how? And that the union...
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V, only at the Honda Dream Garage Spring Event.
Work your style without overworking your hair. For salon-quality hair at home, Tresemme Keratin Repair with Bondplex technology builds new hair bonds with every wash. Get 20 times stronger hair with new Tresemme Keratin Repair.
We're for those who love to discover, who know an open mind is the only kind, who don't need to travel to find something new, who know where to escape, even just for a moment, who don't need a fortune to find a gem, and who know when you spend less, you can discover even more, and never, ever stop discovering. Spend less, discover more at TJ Maxx and Marshalls.
The UK has applied to join a trade alliance with Asia-Pacific countries.
It's a really exciting opportunity for UK companies to enter Asia-Pacific. There's huge opportunities for investors to find investment opportunities.
Now let's look at the ever-growing UK tech sector.
It's been growing quite rapidly over the course of the last 5 years. Investment has really increased and is now at record heights. Right now, we're third behind China and the United States.
is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
If you're tired and you know it, skip the gym. If you're anxious and you know it, take a break.
If your heart rate variability is 50 and your body temperature's normal.
If your breathing rate is optimal and you know it.
Bring it on.
Aura. Know why you feel how you feel.
At Casper, we're delivering better sleep to homes everywhere. With a mattress so supportive and comfortable, it was awarded Best Overall Mattress by U.S. News. So, wherever home is for you, now's your chance to let great sleep be a part of it. Bring home superior Casper comfort and receive a special gift for a limited time, in-store or online at casper.com.
Real Home Realizations by Realtor.com.
After all this time at home, I've started to wonder if even my bed thinks this room is small. Do you, bed? Do you? Hey. Hey, bed. You think this room is small too, right? I need to get out of here.
Now that you've spent so much time at home, maybe it's time to find a new one. Realtor.com, the home of home search.
Too much stuff, not enough space, and no time to deal with it? Look no further than Clutter. We'll get your things out of your way and into one of our safe, secure warehouses, all for an affordable monthly rate. Our professional movers will come pack everything up, photograph it for easy retrieval, transport it to a nearby Clutter facility. And if you ever need anything back, Clutter will deliver it to your door. So you have your stuff when you need it.
Thanks.
And not when you don't. Clutter. Storage simplified.
They spend their whole lives hitting people. It's just, it's really, I get it all the time just on a personal level. Like, you're so mean. And I'm like, I don't even understand when someone says that to me. These are, these are big boys and mostly boys, and they should take criticism, and no matter where it's from. And I think making really, it's just, I find it really interesting that now there is when they're pushing back. And they certainly did on Jedi. They did, but it wasn't this level of, they didn't write, Trump doesn't know how to run a defense department, or like, it just didn't come out the same way. And the only place where it was in Jeff Bezos' personal life. And I agreed that he should have punched back really hard on that one, because that was appalling what they did to him. So.
Well, it seems like to me the audience is a working class union voter in Alabama, and I don't know how popular Bernie Sanders and Elizabeth Warren are with them, so maybe picking a fight with them might actually work, but we will see how the vote turns out. Moving on, an NBC News report finding that delivery app DoorDash has tacked on additional fees in more than 80% of jurisdictions that imposed a food delivery fee cap, calling the extra charge a regulatory response fee to the 15% commission cap there. So, Kara, I mean, I know this is a story and whatnot, and people are like, oh, well, DoorDash has been taking this cut from restaurants. This seems fine to me. So they're not taking the cut from restaurants and places that have put a cap on that. They're just tacking that charge on to the consumer. Yeah. And I guess if you want to go with Dash Pass and be a subscriber, you get that lesson. But this just seems like, I don't know, capitalism to me. If you think it's worth it, you order the food. If you don't, you go pick it up yourself.
Well, I think it's capitalism, but it's also at the expense of the restaurants. That's really what it is. And if they want to create partnerships going forward, there is some, joint suffering in this case to work together. And so, I think it's the problem is what they're going to do to restaurants and their own partners and the people they rely on. And so it seems like they're going to do this. These fees are going to be more. They really can't. The restaurants can't really pass it along to the consumers very easily because their business declines. And so what happens is restaurants get caught in this squeeze versus anybody else. And at the same time, again, we're talking about these workers' rights. These people do not make a lot of money. They need to make a living wage. We have to think about their benefits and everything else. And I know that's like the worst thing to say, but these, just like in Alabama, they may be in Alabama, they may not like Elizabeth Warren, but they sure do like good wages and they sure do like good benefits. Everybody does across the country. And so how we get there is going to be one of the bigger debates going forward, especially with a lot of these so-called, these aren't tech companies really, they're worker companies. companies. And so we have to think about if we want to make what Scott Galloway calls a menace economy. Do we want to live in a menace economy, or do we want everybody to have, as we've gone through this pandemic, we want to see people with good wages, good benefits, and treated with some level of respect? And I think that's, I don't know, I think that's really what's happening here. And we don't want to squeeze other businesses. So if I was DoorDash, I'd think a little bit harder about this. Maybe it's the way they've decided to do it. But the restaurants are their partners, and so are the people who buy food.
Right. I'm glad you bring up that this is a broader conversation, too, about labor issues in the gig economy. But, Kara, what does this say about the business model itself? Is it indication that it simply doesn't work? It's going to be so difficult for these companies to be profitable unless you see more indication. By the way, we're talking DoorDash here, but Uber Eats is doing this as well. They are tacking on that fee. So DoorDash saying that it expects adjusted EBITDA this year to be between $0 and $200. Uber's already losing billions of dollars. You know, does it make sense? Where do we go from here?
Well, we can talk about that a lot. Who's paying the real costs of all these internet companies, right? You know, you can argue that around Facebook when they don't do content moderation and we have an attack at the Capitol. Who paid to clean up the Capitol? Not Facebook, and even if they had a part in it. And so what the real costs of these businesses are maybe has not been factored in, and they're sort of getting a pass. In this case, it's really, this business DoorDash is in is really difficult. And so anytime a new cost comes up, someone's got to pay for it. And typically they don't want to make the consumer do it because they want to keep growth at all costs. So at some point, someone's going to have to pay, and it'll be an interesting question of who does that and when it happens.
Well, consumer seems to be paying in this case, and maybe not too upset about it. Kara, thanks. I could debate this for a half an hour.
Okay, let's do it. Let's do it.
No.
You need much more time than that. Hours. We're also keeping an eye on the wild trading in Chinese internet names. Our Dom Chu has that for us. Dom, what are we seeing today?
We're still seeing some declines, following through on some of the weakness that we saw last week as well. If you take a look at the Chinese internet names, there's one ETF that a lot of traders are looking at to kind of give you a sentiment gauge right now, and that is the Crane Shares CSI China Internet ETF. The ticker is KWEB, KWEB. It's off another 2.25% today, but as you can see here, the trend has been predominantly to the downside for the course of the past couple of months now. A lot of factors driving that, of course, to the idea that maybe Chinese government is cracking down on some of these big tech companies, and of course what happened with Archegos Capital over the course of the last few days here as well. If you look on some of the moves that we've seen, just how far have we fallen on some of these big names that are tied to Archegos Capital Management? Well, VIP Shop is up 3% on the year, Tencent Music up positive, and Baidu as well. But look at this. The orange and white lines here are between 35 and 40% declines in just the last 3 or 4 trading days or so for Tencent Music and for Baidu as well. That is how significant some of that liquidation has gotten. Now, on an intraday basis, we are seeing a bit of a move here on some of these, Deirdre. Take a look at these on the upside. Also, watch what's happening with these other Chinese internet names as well. Tencent Music is now down on the day. They started off higher. They're going to take the opportunity to use that weakness to purchase $1 billion of their own stock back. That's the biggest stock buyback program they've had. Baidu's down 5.25%, VIP Shops as well. So there's still a big concern right now that this is not over yet. This liquidation trade, the transparency is not there, Deirdre. And so we're seeing a bit of that weakness come into the midday trade as well. I'll send things back over to you.
Difficult for investors to sort of figure out how much is due to that margin call at Archego and how much is due to fundamentals. Citi out with a note saying that this represents a buying opportunity for names like Baidu, Tencent Music, and VIP Shop. But some of the other names that aren't related to the margin call, like Pinduoduo, down more than 20%, Meituan, 14%, JD.com, down 14% in the last few weeks. Do we have any indication about what's causing these names, or is it general? You know, does it come down to fundamentals?
So
scrutiny, antitrust scrutiny over in China?
It could be any, Deirdre, it could be any one of those things or in combination together. Now, remember, for many of these names, it's not like they're awash with liquidity. You can't just get out of them or into them at large scale just at the drop of a hat. So for many stocks out there, there could be a sentiment tie into some of these. It could also be a proxy trade, right? If you cannot sell something in one name, you look towards other parts of the market where you can actually find some liquidity that have some kind of a statistical tie or correlation. They trade similarly. So sometimes you'll see some of those moves happen there. That's the reason why you're saying, hey, it's not just these 4, 5, 6, or 7 names, but everybody in these. And by the way, ETF trading drives a lot of that because you're basket trading overall, Carl. So it's something to watch as well as we watch the kind of afternoon play out, whether or not the ETF trading is going to drive a lot of that. And by the way, we're going to address that later on today in the ETF Edge online show because we've got the CIO of Crane Shares talking about what's happening with this ETF right now.
Wow, that's so important, Dom. And of course, as we get into the final hours of trading, it becomes more and more a front burner story. Thank you, Dominic Chu. Getting some breaking headlines from Fed Governor Waller. Steve Leisman's got that. Hey, Steve.
Good morning, Carl. Yeah, Fed Governor Chris Wallace, who only took office in December 2020, making his first speech and deciding to talk about an unusual topic, saying that Fed policy, Fed monetary policy, will not be conducted to help finance the federal government deficit. He said deficit financing, the level of debt, the level of interest rates the federal government pays, and the debt service amounts play no role in monetary policy decisions. Fed policy, Waller says, will be guided solely by the dual mandate of maximum employment and stable prices. Now, he does say, hey, cooperation in a crisis, crucial for saving off disaster. Fed and the Treasury need to work together on operational issues, and they can work together closely in a crisis, especially to address financial stability issues. But Fed independence, he says, and I think this is the main point he's trying to get across here, is going to help keep inflation expectations under control because the Fed is not under the tutelage of the Treasury. Carl, back to you.
All right, Steve, we'll watch that. Thank you very much. Still got a big show ahead, including the CEO of Boston Dynamics and its newest robot called Stretch. Squawk Alley continues in just a couple of moments.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving.
Does she get one?
Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
A hearing on Capitol Hill looking at whether Washington, D.C. should become the 51st state.
This debate has become front and center for Democrats as a voting rights issue.
The facts, the truth, the news with Shepard Smith. Weeknight, 7 Eastern, CNBC.
Examining social and economic challenges facing Asian Americans, business leaders speak out on combating anti-Asian sentiment and improving prospects for success. A CNBC special, Race and Opportunity.
Imagine yourself in a new Toyota. With great deals, get ready to turn your dreams into reality.
Right now, save big with a complimentary first month's lease payment on a new 2021 Highlander or Highlander Hybrid. Plus, every new Toyota comes with Toyota Care, our no-cost maintenance plan.
Ready, set, go get your Toyota today.
Toyota, let's go places.
At Ford, we don't rest on our laurels. We build on our strengths, innovating across the lineup. We took the Explorer and built it leaner and stronger than ever. The Escape, sleeker and smarter. And gave the Edge thrilling horsepower. Building stronger is in our DNA, because we're not here to meet expectations. We're here to defy them. Right now, lease the Ford Edge SEL for $169 a month with eligible trade-in. View more offers at buyfordnow.com.
Was worth for free.
Accounting startup Pilot, backed by Jeff Bezos, raising $100 million in its Series C funding, doubling its valuation to $1.2 billion. Kate Rooney joins us now with the CEO in a CNBC exclusive. Kate, over to you.
Hey, thanks, Deirdre. And Wasim Daher, CEO of Pilot, joining us now. Wasim, great to see you. Thanks so much for being here.
Thanks for having me.
Of course, I do want to start with your investors. You've got Jeff Bezos and Bezos Expeditions leading this round. You interned at Amazon 16 years ago, so full circle here. You're also backed by Stripe and the Collison brothers. You've got Diane Green. Why are they investing in Pilot, and what's the opportunity here?
So in general, the opportunity for Pilot is that Pilot runs your financial back office for you. So we take care of your bookkeeping, your taxes, your budget, et cetera. And the way it works is when you work with us, you're paired with one of our finance experts who's a full-time employee of ours who sits in our offices in Nashville and San Francisco. And they do it using software we've built that lets us do the work with unmatched quality. So I think the thing that has been exciting for our investors is how large the potential opportunity is, that literally every single business owner across America struggles with this problem and that we can help them with it.
And you mentioned some of that software. You guys do have proprietary software, but you're not a software company. You guys really bring accountants and sort of that human touch back into the mix. Meanwhile, the rest of the sort of small business accounting startups are moving in the other direction towards automation. Why not just automate everything? Why are you guys bringing people back into your company?
That's a great question, and this really stems from our own very visceral experience. This is the third company for my co-founders and me, and I have never heard a business owner say, you know what I really want to buy? I really want to buy more accounting software. Like what every business owner says is, what if you take care of this scary, tedious, important administrative stuff and let me focus on the reason I started my company in the first place? And I think that's not possible if you try to just sell software. You really have to deliver end-to-end ownership of the experience.
Wasim, it's John Fort. Good to have you. I've talked to a number of software companies who are trying to address small business back office challenges from one angle or another. Gusto, who I know you've partnered with, North One is a challenger bank. How is this going to work out, though? Are all of these going to sort of get rolled up vertically? Do you think bigger players in the space, the Intuits, are eventually going to try to buy up some of them? What's the long-term strategy for remaining independent in this space?
It's a good question, and I think what you'll see is the rise of fairly vertical-specific applications. Like, oh, we're a bank that focuses on vertical X, or we are a payroll processor that focuses on industry Y. I do think in the set of software tools, there will continue to be room for fairly specific specialization for the industry you support.
Wasim, good morning. It's Deirdre. I'm interested in what you just mentioned as your labor model. You said that you employ workers full-time. Is that right? Instead of using that sort of independent contractor model, why do you go that way?
That's right. Everyone on our team is a full-time employee of ours. And furthermore, well, up until COVID, of course, they sat literally in our offices in Nashville or San Francisco, and they have benefits, et cetera, et cetera. And the reason is that the relationship you have with us is not a transactional relationship. You want to have that same account manager who knows you, who knows your industry, who knows your business, who's really built up context on the relationship you have with us. It's not about get me from point A to point B, or move object X from location A to location B.
Wasim, it's Kate again. I want to ask you about small businesses. That's really your core client base. They were hit pretty hard during the pandemic. You still say revenue doubled in the past year. And you mentioned people sort of not wanting to walk down Main Street with their box of receipts to their old accountant. Is that digital trend here to stay once the economy reopens? And do you expect Pilot's business to soften at all once things get back to normal?
Oh, I think this is the new normal, meaning if you look at the average person running a small business in the United States today, they don't, to your point, they don't want to go down to their, their retail storefront with a shoebox of receipts. They want to be transacting this stuff online. Perhaps it's Saturday at 11 p.m. in their pajamas. I think that is sort of the way that people want to run their businesses, and I assume that they will continue to run their businesses post, once everyone is fully vaccinated.
Wasim, we'll have to leave it there. Wasim Daher, CEO of Pilot, thanks so much for joining us. Carl, I'll send it back to you.
All right, Kate, thank you very much. We're getting some breaking news from the CDC, as well as some remarkable comments from the director there. Meg Terrell has it. Hey, Meg.
That is true, Carl. The briefing going on now with the CDC director, Dr. Fauci, and Andy Slavitt for the White House COVID response team. Let's start with some news, some good news on the vaccines. The CDC study of healthcare workers and other Frontline and essential workers over 13 weeks from December to March looked at how well the 2 mRNA vaccines did in preventing infection from SARS-CoV-2. And they found after 2 doses, the vaccines reduced infections by 90%. And in a small number of people who only got 1 dose, they reduced infections by 80%. So that's some real-world data really showing these vaccines do work. So that's the good news. But guys, in this ongoing briefing, hearing some very powerful remarks from Dr. Walensky and Dr. Fauci about how concerned they are about the trajectory of cases happening in the U.S. right now. Here's Dr. Walensky.
I'm going to pause here. I'm going to lose the script, and I'm going to reflect on the recurring feeling I have of impending doom. We have so much to look forward to, so much promise and potential of where we are, and so much reason for hope, but right now I'm scared.
Guys, she says she's feeling a sense of impending doom. Looking at the case numbers now, 62,000 here in the U.S. They've come down a lot, but they have stagnated and have started to pick up. And she says this could be the beginning of a surge that really worries her. And reiterating, the vaccines work. We just, have to hang on until they really cover enough people. Guys?
All right, Meg, thank you. We are keeping an eye on Twitter today. You see it there, up more than 1.5%, getting an upgrade at Truist to buy from hold, with the firm pointing to higher revenue growth estimates, as well as what it refers to as the most exciting product roadmap it has ever seen from Twitter. We'll be right back. Stay with us.
We see breakthrough medicines getting to patients in record time. At Emerson, our automation software is empowering pharmaceutical companies to accelerate the production of critical vaccinations for the world. Emerson, consider it solved.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
Blunders, they're how we learn. But investment blunders are a costly lesson that can hurt your retirement. Decisions like trying to time the market, placing big bets on a single stock, or letting politics and elections influence your investments. Fisher Investments has gathered the 13 worst blunders and how to avoid them in this eye-opening free guide.
Why take a chance? Let Fisher Investments send you our free guide, 13 retirement investment blunders to avoid, like running short of money in retirement, or working with a money manager who's not a fiduciary. Call now, 1-800-208-4466.
Fisher Investments has helped thousands avoid costly blunders and achieve a comfortable retirement. If you have $500,000 or more to invest, call now.
Call Fisher Investments now for your free guide, 1-800-208-4466.
Don't just retire. Retire well.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Grubhub perks give you deals on all the food that makes your boogie. Get the food you love with perks from Grub What You Love.
Cow, you came in hot. Shake and bake. Shake and bake. Our lawyers just want you to know that this isn't real.
That's my boy. Just remember my motto. If you ain't first, you're last.
Purchase and get $10 per horsepower with Dodge Power Dollars. That's $7,970 on the Dodge Challenger SRT Hellcat Redeye.
On Squawk Box, Morgan Stanley CIO Mike Wilson. A big picture perspective on the recovery, risks, rates, and business cycles. Squawk Box, 6 Eastern on CNBC. Watch Squawk Box anytime on demand.
For those who have turned inspiration into preparation, this is their moment to take a leap as a major champion. The ANA Inspiration, Thursday, 12 p.m. Eastern on Golf.
Welcome back. I'm Rahel Solomon, and here is your CNBC News update at this hour. The trial of former Minneapolis police officer Derek Chauvin in the death of George Floyd is now underway. with the prosecution delivering an opening statement.
Mr. Chauvin has a presumption of innocence. He is presumed to be innocent until proven guilty. We plan to prove to you, beyond a reasonable doubt, that Mr. Chauvin was anything other than innocent on May 25th of 2020.
Alaska's moderate Republican senator now has a challenger from her own party. State government official Kelly Shabaka says that she is running against Lisa Murkowski, saying that the D.C. insiders need to be held accountable. And Republican Senator Tom Tillis of North Carolina says that he's having surgery next week to treat prostate cancer. In a statement, Tillis says that the cancer was caught early due to a routine screening and that he is expected to make a full recovery. You're now up to date. More Squawk Alley after this.
We see smarter software delivering cleaner power. Emerson's breakthrough technology enables the power industry to integrate renewable energy sources to modernize and improve the electric grid. Emerson, consider it solved.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
We both love this place.
I'm pretty sure we have everything in order.
Pretty sure. With Rocket, you could be certain. Not pretty sure.
What's the difference?
Well, let me show you. I'm pretty sure I know how to extract the upper bicuspid. And I'm pretty sure it's just like riding a bike. I'm pretty sure they come in peace.
Let's do certain.
Yeah, certain is better.
Pretty sure isn't sure enough. When you need to be certain about how much home you can afford, Rocket can.
GoHealth has blossomed from an idea in a Chicago apartment nearly 20 years ago to a listing on NASDAQ today. We help seniors compare and shop for Medicare options in their areas using licensed, trusted advisors in an online platform.
GoHealth has compounded at 52% a year for 20 years. We believe we're just beginning to realize the opportunity to improve access to healthcare for consumers.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V, only at the Honda Dream Garage Spring Event.
Find your rhythm, your happy place. Find your breaking point. Then break it. Every emergency gives you a potent blend of nutrients, so you can emerge your best with Emergency.
No cost to you. Act now.
Tech executives have a new worry keeping them up at night: state-sponsored cyber threats. Our Eamon Javers has more. And Eamon, cyber attacks have been a rising worry for years, but state-sponsored ones, that's a newer development, right?
Yeah, you're up against some of the top spies in the world, and that's why we're seeing this shift now in the way that technology executives perceive the threats in cyberspace. It mirrors exactly what we've seen going on in the news over the past couple of months. Now, according to the first quarter CNBC Technology Executive Council survey, concerns about state-sponsored cyber threats remain high. Nearly half of those surveyed said that's the most dangerous threat to their organization. That's up from just 20% in the third quarter of last year. So you see that spike in anxiety there over those couple of charts. 10% said individual hackers were the most dangerous cyber threat that they faced, and 35% said employee mistakes were the most dangerous threats. All of these concerns are going all the way up to the top. 74% said their board has had a formal discussion about the SolarWinds hack, and an additional 10% said they haven't done that yet, but it's definitely on the agenda for their next meeting. So boards are keeping busy with this as well. We asked them how they think the government is doing in responding to the SolarWinds hack. Almost half said average, 23% said poor, and then look at that one, 0% said the response from the U.S. government was excellent. So this is not a group that's been inspired by what it's seen here from Uncle Sam in terms of the response nationwide to these cyber attacks. This is a snapshot now of what the industry is thinking. It's 31 members who've responded here. They're all high-ranking tech officers in their companies. So it gives you a sense of just how worried they are and the daunting threats that they're up against, Carl.
Wow, there's a lot in those charts, a lot going on. Eamon, thank you so much. A great place to start with our next guest, Robert Herjavec, founder and CEO at the Herjavec Group, obviously, as well as a judge on Shark Tank. Robert, I don't know whether to be encouraged that executives are on guard and alert and thinking about this stuff, or worried that they think the government's not doing enough.
Well, Carl, first of all, I'm encouraged because you guys are highlighting a problem that I think we all kind of know, but this report is fantastic. So first of all, kudos to you for putting this together. And I think the encouraging part for me is it's making its way up to the executive level. It is very difficult to fight a sophisticated nation-state attack with a government who doesn't have the resources. I mean, I think things are going to get better, but if the government is struggling, think about private enterprise and how hard it is for them.
What makes you think that things are going to get better?
I think even your own report says that people are investing in the tools. So 60% of the people that responded are ahead of the curve of where they thought they would be in terms of investments in cybersecurity. But here's the challenge. I mean, I think we're in cybersecurity, we're kind of at the better driver golf club stage, where eventually, no matter how many drivers you buy and how good the driver is, it doesn't help your game. You've got to work on the people part of it. You've got to get better. And so another thing about your report is it highlights how hard it is to hire people in this space. I think the tools are there, but people are struggling to fill them. And that's what we're seeing in our space is the growth of managed services and outsourcing some of those things.
Robert, I wonder how bad, though, the landscape has become. There's been sort of this slow drip of news of the impact of the SolarWinds hack, including information just over the weekend, maybe even this morning, that the suspected hackers here from Russia gained access to the head of the Department of Homeland Security's email and to folks who were running cybersecurity there. I mean, you know, if they were that deep in the system, how many reverberations are we going to see from this hack, and how many extra precautions are going to need to be taken for probably years?
Well, John, we just don't know. I mean, that's the thing about these attacks is they're so sophisticated. We don't know how deep people are in them. But let's not forget that we're very focused on these. But I think back to 2012, the big Target breach at the time, it was catastrophic, and we responded to it. We put in the tools. Same thing now. You know, I think that the attack is out there, but I think enterprises have become more cognizant about it. And as your report said, the boards are talking about it. You can't fix something unless you put the resources behind it. It's going to get harder. Whatever we fix today, the attacker is going to go up another level. I think we've got some great tools in order to keep fighting that good fight.
Robert, good morning. It's Deirdre. So far, the cyber attacks the major ones at least, have focused on stealing information, essentially spying. How worried are you that future attacks start to have sort of more real-world, immediate consequences? They start to attack critical infrastructure, the power grid, for example. Why isn't that happening now?
Or did I worry about everything all the time? So I'm probably the most paranoid guy out there, which is good for the industry I'm in. Yes, now people are stealing information. And let's not forget, it's easier to steal how something is made or some private confidential information than to have to build it in industry or take advantage or put pressure on people. What we worry about is once you go from that, then you connect to critical infrastructure systems, utilities, water systems. We know last year there were attacks on water utility systems here in the United States and also in South America, where people were actually able to control those systems. And so, you know, those holes have been fixed, but there's always something out there. The next the next war will be a cyber war. It's cheaper, faster, and can be far more destructive.
Yeah, it's a scary thought. And when you talk about the tools, you were optimistic a moment ago, but I wonder, does the administration really have the tools to combat more attacks? There was a conversation this morning on Squawk Box about the NSA being prohibited by law from looking at U.S. servers because they're designed to look overseas only. How do you confront that problem and sort of weigh privacy with combating cyber attacks?
Right, and so I have this argument in my head every day. Half of me is all about privacy and protecting my personal data as a consumer, as somebody that really believes in the free, democratic, open system. The other half of me says we're fighting a foe that allows their version of the NSA to control and monitor everything. And in some ways, it's very difficult for our government to fight back with one hand tied behind their back. What I believe in is our ingenuity and our ability to create tools that can go beyond that. I think we've got some incredible tools coming out. I think there's some great startups in this space. We're seeing things like the growth of identity, which allow us to verify that the person really is who they are online. This is a relatively small industry today, but you're going to see it go boom into a multi-billion-dollar industry.
Hey, finally, Robert, I just wonder, as corporates and the enterprise, continue to respond to the threat, what is the most effective method right now? Is it more bodies manning the problem? Is it subscribing to more tools and software? Or is it about changing the management ladder, the hierarchy, who reports to whom in terms of how to fight this thing?
Well, I think we've actually fixed that. I think that cybersecurity is getting a seat at the executive table. Now, most corporate boards have somebody who is at least talking about cybersecurity. We recently published a report. It's on our website, and we talk about optimizing the tools that you have. If you can't get the people, you've got to optimize the tool that you have, find a partner that can help you get there. This is so complicated that you've got to find the people that are already doing it. I mean, we struggle to find great people. Imagine what our customers are going through.
Yeah, that's a great point. And you've definitely been an evangelist on this for years, even as the episodes continue to crop up again and again. Robert, thanks. Talk to you soon.
Thank you.
And still to come, look at this robot stretch. Boston Dynamics has got a new one, unveiling its newest robot today. The CEO is going to join us next. Don't go away.
Ten years ago, we founded Loan Depot because we were confident we could deliver the American dream of home ownership to individuals and families across the nation.
Serving more than 27,000 customers a month, lowering payments, providing jobs, and investing in neighborhoods and communities nationwide.
We know what it means to put down roots and bring dreams to life.
At Loan Depot, we know
home means everything.
As the original host of Wheel of Fortune, I was blessed to be part of building one of the greatest game shows in history. During that time, we handed out millions of dollars to thousands of contestants. And I thought, what if we paid the contestants their winnings in gold instead of cash and prizes? Back in 1976, we had a wonderful contestant named Lee whose 3-day winnings were valued at $12,850. And you know what? That was a pretty big haul back in 1976. So I wondered, what would have happened if Lee had put $12,850 in cash and then put $12,850 in gold in a safe, just sitting there side by side from 1976 until now? Well, I went back and I ran the numbers, and what I found was amazing. We all know that $12,850 in cash would still be sitting there, but it would be worth a whole lot less than it was in 1976. But that $12,850 in gold, safely stored away, it's worth $135,000 as of the taping of this commercial. Now, that's more than 10 times the original amount.
If you've bought gold in the past or would like to learn more about why physical gold should be an important part of your portfolio, pick up the phone and call to receive the complete guide to buying gold, which will provide you important, never-seen-before facts and information you should know about making gold, silver, and platinum purchases. For faster wealth protection, request a digital version of our complete information kit, which will be emailed for faster delivery. You can also receive a copy of our new U.S. Gold Report for 2021. Inside, you'll find the top 25 reasons why you need to start owning gold today.
With nearly 2 decades in business, over $1 billion in transactions, and more than 500,000 clients worldwide, U.S. Money Reserve is one of the most dependable gold distributors in America.
We're keeping our eyes on a pullback in a big range of EV and alternative energy-related stocks. Names like Blink Charging, Plug Power, Sound Power, Fuel Cell down more than 5% today. The First Trust NASDAQ Clean Energy ETF is down about 4%. Stocks in the online betting space also taking a hit in today's session. DraftKings, for one, down 4%. Penn National and Bally's even deeper in the red. There's more Squawk Alley ahead, so do stay with us.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
Cover it up. That's what I did when I started losing my hair. Then I realized I could actually do something. Now I use Keeps, the easiest way to keep my hair. And it only costs $1 a day, which means no more covering up. Get started at Keeps.com.
We're Carvana, the company who invented car vending machines and buying a car 100% online. Now we've created a brand new way for you to sell your car. Whether it's a year old or a few years old, we want to buy your car. So go to Carvana and enter your license plate, answer a few questions, and our techno wizardry calculates your car's value and gives you a real offer in seconds. When you're ready, we'll come to you, pay you on the spot, and pick up your car. That's it. So ditch the old way of selling your car and say hello to the new way at Carvana.
The way we work has been completely transformed in just months. CNBC is your HR resource.
We have employees who never want to come back to the office.
Creating opportunities through change.
With a good opportunity, it is possible to succeed.
People are going to spend a lot less time commuting and more time just teleporting in.
CNBC can help you engage, inform, and elevate.
We saw this as a unique opportunity to reinvent how we work.
Go to CNBCCouncils.com.
I don't like veggies.
What? Whatever you have at home, Knorr sides can turn nutritious veggies into mouth-watering meals. Veggies taste amazing with Knorr.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Your daily dashboard from Fidelity. A visual snapshot of your investments, key portfolio events, all in one place. Because when it's decision time, you need Decision Tech. Only from Fidelity.
If you rank 20 midsize SUVs by lowest maintenance cost, the Volkswagen Atlas and Atlas Crossport rank #1 and #2, beating Subaru, Toyota, and Honda. So really, the only thing better than a Volkswagen is a Volkswagen. Now's a smart time to get into a Volkswagen SUV at our Sign Then Drive event. Lease a new Tiguan for 0 down, 0 deposit, 0 first month payment, and 0 due at signing, or get 0% APR financing for 72 months.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
At Casper, we're delivering better sleep to homes everywhere.
With a mattress so supportive and comfortable, it was awarded Best Overall Mattress by U.S. News. So, wherever home is for you, now's your chance to let great sleep be a part of it. Bring home superior Casper comfort and receive a special gift for a limited time, in-store or online at Casper.com.
If you're tired and you know it, skip the gym.
If you're anxious and you know it, take a break.
If your heart rate variability is 50 and your body temperature's normal.
If your breathing rate is optimal and you know it, bring it on.
Aura. Know why you feel how you feel.
Real Home Realizations by Realtor.com.
After all this time at home, I've started to wonder if even my bed thinks this room is small. Do you, bed? Do you? Hey. Hey, bed. You think this room is small too, right? I need to get out of here.
Now that you've spent so much time at home, maybe it's time to find a new one. Realtor.com, the home of home search.
If you get a period, this might look familiar. That too. But it doesn't have to be this way. It's time to start a new cycle. Make the switch to Thinx, underwear that absorbs your period. They're machine washable and easy to care for, so you can use them again and again, just like a regular pair of undies, but with all-day comfort and built-in leak protection. See how they work for yourself. A better period is here with Thinx. Learn more at hellothinx.com.
Real G's moving silence like sourdough. So if you didn't know, the Sourdough King is back at Burger King with flame grilled beef, sizzling bacon, and ooey gooey cheese stuffed between two toasted sourdough buns. The Sourdough King and Sourdough Breakfast King. Your way, way better.
Decisions like trying to time the market, placing big bets on a single stock, or letting politics and elections influence your investments. Fisher Investments has gathered the 13 worst blunders and how to avoid them in this eye-opening free guide.
Why take a chance? Let Fisher Investments send you our free guide, 13 retirement investment blunders to avoid, like running short of money in retirement, or working with a money manager who's not a fiduciary. Call now, 1-800-208-4466.
Fisher Investments has helped thousands avoid costly blunders and achieve a comfortable retirement. If you have $500,000 or more to invest, call now.
Call Fisher Investments now for your free guide, 1-800-208-4466.
Don't just retire. Retire well.
I never saw it coming. No.
For love of money kills their romance. Will he get out alive? More facts, more clues. American Greed Bonus Edition. Season premiere tonight, 10 Eastern, CNBC.
Boston Dynamics, the company behind Spot, the robotic dog, revealing a new robot design this morning named Stretch, marking the company's first official entrance into warehouse automation. Joining us now to discuss the launch is CEO Robert Plater. Robert, thanks for being with us. Now, I think that most people remember Spot, also Handle and Atlas before that. Atlas, the robot that famously did that backflip off a crate and went viral. With Stretch here, less viral tricks, but far more commercial use, right?
That's the intention. This is the first robot we built specifically for the logistics and warehousing industry.
Right. So you're going up against players like Amazon. Amazon, for example, acquired robotics startup Kiva almost 10 years ago and has already been deploying them in their fulfillment centers. So I wonder, how important has robotics been to their rise and status as #1 e-commerce player? Yours coming out 10 years later because it's not available till next year. How do you compete with something that Amazon has already been using and developed?
Well, this is a new capability. This is the first mobile case-picking robot available in the world. And so because this industry is growing so fast, automation really is needed just to keep up. But it fills a special niche that previously hasn't been satisfied.
Right, so are you selling it sort of on that fact, saying you can use this to make your warehouses more efficient? And do you think that that will help some of these players, particularly in e-commerce, compete better against the Amazons and Walmarts of the world?
Yeah, Stretch is really designed to fit, you know, the 85 or 90% of warehouses that have no automation in them whatsoever. And so it will fit into what's called a brownfield warehouse, making automation sort of more manageable and adaptable to their existing work environments.
Rob, we're having this conversation right as some warehouse workers in Alabama are going to vote about joining a union. And I wonder how you expect these robots, this technology, to impact that worker management conversation in this industry that's so central to what's happening in e-commerce and logistics right now.
I mean, the industry is growing at tremendous rates, and the employers in this space are having a hard time, frankly, keeping all of their jobs filled. I think, you know, these people also would like an opportunity to work with better technology. We're designing these robots so that they can be used by the people on the floor. It's something that will be power tools for warehouse workers doing, you know, frankly, the hard and heavy lifting, but we still need people in there, you know, operating the robots, managing them, keeping them productive.
How many people does a robot like this relieve, we'll say, when it comes to moving, what is it, 800 boxes in an hour or something like that? I mean, what's the human equivalent of what this robot can do?
Well, the idea is that, you know, warehouses need to be able to maintain the kind of pace that they currently do with, you know, people inside the backs of these trucks unloading the boxes. And so the robot needs to be able to maintain, you know, the cadence that a human worker would. But it's also, you know, this is an unforgivable environment in the middle of the summer, in the middle of the winter. Being in the back of one of these, a truck or a container unloading, is a pretty daunting place. And frankly, it's a place where, you know, there's high attrition and high, you know, injury rates. And so the idea is that, you know, we'll have robot wranglers that manage robots while they're in the back of the truck, pulling out the material, but then people will be maybe managing 5 to 10 robots at a time, kind of keeping the flow going.
Robert, a quick question on costs. You know, we're used to seeing, especially with new innovations, the costs come down over time. Obviously, it might be a little bit early, but I wonder, do you foresee robotics having that same deflationary trend that we've seen over the past few decades in things like hardware and computers?
Absolutely. It's all about scale. And so, you know, right at the beginning, you have to try to offer this at a competitive price. But then as you can get your numbers up, you can start to drive the costs out and make these machines ever more affordable. We expect these to be competitive with, you know, industrial automation tools that are currently available in the market.
And when, like, if I were a customer, is there a minimum number that I am required to buy? And what goes along with it? If I buy the hardware, how much software is incorporated into that cost?
You know, we haven't figured out the package that we're going to roll out just yet. We're starting with truck unloading. It'll include robots that can go in and out of the back of the trucks, safety equipment that will surround them. Ultimately, I envision, you know, multiples of these working on a loading dock, working together. One of the great things about these systems, of course, is that you can download software and essentially enhance the capabilities. Stretch is ultimately a multi-purpose robot. It won't just unload trucks. It'll work out in the warehouse later on, building pallets as well. And that's essentially a software download. And so that's added functionality.
So, Rob, Stretch is looking at disrupting the logistics warehouse space. I wonder, what is the next industry you're looking at? If there is one, what else could Boston Dynamics robots help make more efficient or transform?
It's a great question, because I think mobility plus manipulation and vision is something that could impact a lot of industries. So, you know, right now, Spot is on industrial sites, surveying, collecting data, and just being able to get around. But there's lots of places where if you had an arm and a mobile base and some vision, you could use some extra work. Maybe the construction industry, putting up drywall or HVAC, or even the agricultural or forestry industry. So I think there's lots of room to expand this functional robot function into, you know, revolutionizing the industry. We're just at the beginning.
Well, we hope you'll come back and talk to us about further innovation. Rob, thank you so much for being with us this morning, CEO of Boston Dynamics. Guys, as we close the show and take a check on markets, the NASDAQ Composite starting another week weaker, down about 0.7%. And underperforming the Dow Jones Industrial and the S&P 500. Guys, a lot of those momentum names from last year, they continue to be weak. Zoom Video down almost 3% today, John.
Yeah, speaking of momentum, DoorDash is up a little better than 2% today, but it's still 46.5% off of the highs. You know, where the value is there is an open question. Carl, it's hard for me to be mad at them for charging what they can for delivery, though. That's how you make the business model work.
Yeah, it's true. Speaking of business models, guys, interesting set of calls in the internet space this morning, John, regarding Facebook. We got a new street high as they go. One firm goes to 385, and Twitter. Truist with an upgrade to buy over at Twitter, talking about the product roadmap, which we've discussed a lot in recent months in terms of the new Spaces app and some features that they're going to be rolling out, talking about it being the best roadmap they've seen from the company ever. And we will see whether or not that comes to fruition. Overall, guys, it's going to be a busy week. We're going to get more touches on the consumer space. Obviously, the story regarding the margin events is not over. And then Jobs Friday is going to happen on a day when the market is closed for Good Friday. So buckle up. Melissa Lee's in for the half.
Thanks, Carl. Welcome to the Halftime Report. I'm Melissa Lee, and today for Scott Wapner, a big call on the S&P 500 as we head into the final trading week of the month and the quarter, and it's an important one with President Biden's infrastructure plan in focus and the jobs report this week. Plus, it's being called a once-in-a-decade margin call. We are all over this developing story that is rocking Wall Street and the markets. Our investment committee today, Shannon Sakosha, Chief Investment Officer at Boston Private Wealth, Joe Terranova, Steve Weiss, and TRB, Josh Brown. Let's get a check in the markets at this hour. We got red arrows across the board, although just fractions of a percent of losses for the Dow and the S&P 500. The selling once again being focused on the NASDAQ Composite, which is down 0.8%, as well as the Russell 2000, which is down 2%. For the month, we should note that the Russell is down by 1.3%. Let's get to the investment committee with their thoughts on where the markets are headed. Josh, it looks like a continuation of this trend, a questioning of growth and value, of value as well as small caps at this point.
Yeah, I guess Melissa, it's so good to be on with you, by the way. I guess I just don't look at it as growth versus value. I look at it as reopening versus not reopening. I really feel that large pools of capital are investing thematically more so than they are investing based on style, because you're always going to have growth investors, you're always going to have value investors, and then you'll always have generalists, which is most of the money in the market. And most of the money in the market is thinking about the next 6 months to a year. They're thinking about the infrastructure bill, and they're thinking about reopening. So I really think that those are the key dividing lines in the market today, more so than growth versus value. I want to spotlight Berkshire Hathaway. BRKB, I'm long. I think this is a Berkshire Hathaway type of market environment right now. The ARC names are down another 3.5%. Russell 2000 growth down another 3%. But what continues to be strong are the areas that Berkshire tends to invest in. You got U.S. Steel up, which takes an act of God generally for that stock to rally. That's ticker symbol X. Transports look strong. Look at the rails. Had a major merger there with KSU. The home builders are absolutely on fire. And the banks are not really giving much back, by and large. Insurance companies either. So this is a Berkshire type of market. And I would point out the breakout in Berkshire that happened March 9th, retested on light volume, right back to headed toward new record highs. That breakout is a monster. It is years in the making. So if you're long that name with me, I would stick with it.
I think that's an important distinction to make that Josh is making in terms of how you view the sectors at this point of time within this recovery, Shannon, because some value right now may be considered just overpriced. It's not value in the typical sense of value, but reflation and reopening seems to be a better categorization of the trade that so many think are the ones to be in right now.
I would agree with Josh. I think that there's a difference between value and growth and cyclicals, and wanting to add incremental exposure to cyclical names in your portfolio. You know, in my view, we have kind of a barbell approach, right? We're not necessarily, we didn't really play in the work from home, high growth names of last year, and we're not really reaching down into the deep value cyclicals that we've seen really rally this first 3 months of the year. And so what we're looking for is we're thinking about this economic rebound being sustainable, being consistent for the next 2 years, but we're also thinking about the manufacturing aspect of the rebound. I think there's been a lot of emphasis placed on the reopening of the consumer, where we already have clear evidence that the manufacturing rebound is here to stay. And so from my perspective, if you're looking at your portfolio and you're thinking about it in terms of how do I play this potential ebb and flow and this potential volatility that we might see over the course of the next few months, I think you should be playing the long game for the next 12, 18, 24 months. That doesn't necessarily have to be in infrastructure. There's other parts of reopening, like in healthcare, that can be played very easily and still with some value, to your point, from a valuation perspective. But don't limit yourself to trying to make a binary bet on an all-cyclical portfolio, because there's still a lot of really good names that might be classified as growth or quality that could potentially rally as we move through this next 12 to 18 months as well.
Steve Weiss, an interesting point that was being made by Mike Wilson over at Morgan Stanley is that the thing that worries him the most about the market's trajectory in the next, 6 to 12 months is the ability to keep up with demand. That demand is going to be so strong coming out of this pandemic that, services, manufactured goods, all of that might not be able to keep up, and that could be a hiccup in the recovery. Do you see that? Shannon was just talking about consumer demand and manufacturing.
I think that's a good problem to have in one respect, that the economy is going to be just barreling ahead. But what that also leads to is inflation. And will inflation then ramp up, if Mike's right, quicker than anybody's anticipating? Because that's what happens when demand exceeds supply, prices go higher. Realistically, I don't think that's going to be the issue. And I'm with Shannon, I've been saying it for a while, is that the manufacturing boom is going to really boom out of control in a good way. If you take a look at CapEx spending in the last 2 years under Trump, it was falling off meaningfully because CEOs didn't have confidence in which direction the country was going to go, trade policies, etc. With all that cash that's been on the sideline, with buybacks, even though they're less than they were, we're continuing to see negativity come out of Washington about buybacks. So what are you going to do? You're going to invest in your business, you're going to invest in jobs. So I think we're very well set up. But to the earlier question, the question Josh was discussing, look, I've said it not only now, but last year or the year before, is that I don't really look at markets when I pick stocks. I may look at a theme, and I do that, but I always look bottoms up, because that's where you're going to find the value. The value is not in cat and deer. I don't think they're value. Value is in some other names. So that's how I'm playing this. That's how I'm going forward, and that's how I'll continue to look at it. The economy is very good. I think this is a particularly rough week, one of the roughest weeks we'll see, because who's going to go into the weekend with the markets closed on Friday and the payrolls number coming out Friday? How are you going to know which way the market's going to go? I think you'll get a very strong number with jobs reopening. What's that going to do with rates? We see today the market was starting out okay, not great, but then rates moved up aggressively, and so now you've got the market selling off. And then you've got Biden's infrastructure plan. How much of that is discounted in the market? Is that going to mean higher rates and people will focus on that? Or are they going to focus on the economic improvement and buy those stocks and buy the market? Because the economy, yes, it'll be confirmed, it'll be stronger. So it's a pretty confusing time in the market. My advice is take an early Easter weekend, celebrate Passover by not being looking at your screens, and come back in a couple of weeks, couple of months, and see where you are.
But watch the halftime report in CNBC, obviously. I mean, you could take time off but still watch TV and see
of
what
course.
Yeah, of course. That's what you meant.
I didn't say not watch.
I'm sure that's what you meant, Steve Weiss. All right.
It's exactly what I meant, Melissa. Watch that. Don't watch your screen. Stay in position, and you'll come back, and the market will be higher.
All right, Joe, I'm going to go to you. What is value in this kind of market? And I'm going to frame this question with a look at IBM, if you'll just indulge me, Joe. IBM is up 14%, almost 15% this past month. This is a tech stock. It's not being caught up in sort of this tech stock because it's a low multiple stock. It's obviously being bid up because people might be looking for value in this market, value in technology. So how should we look at value? Is this actually tech value in your view?
Well, in the case of IBM, it's not viewed as a long-duration technology name. So that's one of the reasons why it's having a recovery. I think to Josh's point, this isn't about growth or value. This is about industries that we could define from 2020 as being injured or impaired versus healthy industries. And what we're doing right now is we're kind of normalizing what was very abnormal in 2020. So you have injured and impaired industries making this dramatic comeback in a reflation-oriented, economic optimist type of strategy. And it's very similar to what we experienced in 2015 and 2016. 2015, you had a manufacturing recession. You came out of it, the injured and impaired industries like energy, like construction and machinery, like consumer finance, they led the market higher in 2016. So that's exactly what you're seeing right now. And I think it's really about strategy, Melissa. If you look at S&P 500 companies and you identify where's the outperformance year to date, it's in companies that you define as a short duration, low liquidity, weak balance sheets. Where in strategies are there significant underperformance? Year to date, high revenue growth, strong balance sheets, they're actually lower on the year. So I just think we've got the script from prior years. It's applicable to where we are right now. And I agree with Shannon. You have to make sure you've got balance between both strategies, because normalizing means that ultimately the performance becomes more dispersed, and you're going to see both strategies, growth and value, work for you.
All right, let's bring in Jonathan Krinsky, Chief Market Technician at Baycrest Partners. Jonathan is making a very bold call that the S&P 500 is headed much higher in the month of April. April's around the corner, Jonathan, so what do you anticipate?
Well, so going on some of the talking points you guys said earlier, there's been this very bipolar market, and it really culminated in the last several months where you had the Russell 1000 growth and Russell 1000 value. The 50-day rolling correlation on a value basis actually went negative for the first time in about two decades. We haven't seen it since the late 90s. So what that meant is that the S&P has basically treaded water. It's moved sideways for the last couple months for all intents and purposes. And because we've seen that day to day, where one day one area of the market will be up, and the other area of the market will be down. So we think Friday was actually an early indication, despite all the noise with the TMT space. We actually saw Russell 1000 growth and value both up about 1.6%. And we think that's a sign that we're coming out of this kind of bipolar market. You're going to see growth and value both work together rather than in opposition. And that's going to kind of lead to this final blow-off, as you mentioned, where the S&P can push up towards 4,100, we think. And then as we get into the later part of April, perhaps we'll see some more bigger headwinds for the market. But that's kind of our thinking at this point.
Can that go on for a long period of time, Jonathan, growth and value, living side by side like dogs and cats?
It certainly can, and by no means, you know, if we get to 4,100 in April and things are still healthy and checks are still good, we're not going to necessarily say to get everything at that point. It's just, if you look at some other parts of the market, some of the low vol names relative, you know, the high dividend payers relative to the S&P and relative to high beta, we're seeing the relative performance of that so underperformed. We haven't seen that also since the late 90s. So we think there's a lot of moving parts here, but overall we think you'll get one more kind of blow-off move where everything kind of works together, and that's probably maybe an as good as it gets moment, but we'll see when we get there.
Josh, got a question.
Hey, Krinsky, I don't like this blow-off moment. Can we phrase this differently? Because the implication is a record high followed swiftly by a correction in the stock market, or maybe the start of something worse. So I guess I'm asking you to characterize that a blow-off can occur in the midst of a secular bull market and not be a game over moment.
Oh, it certainly can. I think September of last year was a blow-off in the NASDAQ that didn't really disrupt the overall bull market. But I think if you think about what's been going on for the last year in this bipolar market, it's always been this on or off switch, right? A stay-at-home versus a reopen play. We haven't really seen very many times when both are working together strongly. And that's almost been the wall of worry, right? So if you get a scenario where both are working together, it's almost like what's left to buy, right? If cyclicals are firing on all cylinders and you have the growth come roaring back, again, we haven't really seen that yet, but if we get that, that would almost be that as good as it gets moment. Not to say that that will disrupt the long-term bull market, as you mentioned, but I think that would kind of be the wall of worry is almost gone at that point.
Joe, you got a question for Jonathan?
I do. Jonathan, as you look towards the end of the year, you're introducing the potential for a higher tax consequence, and you're also going to be looking forward for earnings that on a year-on-year basis are going to have some difficult comparisons to Q1 and Q2 of 2021. So I guess the question would be, historically, as you look back upon markets, is there, and there seems to be this traditional belief that a change to higher taxes acts as an impediment to stocks moving higher? As you study history, is that accurate?
Well, I don't know about that per se, but I do think one of the reasons why we think as you get into April it could be some headwinds is you're going to have those people coming to terms with long-term capital gains selling post 1 year post the low. So we'll see if that becomes an issue. But as far as the higher taxes, I think if you look throughout history, there's been plenty of times in the market where stocks have done well in higher tax regimes as well as in lower. And you'll find that with a lot of correlations, whether you're talking about rising rates, a higher dollar, all those correlations, there are very few of them that are always one way or the other. There's oftentimes a little bit of both in there.
So, Jonathan, if I could just bottom line this message that you're sending out to investors, I mean, are you instructing people or recommending that they buy the most beaten down tech stocks in anticipation of some sort of a catch-up with growth and value living,
We've actually been recommending within the growth sector, you kind of probably want to avoid some of the real long duration plays, some of the super mega high growth, the SPACs, that super high growth software. I think that's the area of the market that might have more of an issue. I think you still can be in some of the FANG names, the traditional kind of growth, but not hyper growth names. I think those still work, and that's probably, you guys have talked about this a lot. Names like Facebook and Amazon and Microsoft, they've done nothing for 6, 7, 8, 9 months. I think that could be the culmination where you finally get a breakout in those, you get a break, move higher in some of the cyclicals that have already been performing. And again, we'll see if we get there, but that would be kind of the blow off that we're talking about.
All right, Jonathan, great to speak with you. Thank you.
Thank you.
Jonathan Krinsky, Chief Market Technician at Baycrest Partners. Let's go straight to some of these bullish calls because Jonathan's mentioning some of the big cap tech names, the FANG names. Start with Facebook here. This one came out today, obviously. Price target being raised to a new street high, 385 at Deutsche Bank. Shannon, you own it. They're positive on ads for this year, for the first quarter, increasing their first quarter as well as full year 21 estimates. What do you think?
Yeah, I mean, this is a tough stock for people to own, buy, love. I think it's challenging with the ever-present regulatory concerns, the privacy overhang, and just, I think the distaste from the election season, in 2016, and really that rolled through the entire 4 years of the Trump administration, as far as thinking about what Facebook owes to us as users of its interface. And the reality is that they continue to gain ad spend. They continue to monetize the properties that they have. They are under such scrutiny because they have been successful in continuing to take greater and greater share of our digital time. And so for us, as much as we are concerned about some of the regulatory overhang, I do think that they're going to continue to deliver solid results. It's not my favorite of the FANGs, to be frank, but it certainly is in our basket, and I think that we will continue to focus on that because it's going to continue to show us earnings growth and revenue growth, which is what we're looking for in the technology space over the next 12 months.
Weiss, you want to pull back to get in on Facebook. What kind of pullback are you looking for? In Jonathan Krinsky's world, now might be the time to buy it if we are going to see this coincidental rise in both growth and value.
Yeah, I haven't picked a level. I actually do like it. I regret selling it. I sold it not too far from where it is, but nonetheless, I pay taxes on the gain. I'm just looking for a level where you're not seeing price increases by 10% like you saw today. I mean, if you like the stock at 355, you didn't need to go to 385 on a target in terms of somebody to buy it to get in. So it's going to be a general market call. But I'm just waiting for the market to pull back a little bit before deploying any of the cash that I've raised.
I think that's a good point, and I think that goes to the heart of whether or not you believe Krinsky or not. And Josh, I'll go to you. You're friends with Krinsky. You follow his work. You respect his work.
Yeah.
But are you skeptical? I mean, if rates went to 1.7, 1.7, whatever it is, I mean, is this really a rates question, whether or not you can be invested right now in big cap tech, as opposed to, I see growth and value living together like dogs and cats, S&P 500 blows through 4,000?
There's a lot of childish stuff said on this topic. I would remind you that in 1995, the 10-year Treasury rate was like 7.5%, and you still had one of the biggest runs for growth stocks, tech stocks in particular, in the history of humankind. So I don't subscribe to these theories that higher rates are necessarily negative for technology. If anything, I can make the case that rising rates make people even more focused on how they're spending money, and they increasingly turn to tech as a way to cut costs out of the system in a potentially inflationary environment. So I don't buy it. I don't think it's the same thing as saying, however, that business models predicated on earnings 10 years from now, those you probably do see more of an effect. When cash has a yield, when short-term treasuries have a yield, when intermediate-term treasuries have a yield, then there's competition for capital. That just hasn't been the case. The Fed and Treasury are effectively pumping $120 billion a month into the bond and stock markets, and cash yields nothing. So you do have a willingness for people to buy experiments and art projects and NFTs and Monopoly and whatever else. That will go away with a decent yield on cash and on short-term treasuries. But is 1.7% the number? I'm not sure. We saw a lot of SPACs lose their premiums. That makes sense to me. We saw 17 true IPOs last week, of which only 3 of them were above the offering price. That's definitely a different sentiment around new issues. So there is some change with where rates have gone, but I don't think they derail growth investing in general. I think that's a little too simplistic.
May I ask you, Josh, in your historical example, where did rates come from before they rose to 7%? And I don't know this answer. I'm asking because I remember a year ago when rates were a third of where they are right now.
Yeah, you want to be careful quoting things that are already in percentage terms. So rates have tripled, that's true, but on an absolute level, we're not even at the bottom end of the range that we've been in for the last 10 years since the end of the financial crisis. So even in 2018, you had a 3% 10-year. We're halfway back there, and that was in a normal environment. So I would argue the economy is growing as fast, if not faster, than it was in 2018. So if anything, 10-year Treasury rate should be higher. Can the Fed keep rates at the overnight rates at an emergency level as the 10-year gets back toward 2%? I mean, I doubt they'd want to, but maybe they'll try. So that's what the market's pricing in now. That does not blow up the growth trade. It just makes people think twice about funding art projects and experiments with no hope of any kind of cash flow anytime soon. So that's where the pressure is. We see that in prices already for SPACs, for IPOs, for growth names in the Russell 1000 with no earnings. That process is already underway and has been since mid-February, and I think it's healthy. I don't think it hurts the Googles, the Apples, the Amazons. I really don't.
Except that it has. Except that it has. Right? I mean,
no,
Jonathan,
it doesn't hurt their business.
Hey, Mel, can I take a quick crack at it?
Yeah, hold on. Agreed, it doesn't hurt their businesses, but it impacts the way investors may view their valuation. As Jonathan had mentioned, they've basically gone hardly anywhere over the past 6 months. Steve Weiss, go ahead. And by the way, you'll never catch me saying that rates have risen by a certain percent, except to underscore the fact that the trajectory of the rise that we've seen is probably very different from what we've seen in the past. Go ahead, Weiss.
The pace, not the trajectory.
I agree with exactly
You're right. You're right about that.
I agree with what you were saying. I don't believe that it's competition. I don't believe that anybody's going to go to a 2% 10-year because they think it's a competitive rate with equities, that the returns are going to be better. Returns in bonds, if you measure them against equities, has lagged and will always lag. So with the exception of some of the junk that spikes here and there, to me, it's the narrative that controls, and that creates the opportunity. In other words, people think they should react because rates are going up. Obviously, it's a question of pace, how fast they move up, because that gets people nervous. And the Fed is lagging behind, and I think the world knows that. So if the Fed raises rates, sure, it'd be a knee-jerk reaction down, but it's not going to impact those companies. So what Josh is referring to, listing all those things, I'll give you one word: speculative. They're speculative assets that come down, the hype, the late money that came into the market, that's suffering the pain when the first ticks down, and then they sell it, and you go back to reasonable investing. So I think you find opportunity during those periods, because there's no way, frankly, even a 4% 10-year is not going to impact what a Corvo does, what a Moderna does. It's just not going to. So it's and when I talk about the end of this week, you're going to see those bumps in the market, and that's going to create, once again, the opportunity, and that's what you got to go. And ignore the headlines, oh, rising rates are bad. Or to Joe's point, if you look at a chart of income tax increases, there have only been 2 periods where the market's actually been flat when you've seen tax increases, corporate, capital gains, and individual taxes raised at the same time. I think there were 2 or 3 periods over the last 50 years. The market's going up. If it's not going up that day, it's going up the next month or 2 months later. So just stick to bottom line fundamentals and you'll be fine.
All right, we got to take a break here. Up next, it has been called a once-in-a-decade margin call that is rocking the markets in Wall Street. Billions of dollars worth of trades being unwound. The stocks that are getting slammed by and the fears about contagion. Halftime's back in 2.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
We know it's going to take many forms of energy to meet the world's needs while creating a cleaner future for all. At Chevron, we're lowering the carbon emissions intensity of our operations, investing in lower carbon technologies, and exploring renewable fuels of the future. We work hard to care for the homes we love, but it's only human to protect the one we share.
Hi, Joseph Robinette.
Workers really across this country.
That is actually the potential America has always had.
The change might be around the corner. Did you get a sense of what the end game is here?
Do we know here what type of vote we're looking at?
That's just not what the facts are.
3 former intelligence officials said there's no way.
That's the heart of the matter, right?
Good morning, everybody. How you doing?
Here's a hint about how to make working from home less stressful and more comfortable. Make the switch to X-Chair. No matter where you put the amazing X-Chair, it instantly becomes the most comfortable place in any space. Infinite side-float recline and dynamic variable lumbar support make the X-Chair a customer favorite at home and work. Don't forget, the X-Chair lets you customize for the same measure of amazing comfort no matter what your size. And every model is in stock, ready to ship the next day, so you can join the thousands of others who have discovered the joy of working in comfort. Once someone sits in an X-Chair and feels the amazing DVL support, it's almost impossible to get them out of it. But don't worry, you don't have to share, because there's an X-Chair for everyone. And you can get $100 off any model on our website. Your new normal? Incredibly comfortable. Call or click to order today and receive a 30-day risk-free trial and $100 off.
Welcome back. I'm Rahel Solomon, and here's your CNBC COVID update at this hour. In its opening statement at the murder trial of former Minneapolis police officer Derek Chauvin, the prosecution is telling the jury that it will hear a recording of George Floyd crying out as he was being restrained.
You will hear him crying out, and you will hear him cry out in pain. My stomach hurts, my neck hurts, everything hurts. You'll hear that for yourself. Please, I can't breathe, please. your knee on my neck.
Russian hackers were able to access email accounts belonging to Chad Wolf, the Homeland Security Secretary under President Trump. That's according to the Associated Press, which says that the intelligence value of that hack, part of the SolarWinds intrusion, is not publicly known. And Barack Obama's step-grandmother has died at the age of 99. Sarah Obama, who went by Mama Sarah, helped raise Obama's father. She also promoted education for girls and orphans in her rural Kenyan village. That is our CNBC News update for this hour. Melissa, I'll send it back to you.
All right, Rahel, thank you. The investment committee is making some moves in their portfolios. Weiss, you've been pretty busy. You sold 2.6, Bunge, and Teradyne. Why'd you get out of those?
I sold 2.6 because I played it for a bounce. I'd owned it before, and getting into a bidding war was not the best thing in my view. Plus, when you're giving up stock, it's going to be under pressure, under the arb pressure. So I just thought I've got enough exposure in tech there. In Teradyne, same thing. You know, I've got TSM, I've got some other technology stocks, just looking to ratchet back there. In terms of Bunge, I've added cyclical exposure, and Bunge is one that sort of failed to break out. It was more of a trade in the commodity inflation cycle, and I just chose not to hold on to it. So I've got my exposure there as well.
Joe, you bought some names, Score Media and Gaming.
Yes, and before we talk about this, what I don't want the viewers to do is race out in the next 20 minutes and play a game of leapfrog to try and get into the stock. I want you to get into it ultimately. I took a small position in it. The ticker symbol is SCR. It recently IPO'd on the NASDAQ. It's a Canadian company that's focused on digital sports media and online gaming. Ultimately, within Canada, they'll probably see 20% market penetration as it relates to online gaming, and the ability to grow their market share here in the United States is significant. They just entered into a partnership with Caesars, so now they're going to have an online gaming presence in Illinois. I believe online gaming is going to offer the solutions to municipalities and states and the ability to grow their revenue. So you've got DraftKings, you've got Penn Gaming. This is a very small company. I think it's $1.5 billion in market cap. I took a small position.
Can they all win, Joe, in your view, or is this survival of the fittest?
Well, you only have about 13 states currently that have the ability to have online gaming. So I think ultimately the growth opportunity for further states, whether it's Texas, Georgia, that will present itself in the near term. And I think during that period that, yes, multiple companies can be winners in this environment. And ultimately, when that ends, Melissa, I think that's where consolidation comes into play and companies begin to recognize value through reaching out and acquisition.
All right, that stock taking higher. Actually, intraday session highs at this point up 5%. Josh bought some more Simon Property. Why, Josh?
Because I'm a baller. Why else do I do everything
well,
I do?
that's yeah, of course, obviously.
I'm the opposite of a baller. I took a very timid position in Simon in the 60s, and I should have been bigger. So I'm making up for that. I actually doubled up. I'm adding to the stock 70% or so higher than where I first started buying it. But I feel very comfortable doing that because I think their business is returning by more than 70% from when I got into the stock. There were people talking about every mall in the country going to zero, and of course that's not going to be the case. These are A malls. They have over 90% of tenants current on their rent, no problems. They obviously have some space to fill, some big anchor tenants, but that's just the state of the industry. I don't expect the stock to get back above 200, but I think a nice total return, if it gets back to 150 plus the yield it's paying me right now, I will be very happy. I would also note for viewers that I own this in a tax-deferred account. I do not want these REIT payments to me being taxed at ordinary income. So I own this in an IRA, which is how I try to tell people if they have that flexibility to buy their REITs. So this is one of my favorite names right now, the ongoing suburbanization of America. This is the new town square, and I think the financial flexibility this company now has is even better shape than they were going into the pandemic, and I think it'll work.
The new town square, that sort of resonates as somebody who grew up on Long Island. Josh, thanks for that. We want to get to development.
You're North Shore, right?
Yeah, great, Nick. More developments are surfacing behind the trading volatility that saw Viacom, CBS, and Discovery shares lose nearly half of their value last week. Leslie Picker and Dom Chu following the money on that story. We start off with Les.
Hey, Mel, that's right. Bill Huang was practically an unknown entity up until this weekend, and now his towering risk tolerance has caught the ire of regulators and counterparties and may be partially responsible for billions of dollars in losses at large bank. Huang is the face behind Archegos Capital Management. It's a family office, not a hedge fund, but it's one that is said to have taken an exorbitant amount of leverage, concentration, and liquidity risk. When the market turned against him in recent weeks, he faced a multitude of margin calls, causing the banks to sell his assets in a variety of names, including, as you mentioned, Viacom, CBS, Discovery, and a group of Chinese technology companies. Huang has not returned my calls seeking comment. Some of his trading, though, was done via swaps, which gave him the capacity to be even more levered without the need to disclose what he's holding. And he worked with at least 6 prime brokers that we know of, none of whom had a full picture of his exposure. That's kind of the way these things work. Now, Credit Suisse and Nomura have each said that they are facing material losses. Others, such as Deutsche Bank and Goldman, appear to be in better shape. That's also the case with Morgan Stanley, which I just learned has been telling investors it sold $15 billion worth of blocks in the last few days. It has no more blocks to do, and the firm has not incurred significant losses as a result of these transactions. That's according to a person with knowledge of the matter. Mel.
So, Leslie, Huang worked with 6 prime brokers. It sounds, and none of them had an idea of what the full picture of risk was. So basically, do you think that he just didn't divulge it to them in order for each of them to extend that sort of leverage to him?
That's the sense I get, that he didn't have to, he chose not to, and he wound up taking an amount of risk that most people would think outside the realm of possibility. That's according to people who I've spoken with who are familiar with these kinds of things. And so it's one of those things where it would go against the trust of the prime broker to, go to another PB and say, hey, what are you seeing with this guy? It's kind of one of those things that's usually kept kind of closer to the vest. And so because of that, and because of the lack of disclosure here, no one really knew the amount of risk that was being taken, and therefore they weren't able to foresee what ultimately happened.
Wow, there are many levels here where there's just lack of transparency. This is just so fascinating. Leslie, thank you. Let's get to Dom now on some of the other stocks impacted by the margin call fallout. Dom.
When you're using derivatives and swaps, that transparency always comes into issue here. But where we are seeing a lot of the picture play out is certainly in the public stock markets. Specifically, let's start with the ETFs on the bigger picture macro side of things, Melissa. If you look at the Crane Shares CSI China Internet ETF, that's an ETF that tracks many of those big names like Alibaba, Baidu, and whatnot. It's been caught up in this kind of huge downswing in these stocks just over the course of the past few weeks or so, much more than what's happened with the Chinese large cap stock ETF. You can see there, yes, a decline, but to lesser of a degree here. If you take a look at the movements within some of the names that we've actually seen play out in this Archegos-related trade, it has been Tencent Music, Baidu and VIP Shop. On a one-year basis, you can see their massive moves higher. But here, on this right-hand side of things, just in the last 3 to 4 trading days, we've seen 30–40% drops in just some of those names from their recent highs. That's how big of a deal it was. It's created some dislocations in the market, certainly from a technical basis, a lot of the forced selling. And by the way, it's translating intraday still as well. Tencent Music says they're going to buy back $1 billion of their own stock. The bid was there early. It's faded a bit now. Discovery Communications and Viacom CBS, they're trying to find some stability here amidst that selling pressure tied to this. And Credit Suisse still down 12%. So the question becomes, at what price do these things go on sale? Enough, Melissa, to warrant them a buy. Back over to you.
All right, Dom, thanks. Dom Chu. Up next, the big ETFs to watch today. Halftime reports back in 2.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V. only at the Honda Dream Garage Spring Event.
Here's to the doers. To all the people who realize they can do more with less asthma. Thanks to Dupixent, the add-on treatment for specific types of moderate to severe asthma. Dupixent isn't for sudden breathing problems. It can improve lung function for better breathing in as little as 2 weeks and help prevent severe asthma attacks. It's not a steroid, but can help reduce or eliminate oral steroids. Dupixent can cause serious allergic reactions, including anaphylaxis. Get help right away if you have rash, shortness of breath, chest pain, tingling, or numbness in your limbs. Tell your doctor if you have a parasitic infection. And don't change or stop your asthma treatments, including steroids, without talking to your doctor. Are you ready to do more with less asthma? Talk to your asthma specialist about Dupixent. If your financial situation has changed, we may be able to help.
We're for those who love to discover, who know an open mind is the only kind, who don't need to travel to find something new, who know where to escape, even just for a moment, who don't need a fortune to find a gem, and who know when you spend less, you can discover even more, and never, ever stop discovering. Spend less, discover more. At TJ Maxx and Marshalls.
At Fidelity, you'll work with an advisor to help you build a flexible wealth plan. You'll have access to tax-smart investing strategies. And with brokerage accounts, online trades are commission-free. Personalized advice, unmatched value. At Fidelity, you can have both.
I'd just gotten my first sommelier job at a fancy restaurant in upstate New York. I invited Mom and Dad to come in for dinner, and I remember seeing them pull up in their old pickup truck. I bought my dad the biggest steak on the menu and a nice bottle of Cabernet Sauvignon. My way of thanking him for all he'd done for me. And I felt a lot of pride that night. Who knew that many years later I would create Josh Sellers as a tribute and a thank you to my dad.
Today, 1 Eastern.
Welcome back to the Halftime Report. Dom Chu is here with today's ETF Edge.
All right, so Melissa, we mentioned those ETFs, these Chinese tech stocks rocked by that bevy of bad news last week, primarily massive liquidation by hedge fund Archegos Capital, but also concerns over rising regulatory scrutiny both here in the U.S. and overseas in China as well. So the Crane Share CSI China Internet ETF, ticker KWEB, we just looked at it. It took a serious beating, falling nearly 12% in 1 week. It's on pace for its worst month ever, but is now the worst of the selling over, or is there more pain to come? Let's ask Brendan Ahern, CIO of Crane Shares. He runs the K-Web along with Tom Lydon, CEO of ETF Trends. Brendan, let's start with you here. What is going on and how much of the trading in your ETF is being driven by this Archegos situation?
Well, Dom, since the end of 2018, K-Web is still up 100%. We've had a very severe correction where we're now just learning that this terrible behavior by a reckless individual has put a very negative effect on our shareholders. So we certainly hope regulators will respond and stop this type of activity. But ultimately, we're just right back to where we were at the beginning of the year. We're actually flat year to date. We had a very outsized move, and unfortunately, we've given some of that back. But we're very optimistic on the long and medium term on the K-Web companies.
I mean, those Chinese internet stocks are a huge focus here. Tom, I turn to you here. Is this going to be something that shakes perhaps some of the confidence in the ETF market as well overall?
No, Dom, it's one of those things that happen. It's like the boat in the Suez Canal. You never know what's going to happen. But last week was a bad week for saber rattling between the U.S. and China. Biden was pretty open about making sure we had fair competition. China's got a lot of pressure on companies to do well, and they want their skin in the game, their pound of flesh as well. I think to Brendan's point, these stocks are not going away. They're some of the most innovative companies in the world right now, and they're not going to slow down. So it's definitely a buying opportunity.
All right, Tom Lydon, Brendan Ahern, thank you very much. By the way, Directions head of product joins the conversation at 1:10 p.m. Eastern time on etfedge.cnbc.com. A couple must-watch interviews. Don't miss it. Watch us. Halftime is back after this break.
ETF Edge is sponsored by Invesco. Let's invest in greater possibilities together.
In Peytonville, there's lots of ways to save on auto insurance.
Really?
Yep. Very proud of that. See Mrs. Carmichael? She gets a discount for safe driving.
What about this guy?
The less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet.
We see temperature control software giving everyone a shot at vital vaccines. At Emerson, our software is shepherding medicines through every step of the cold chain, helping track conditions to keep each dose safe and effective. Emerson, consider it solved.
Will there be an EV for me?
What about me?
One for me? You mean us?
What about me?
And me?
How about us? Yeah, how about us?
Great question. Wait, can I get one in green?
Got one for me?
Hey, what about me?
What about us?
Is there an EV for me?
EV for me?
Us. What about me?
Me? For me?
Oh. The At Work Summit is an opportunity to think about the future.
March 30th, join Reid Hoffman and Game Changers in Innovation. Register now at cnbcevents.com/work.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V. Only at the Honda Dream Garage Spring Event.
Here's to the doers. To all the people who realize they can do more with less asthma. Thanks to Dupixent, the add-on treatment for specific types of moderate to severe asthma. Dupixent isn't for sudden breathing problems. It can improve lung function for better breathing in as little as 2 weeks and help prevent severe asthma attacks. It's not a steroid, but can help reduce or eliminate oral steroids. Dupixent can cause serious allergic reactions, including anaphylaxis. Get help right away if you have rash, shortness of breath, chest pain, tingling, or numbness in your limbs. Tell your doctor if you have a parasitic infection. And don't change or stop your asthma treatments, including steroids, without talking to your doctor. Are you ready to do more with less asthma? Talk to your asthma specialist about Dupixent. If your financial situation has changed, we may...
And food service ordering, but it's trading near peak multiples, and I think that it's going to take a little while for the earnings to recover to justify those multiples. So we actually swapped this out for Mondelez a couple of weeks ago.
Okay. Let's get to one for Weiss from Tony in California. In your opinion, what is the best cyclical stock to buy right now and why? What do you say, Weiss?
Well, I think you have to look at what's not traditionally regarded as cyclical and go back to Skyworks, go back to Corvo, because they're in everything. But the one I added to today was U.S. Concrete, USCR, the infrastructure plan, but also the taxes, the tax hit to municipalities was not as great. Roads are in terrible shape. They're going to rebuild them anyway. They're aggregates, they're concrete. I like this one quite a bit.
All right, last one for Josh from Steve in Toronto. Is Madison Square Garden Entertainment a buy? What do you say, Josh?
So I don't own this. I've been watching it and talking about it as a reopening play. But last week, the story very drastically changed. They are going to reacquire, I guess, or remerge with Madison Square Garden Networks. So MSG Networks is like the New York, I guess, super regional television network that broadcasts Knicks, Rangers, and other stuff. So these two things had been broken apart. Now they're coming back together. I haven't really done a deep enough dive into what this really means for shareholders of the parent to have a strong opinion here. But I would say it's not as clear a pure play on the reopen as it once was if now they're going back into broadcasting. Now, they did say they think there's a really strong reason to do that around gaming becoming legalized across the country, and they might be right on that bet. But I have to research this more before I could say anything definitively.
All right. Up next, the committee gets ready for the big earnings of this week, including Lululemon, Micron, Walgreens, and much more. Halftime's back right after this.
How'd you come up with all these elaborate backstories?
Glad you asked. I got help from a pro. My financial professional even explained how Nationwide Solutions could help Mr. Paisley retire early.
I'd spend more time with his pal Peyton, right?
I'm glad you feel that way.
Tell someone you're a financial advisor, and they think you only work with money. But my job is working with people. I give them personalized advice to help them make it through today's challenges and stay focused on tomorrow's goals. Ameriprise Financial.
I can get pretty grumpy when my footwear doesn't have proper support.
Come on, batteries. I need a little juice here.
Oh, you call that pressure?
I'll show you pressure.
Luckily, I got Skechers Arch Fit that gives you the support we all need. Try Skechers Arch Fit, certified arch support.
I really hope that this vaccine can get me one step closer to him.
To our huge wedding.
To give high fives to our patients.
To hug my students.
With every vaccine, CVS is working to bring you one step closer to a better tomorrow.
We see increased efficiency connected to more comfortable homes. Emerson's Energy Star certified Sensi Smart Thermostat uses geofencing to simplify how homeowners manage comfort and costs. Emerson, consider it solved.
Sometimes you want speedy, but reliable. State-of-the-art, but dependable. In other words, you want a hybrid. So do telcos. That's why they're going hybrid with IBM. A hybrid cloud approach with Watson AI helps them roll out new innovations anywhere without losing speed. From telco to transportation, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
Good work, little buddy.
I look for the WELL Health Safety Seal at my favorite places.
It means health and safety measures have met rigorous scientific standards.
Look for the WELL seal.
Look for the WELL Health Safety Seal outside and feel safer going inside.
Lululemon is set to report earnings tomorrow. The stock is up more than 60% in a year, but down 10% year to date. Joe, you own this one.
I do. Listen, it reached its peak back on September 2nd. It's fallen back ever since. Nothing's changed about the company. You're still going to get sales growth in 25, 30%. It's got the brand recognition. It has the digital experience, and revenue since September 2nd is reported in each of their earnings. It's been incredibly strong. The problem is, going back to the top of the show, this is a stock that's identified as a classic momentum name, a hyper-growth-oriented consumer-facing business, and that's not favored right now. That strategy is actually unfavorable with investors. So I'm going to sit in the name, but I'm also going to understand that even a strong earnings report, which you're probably going to get, is not going to move the stock significantly higher.
Shannon, the comments are interesting that you wrote about Lululemon. It's good, but you think it's very trendy and expensive, which is exactly the way I think about my one pair of Lululemon leggings that I own. But why do you still own it then?
I actually don't own it, Melissa.
Oh, you don't?
And
Okay.
I feel like I missed this. No, but I feel like I missed it, and why I felt like I missed it was because there was definitely an opportunity to pick up on some of these work-from-home trends, and I think Lulu absolutely benefited from that. Now we're seeing, a bit of a trend down. I still think if you're interested in specialty retail and adding that, that's not a place I love to play in, but this is a good brand name, but I do think that there's probably a better entry point than you're seeing right now, despite the relative weakness as of late.
It sounds like Josh is in the same camp, Josh, so what kind of pullback would you look for?
So, I mean, it's had a decent-sized pullback already, more than 20%, but this is still $40 billion market cap on $4 billion in sales. And I could tell you, if you look at apparel retailers, 10 times sales really does not exist outside of Lulu. Now, what they have going for them is they just own this increasing segment of the consumer, and they're doing so well in men's, better than anyone would have guessed, and that continues, and there's still a lot of room. There's also only like 500 company-owned stores. So I can picture, and that's in 17 countries, I could picture there being 1,000 Lululemons one day. So I guess if they report a number that the street is either not excited by or disappointed by, and they really kill the stock, that would be an opportunity to buy for me, not an opportunity to sell out of it if I owned it and were somewhat disappointed. So that's the way I'm thinking about it. Who knows? You might see this on my disclosure someday soon.
All right, we'll be watching, of course. Final trades next on the Halftime Report.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V, only at the Honda Dream Garage Spring Event.
At Fidelity, you'll work with an advisor to help you build a flexible wealth plan. You'll have access to tax-smart investing strategies, and with brokerage accounts, online trades are commission-free. Personalized advice, unmatched value. At Fidelity, you can have both.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V, only at the Honda Dream Garage Spring Event.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Go at no cost to you. Act now.
We see breakthrough medicines getting to patients in record time. At Emerson, our automation software is empowering pharmaceutical companies to accelerate the production of critical vaccinations for the world. Emerson, consider it solved.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world, delivering medical supplies where they're needed, keeping our armed forces at the ready, cleaner, safer energy, all thanks to 1 billion predictions per day. C3.ai is AI at a global scale, harnessing the power of data to build a better future. C3.ai. This is Enterprise AI.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee, a stronger bond.
I've spent my career helping others make their dream homes reality. But I'm not an expert at creating my own financial plan. That's why I have an advisor from Ameriprise. His advice helps me envision my future and build it. Ameriprise Financial.
I really hope that this vaccine can get me one step closer to him.
To our huge wedding. To give high fives to our patients.
To hug my students.
With every vaccine, CVS is working to bring you one step closer to a better tomorrow.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech from Fidelity. You'll get proactive alerts from market events before they happen, and insights on every buy and sell decision. with zero-commission online U.S. stock and ETF trades. For smarter trading decisions, get Decision Tech from Fidelity.
Let's meet the defending champs.
Kim Keats, investor. I invested in Invesco QQQ, a fund that invests in the innovations of the NASDAQ 100, like 3D rendering software.
Become an agent of innovation with Invesco QQQ.
We see smarter software delivering cleaner power. Emerson's breakthrough technology enables the power industry to integrate renewable energy sources to modernize and improve the electric grid. Emerson, consider it solved.
Final trades, Joe Terranova.
I'm criticizing myself by giving this final trade. I haven't owned Facebook. What if the ticker symbol for Facebook was Graham, G-R?
As always with today's markets, Dom Chu has that.
Trying to find some stability, John. That's what the markets are trying to do right now because of that big hedge fund implosion. You'd think the markets would be trying to trend a little bit lower. They have been, but modestly so. The Dow Industrials, by the way, up about 60 points. That's the highs of the day. We were down about 167 roughly at the low, so that gives you an idea of the overall trading range for the day. Just about flat for the S&P 500. Remember, these two hit records on Friday. The NASDAQ Composite underperforming, down about 1/3 of 1%. Chinese internet stocks at the epicenter, arguably, of that massive liquidation that we saw tied to Archegos Capital. The Crane Share CSI Internet ETF, ticker KWEB, is off about 1% right now. But this particular ETF houses many of those names that we've talked about. Possibly Baidu, possibly VIP shops, VIP shops, possibly Tencent Music. All of those names in focus here. This ETF is now down pretty markedly just since the highs that we saw earlier in the year. And then some of the other names that are tied to this: forced liquidation, U.S. media stocks that have been the darling for months now. Viacom, CBS, and Discovery Communications, both you can see here, huge gains over the last year. But it's this part that's catching everybody off guard here. That's massive move lower. We are seeing some folks come out and say maybe things have gone too far, too fast to the downside. So we'll see whether or not there are bargain pickers up there. But, John, still not a lot of transparency with regard to how much further this could go, given the ramifications and ripple effects out of Archegos and its prime brokers. Back over to you.
Yeah, seems like a bit of a theme, Dom, for a number of things in the market so far this year. Thanks. So as investors deal with the fallout from billions of dollars in forced selling, how did we get to this point, and does the volatility signal a systemic risk to the markets? For more, I'm joined by Kate Kelly, reporter at the New York Times, and Herb Greenberg, partner at Pacific Square Research and a CNBC contributor. Hey, we're all at CNBC again. It feels like I'm in a 7-year time warp, which is in a good way. Herb, it's a hedge fund trade that we didn't see coming. It has ripple effects leading to volatility. Not the first time we're hearing that in 2021. So which is more significant, you think, Archegos or the GameStop short squeeze we saw not too long ago?
I don't think you can say which it will be because, or which is more significant, because I think each one is just a little more of a chip at market structure. Each one is telling you something is off. And I think that, so this is the latest one. And, even the smartest people I talk to on this, and we're talking to my friends who know the markets, who know much better than I do because they participate, they're sitting here scratching their heads, but they're all saying, yeah, we see it coming. Because remember, whatever is going to happen, when the market goes, if the market goes, it's always going to be something out of left field. I've been saying that for the longest period of time. And you have people gaming the system, gaming each other, and each one is thinking they won't be left holding the bag. So there's always somebody who's coming up with something new and some other way to sort of, push their own returns in this market. I mean, look, I had one guy I was talking to this morning, and he's trying to figure this out. And he says, tell me, I thought they were long, so how's there a margin call? And he was trying to just figure it out intellectually. So I think there's so much people don't know about this. We don't know if it's the first, the second, the third, the last for some period of time. Yeah. But we know it tells us something about the structure of this market.
I'm still trying to figure out what it does tell us, Kate, especially because it seems like another case where there are rules that were supposed to have prevented this. There's supposed to be disclosures when there's this big of a potential impact, but none of that seemed to happen here, right?
Right. Well, I think one interesting thing is these banks have to do regular monitoring of their prime clients, right? If they're going to be lending them money, there's a whole know your customer process that involves a ton of paperwork and a ton of exchanges every year. And then there's ongoing monitoring of the funds, their assets, their cash positions. I think we know as of today that Nomura and Credit Suisse are potentially facing significant losses. Credit Suisse hasn't quantified them. Nomura has said it could be up to $2 billion. Goldman Sachs has said that the losses they anticipate or have seen so far are immaterial. Not much word out of Morgan Stanley. But I think you can see already there's a little bit of a divergence here between different banks and how they did their risk management. So that's one thing to note. And I think there probably was quite a lot of disclosure from Archegos to these funds, these banks rather, but they have only so much control over whether Archegos, for example, is going to sell off a losing Viacom stock, which turns on a dime. And I would agree with Herb that, it's kind of early days on the Archegos situation. It's kind of hard to know whether that's going to be more or less significant than GameStop. As we sit here right now, it seems less significant, but there could be more things to come out of this. And what they both are about in a very broad sense is market volatility, stock market volatility right now, unexpected drops. The fact that a Viacom CBS tanked in a few mere days without clear evidence as to why that happened fundamentally is the kind of market we're seeing in 2021.
And Herb, I think a lot of retail investors, especially the newer ones, might not have a sense when they buy into a stock of whether it's worth that to begin with. It seems like the baseline assumption seems to be, well, the stock is fairly valued here, and if I think it's a good company, it should go higher. I mean, is this in a way a warning, right, to every retail investor that you've got to understand fundamentals and you got to understand the story here because you never know who else is holding this or dumping it in the short term?
Well, it's another warning. It's just another warning. The question is, do they want to listen? I mean, Jason Zweig had this great story in the Wall Street Journal over the weekend in his Intelligent Investor column about, this is a bull market built on dumb money to some extent where people are just saying, hey, I don't really care. I'm just going to buy it. And that seems to be, this phase we've been in, certainly much of last year, because remember, it was so easy to make money. And so people just felt, hey, I just want to be part of this. But now they're seeing there is some risk. And so even doing what I do, which is short biased research, you're starting to see some discrimination. You're starting to be able to breathe again and say, okay, we can start doing real work again because people are paying attention. But those other people who think it was so easy, they are going to learn. It's not they may learn. They are going to learn. And this is just another indicator that it is a lot tougher than it appears.
Well, Kate, if we look at the rings in the market tree, right, to mark time, is there something that this sort of a groove tells us about where we might be in the market? I mean, Herb is talking about this being yet another signal that maybe this time isn't that different, that things will get back into a normal kind of cadence, perhaps, if I'm interpreting Herb correctly. Have there been other times when things like this have happened that have signaled something about where we are?
Right. So does this tell us where we are in a certain cycle, and what are the historical precedents, if any? Like some people are comparing the Archegos situation to LTCM. I don't know if it's quite that dramatic. John, I'm inclined to say no, because I feel as though what's happening right now with retail investors, people in this very unique situation where for all this year, we've had a pandemic, they've been quarantined, a lot of people have time on their hands. Of course, there's been a ton of economic distress, but there are some who have some additional disposable income and nothing really to do with it in terms of going out and attending events and traveling. So they're spending it on stocks. You also have this cultural movement going on, which we did see with the GameStop event, where there's this kind of stick it to the man mentality. One person I interviewed when I was covering GameStop was my friend's 12-year-old son, who got really interested in Wall Street bets and all the possibilities of the Robinhood app, where you can apparently buy like a fraction of a share and you can use leverage. And he was playing not with a ton of house money, but got really into it, was really following the story and hadn't done his research on GameStop, but just wanted to be part of the kind of action. So I think we're seeing this really somewhat unprecedented period in terms of these individual investors in the market. Maybe you could compare it to the tech bubble. I remember my colleague Susan Pulliam at the Wall Street Journal used to check in with this barber shop that was on Cape Cod in Massachusetts, where they were investing in tech stocks and discussing their investments. She would go up there like once a quarter to see how it was going. So it's interesting and sort of unpredictable for that reason, but I'm not sure it's as much of a cyclical indicator as it is about some of these unusual forces coming together at the same time.
Herb, I don't know if you have...
more.
Yeah, go ahead.
Go ahead. No, I was going to say there's one other thing going on here, because we start talking about market structure, and in addition to all of the other things, we talk about the retail investors, we talk about the leverage, we talk about the regulators, where are they, and looking at some of this, but we also have the passive investing. And the passive investing is part of this whole market structure dynamic that is going on that you can't look at it. I'm talking about the ETFs owning so much and so controlling, is so there's no discrimination in what they own. But again, this kind of thing starts to shake that and starts to again test the mechanics of that part of the market, which has just had a free ride during the entire bull run.
That's right, because you might see a GameStop run up as an isolated one-off situation, which of course it wasn't. But if you're holding a passive indexed ETF and suddenly GameStop is a huge proportion of your exposure, when it falls, your retirees and your other less active investors could get hurt.
Can't help but wonder what's going to happen when people who have been focused on the little screen with not much else to do, hey, the economy's opened back up, are they going to sell to go buy those concert tickets? Perhaps we'll see. Herb Greenberg, Kate Kelly, thank you.
Pleasure.
Let's turn now to the broader markets. Stocks starting the day lower, but clawing their way back right now. The Dow and S&P are both in the green. The NASDAQ just shy of that. Investors digesting the margin call meltdown and rates that continue to rise. Let's talk about where we go from here. Joining me now, Barry James, president of James Investment Research, and Alan Boomer, chief investment officer at Momentum Advisors. Guys, good afternoon. Alan, does this Archegos situation shift at all the way you look at investing for the year?
Thanks for having me. No, not for the year. I think it just highlights an area that might need some additional regulation. When you think about Bill Wang, I mean, for one, he was able to skate some regulations by, number one, registering as a family office. Number two, he's involved in swaps, which are not required in 13F filings. And so the market kind of did not know what this guy was up to, even though we do know that he was confirmed to have done insider trading, almost 10 years ago, right? And so this is, I think, a one-off, but I think it will impact regulations moving forward, or it should. And I think, some of the investment banks, were a little lax with regards to their risk management and their own hedging. And so it's a blip. I don't think this is a major, major thing, but certainly it's causing some downside and maybe some buying opportunities in the market right now.
Well, let's talk about buying opportunities. Barry was just talking to Herb Greenberg, who was saying that maybe some fundamentals, some sense of that coming back into the market. Do you think that's happening? And if so, what does it mean for how you need to analyze stocks?
Yeah, if you're going to be in Shark Week, like we are in this situation, you want a nice big boat. And the boat that I would be going around in is one that is focused on value and the cyclical nature of the economy right now, and even smaller stocks, the things that have been ignored for so long. Since October, we've really seen value really outperform, whereas it was, you know, on a difference basis down 30% compared to growth last year. So those would be the things that I would be looking at. So small, I like Innova. Medium, I like Pioneer Natural Resources, and large, I like Caterpillar, all in that cyclical realm, a little bit on the finance side, the oil side, and of course mining. So those are all really strong. We have those in our Golden Rainbow Fund, so we got a lot of belief in them.
Yeah, Alan, you would point out that COVID news and headlines used to weigh on the market. Now it's a bit of the opposite, at least for some stocks. But I look at names like DoorDash, for example. They're down, what, more than 45% from the highs. So if we're having a rationalization of what's happening in different cohorts of stocks, do investors need to think about upside and downside for some of these?
Yeah, I think you bring up a good point. You know, we're in sort of a re-rating period, you know, and the economy will reopen. I'm starting to see evidence of that. I went out with my family for the first time in 12 months just last night, and I got to a restaurant, and the restaurant was packed. I mean, not 100% capacity, probably 50% capacity. There were people waiting in the lobby. And the parking lot was full of people who, you know, normally they would have ordered DoorDash, but instead they ordered the food and picked it up themselves. You know, you're starting to see people getting out of the house. You're seeing human beings roaming the earth again. And it's a good thing, you know, but I do think that, you know, value is really important. You know, I know you look at this year, you know, value stocks are up 12%, growth stocks are kind of flat. And that's part of that re-rating, that reopening story.
Yeah, it kind of feels like we're sending out a dove and it's coming back with appetizers, which would be a good thing. Barry, you think volatility is going to continue. How does the investor position her or himself to benefit from that?
Well, it's an opportunity. That's the way you have to look at it. When you see the market pull back, then to do some advance. We think the market's going to continue to go up. I know Kelly was surprised last time I said that, but it's been true so far. You know, cheap money and lots of money flowing in, stimulus and the like. But the volatility is going to stay around. You look at turnover, people turning stocks over. Their holding period's about the lowest ever. You have, you know, nobody shorting stocks hardly anymore. The VIX is very low, so that is going to ensure that we're going to see this air pockets, if you will. So that's the time to move in, and especially in those small stocks, which have had an incredible run. Let them settle down a little bit, and then you can move in.
Okay. Okay. Specific advice, sound advice. Barry James, thank you. Alan Boomer, say hi to my high school friend Janelle for me.
I will.
And coming up, stuck. That seems to be a popular word in shipping these days. Products stuck at California ports. Ships stuck at the Suez Canal. We will speak with a retailer who took a different route to avoid all that. Manufacturing in the U.S. And let's take a look at the financials right now. Yields may be rising, but the sector is not. Morgan Stanley, Citi, and Wells Fargo among the worst performers. The exchange will be back in 2.
This is The Exchange on CNBC.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform, plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are...
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V. Only at the Honda Dream Garage Spring Event.
Advanced non-small cell lung cancer can change everything, but your first treatment could be a chemo-free combination of 2 immunotherapies that works differently. It could mean a chance to live longer. Opdivo plus Yervoy is for adults newly diagnosed with non-small cell lung cancer that is spread and that tests positive for PD-L1 and does not have an abnormal EGFR or ALK gene. Opdivo plus Yervoy is the first and only FDA-approved combination of 2 immunotherapies. Opdivo plus Yervoy equals a chance for more starry nights, more sparkly days, more big notes, more small treasures, more family dinners, more private desserts. Opdivo and Yervoy can cause your immune system to attack healthy parts of your body during and after treatment. These problems can be severe and lead to death. See your doctor right away if you have a cough, chest pain, shortness of breath, irregular heartbeat, diarrhea, constipation, severe stomach pain, nausea or vomiting, dizziness, fainting, eye problems, extreme tiredness, changes in appetite, thirst or urine, rash, itching, confusion, memory problems, muscle pain or weakness, joint pain, flushing or fever. These are not all the possible side effects. Problems can occur at the same time and some more often when Opdivo is used with Yervoy. Tell your doctor about all medical conditions, including immune or nervous system problems, if you've had or plan to have an organ or stem cell transplant or received chest radiation. Here's to a chance for more horizons, a chance to live longer. Ask your doctor about chemo-free Opdivo plus Yervoy. Thank you to all involved in our clinical trials.
No cost to you. Act now.
Welcome back. At a time when many companies are looking to cut costs or adjust supply chains, one retailer is living up to its name, American Giant. Its supply chain is right here in the U.S., and that's helped it get through the worst of last year's economic crisis. At the start of the pandemic, it pivoted from making hoodies and leggings to masks for frontline health care workers, and it has scrambled as demand has snapped back. Let's welcome Bayard Winthrop, founder and CEO of American Giant. Bayard, great to have you. You and I were just talking last week, and I was like, really got to get this conversation on CNBC. I remember seeing you make this pivot, but you say demand has come back so strong that, inventory just isn't there at the level that one might expect. It's something that we're hearing across the economy, but for a primarily digital online player like you, you've been able to be nimble.
Yeah, we have, although, some of that was self-inflicted, John. It's hard to forget to remember this far back now, but, we moved aggressively early in the pandemic to cut our supply chain back to sort of get ready for what we thought was going to be a bad year. And then as volume picked up, we've been in kind of a scrambling and chasing posture ever since. It's been easier doing that domestically, but it's been a challenge.
So you make comfortable clothes, which kind of works well for people who are stuck at home or at least close to home. And you had a model where you are primarily online with a few retail locations. How is that going to shift coming out of the pandemic? What are you going to do with bricks and mortar?
Yeah, so I can tell you what our perspective about it is. We are a believer that we are going to snap back quickly. We think that the second half of the year is going to be very strong. We are getting aggressive in retail. We're trying to open up retail locations when we find leases and locations that we like. But the underlying bet there is that consumer demand is going to continue to remain strong and is going to actually accelerate through the second half of the year. So we're getting on our toes with retail. What has happened
to that domestic supply chain, though, in this past year? I mean, you're unique. You make clothes under the American Giant label. They're made here from materials sourced, cotton sourced in the U.S. What has happened to some of the mills from some of the different suppliers who you've worked with over this period of time?
Yeah, as you say, John, we have a very diversified supply chain, all of which is domestic, from the cotton in the ground all the way through to the finished product. But it's been a mixed bag. You find that some of the smaller family operations have had a hard time with weaker balance sheets. Have had a hard time navigating the uncertain environment that we've been in. But on the larger end of the spectrum, some of the larger organizations that have invested in technology and stayed in front of the technological and automation curve have done quite well. So we've had a couple of our suppliers fall out that has caused us to scramble in our wovens bottoms business, for example. We had a key factory that went out of business. So it's been a mixed bag, but the people that have stayed in front of it and stayed aggressive about investing in their capacity have weathered quite well, and I think are poised to accelerate through the second half of the year.
So let's take a step back and talk a little policy. You have so much, all of your supply chain domestic, so you've got a great view on this. What's needed to really support and even grow the efforts of those various sorts of businesses that are in your supply chain, looking to have jobs here, looking to grow opportunity here in the U.S.?
It's a great question, John. I think it's a varied answer, but at the core of it is, I think we need more predictability on the supply chain side of things so that the supply chain components can invest in technology and can invest in scale. And so I think that policymakers have a role to play there as the Biden administration begins to think a little bit more thoroughly about beefing up supplies from the United States. Retailers, you see Walmart's announcement that came out a couple of weeks ago about their big Buy in Made in America initiative. I think as retailers begin to take a leadership position there and require their suppliers make things in the United States, that helps. I think consumers have a role to play as they begin to get a little bit more cautious and aware about where their things are being made that they're buying. And finally, I think brands need to lead so that when you have people getting caught up in either what's happening in the Suez Canal right now or the Xinjiang situation in China, I think brands need to recognize that the global supply chain is more fragile, a little bit more fraught than they realized, and begin to take the lead domestically as well. So if those things come together, I think that will provide a setting where the manufacturing sector can continue to thrive and grow in the coming years.
Quickly, if you can, what's the best technology investment you made that helped through the past year?
It's a great question. It's probably an investment in manufacturing engineering to get our people more efficient, but we've also made some investments in automation, like automated marker makers and cutting machines that have reduced man hours and allowed us to be a little bit more precise in our fabric yields and things like that. So on the people side and on the technology side, both have helped a lot and have kept us doing quite well.
All right, a great look inside Made in America for this period of time. Bayard Winthrop of American Giant, thank you.
Thanks, John.
And coming up, the federal housing moratorium was expanded today, and while it's good news for some, it's having a big ripple effect across the entire market. We will tell you the good and the bad. Plus, Kathy Wood heads to space with a new ETF. We got the details. Be right back.
We made USAA insurance for veterans like Martin. When a hailstorm hit, he needed his insurance to get it done right away. USAA. What you're made of, we're made for.
We know it's going to take many forms of energy to meet the world's needs while creating a cleaner future for all. At Chevron, we're lowering the carbon emissions intensity of our operations, investing in lower carbon technologies, and exploring renewable fuels of the future. We work hard to care for the homes we love, but it's only human to protect the one we share.
If you want to get back to your favorite places and feel confident they have put your health and safety first,
look for the Well Health Safety Seal.
I'm Dr. Richard Carmona. This is the Well Health Safety Seal from the International Well Building Institute, the global authority on healthy buildings.
The Well Health Safety Rating was informed by years of research and input from hundreds of leading virologists, public health experts, epidemiologists, and building professionals around the world.
The Well Health Safety Seal means that we'll feel better going into restaurants,
theaters, stores, hotels,
stadiums, and all the places that we love.
Everything may look the same, but the Well Health Safety Seal means that your health and safety are top of mind when it comes to
cleaning and sanitizing procedures,
air and water quality management,
emergency preparedness programs,
and health services.
So look for the Well Health Safety Seal outside
and feel more confident going inside. Learn more at wellhealthsafety.com.
We see breakthrough medicines getting to patients in record time. At Emerson, our automation software is empowering pharmaceutical companies to accelerate the production of critical vaccinations for the world. Emerson, consider it solved.
With a bang. Energy and change.
came to every part of our universe. Seismic or small. It continues.
Change is all around us. Shaped by technology and human ingenuity. We can make it work for you and your business.
Welcome back to the exchange. Stocks are mixed right now. The Dow and S&P, Dow's in the green at least. The S&P just about at break even. The NASDAQ seeing the biggest declines, but well off session lows as well. The 10-year margin call jitters and a dire warning from the CDC director on rising COVID cases, all of that playing a factor today. We'll have more on the CDC ahead. But now let's check the sectors. Utilities, consumer staples, and communication services, your leaders. Energy and financials are your biggest laggards right now. And here are some of the movers this hour with the reopening trade under pressure. Take a look at the restaurant stocks. Dine Brands, Cheesecake Factory, Bloomin' Brands, all seeing some big declines. Live entertainment stocks also getting hit, including Eventbrite, SeaWorld, and Six Flags. And online betting stocks sharply lower right now, with Penn National down more than 7%. Now to Rahel Solomon for a CNBC News update. Rahel.
Hi, John. Hello, everyone. Well, during today's White House COVID briefing, CDC Director Rochelle Walensky made an emotional plea to the country. She's urging everyone to continue to wear a mask and social distance.
We have so much to look forward to.
She has a sense of impending doom because the uptick in cases that we're seeing now is a warning sign that another surge is coming.
We have so much to look forward to, so much promise and potential of where we are, and so much reason for hope. But right now, I'm scared. I know what it's like as a physician to stand in that patient room, gowned, gloved, masked, shielded, and to be the last person to touch someone else's loved one because their loved one couldn't be there. So I'm speaking today not necessarily as your CDC director, and not only as your CDC director, but as a wife, as a mother, as a daughter, to ask you to just please hold on a little while longer. I so badly want to be done. I know you all so badly want to be done. We are just almost there, but not quite yet.
And tonight on the news with Shepard Smith at 7 p.m. Eastern, the latest on the states that are expanding eligibility for the COVID vaccine. John, I'll send it back to you.
Rahel, thank you. Despite suffering some big losses this year, Cathie Wood is launching another ETF, this one focused on space exploration. The ETF is going to trade under the ticker ARKX and launch tomorrow. It'll invest in 39 companies, including Trimble, its top holding, Kratos, L3 Harris, JD.com, and Virgin Galactic. For more, you can head to cnbc.com/pro. And tomorrow on Power Lunch, you'll hear from ARK's space analyst who was instrumental in developing the ETF. Now still ahead, Southwest proving to be one of Boeing's most loyal customers. We'll explain. But first, the CDC extending the eviction moratorium for renters, but that could have negative long-term effects on affordable housing. That's also next. The Exchange will be right back.
At Empower Retirement, we help you open doors that get you ready for everything that lies ahead. Because your financial wellness is what matters most. Behind every door is an opportunity to save for life's moments.
So proud of you.
These are your goals, and it's time to help get you there. We've been opening doors for more than 12 million customers across America as they save for the future they want. We are Empower Retirement, and we're ready to open some doors for you.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are...
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V, only at the Honda Dream Garage Spring Event.
I don't like veggies. What?
Whatever you have at home, Knorr sides can turn nutritious veggies into mouth-watering meals. Veggies taste amazing with Knorr.
These are our sales, by product, by region. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO.
Was worth for free. On Squawk Box, Morgan Stanley CIO Mike Wilson. A big picture perspective on the recovery, risks, rates, and business cycles. Squawk Box, 6 Eastern on CNBC. Watch Squawk Box anytime on demand.
Welcome back to the exchange. The CDC just extended its rental eviction ban that was set to expire in 2 days. It now goes through the end of June. And while it protects tenants, it's leaving landlords in the lurch and could leave them without relief, at least some of them. Diana Olick joins me now with the very latest. Diana.
Well, John, small landlords own just over half of the nation's rental homes. Now, 2 different stimulus bills have earmarked over $50 billion in rental relief, but much of it is not getting there because the process must start with tenants.
The critical thing here is for these jurisdictions to really streamline what they're doing and make access to capital much easier for the residents and for the property owners.
15% of renter households, or 6.7 million, said they were behind on their rent, according to a recent census survey. More than a quarter say they have either slight or no confidence they can pay next month. As for the relief, 40% of rental owners who are owed back rent say they have not received the necessary paperwork from tenants to file for it. That, according to the National Rental Housing Council. Now, 11% said they have already been forced to sell at least one of their properties. Marilyn Blackburn has been a landlord in Washington State for 20 years, but she said she's lost more than $12,000 in the last 6 months.
It's just frustrating, and I think they're going to make it worse before it gets better by changing these rules and forcing us to keep tenants longer. So, time to get out.
Blackburn says she's going to sell all of her 9 properties, but the trouble with landlords selling is that in today's incredibly tight housing market, buyers will likely be the occupants, reducing the stock of desperately needed affordable rental housing. John?
Yeah, that's interesting. Reducing the stock of rental housing. More broadly, what are experts telling you about what this might do to landlord behavior overall? Does it change their math on what it takes to get these rental properties profitable? Is it any easier to refinance as a landlord at a lower rate here?
No, it's not easier for them, but actually what they're telling them is that more landlords are going to start having much stricter guidelines for how they decide which tenants they could take. So it may become harder to become a tenant in a rental property because the landlords are going to be so careful about who they want to put into the home, wanting to make sure that they'll actually get that rent. So it's not only going to become less affordable to be a renter, it'll also be harder to qualify to be a renter, John.
Wow, harder to buy and harder to rent. Diana, that is rough news. Thank you. So with approximately $25 billion in renter assistance still to be distributed, is the CDC's extension of the rental eviction moratorium a good move? Our next guest says yes. Let's bring in Mark Zandi, chief economist with Moody's Analytics. Mark, why is it good?
Well, the pandemic is still raging. It's not over. The economy is still very weak. Unemployment and underemployment very high. So still a lot of financial stress, particularly for renters, people that are generally lower income, minority groups who've really gotten hit hard by the pandemic. And on top of that, there's a lot of funds, renter assistance, that's coming to landlords and tenants. $25 billion was appropriated with the December relief package, and another $21 billion plus with the American Rescue Plan. So that's almost $50 billion in total. That's just going to take a little bit of time to get out there. So I think the 3-month extension is just enough time to get that money out and to get on the other side of the pandemic. So by the end of June, when this particular extension expires, I think we'll be sitting in a pretty good place, and the moratoriums could end at that point.
But, Mark, what's to be done about that effect that Diana Olick was just telling us about? Harder to buy because of reduced inventory of properties because renters then are buying them when they can, and harder to rent because landlords who have been squeezed during this period might have tighter standards. Is there a policy response that should work there?
I think these are temporary problems, issues. I do think the housing market is very strong. The rental market is strong in most places, and I think once we get on the other side of the pandemic and that renter assistance gets out to the landlords and the tenants, we'll be in a much better place. So I don't think this is going to be a longer-term issue. I mean, it's important to point out that obviously you don't have moratoriums like this except in under exigent circumstances, as the Fed would say, under a real crisis. So this is something very extraordinary, but we've been through in a very extraordinary time. But I do think a few months down the road, we'll be in a much better place, and people will be feeling a lot better about things.
Now, normally, it's understandably a lot more difficult for landlords to refinance properties than for people who live in the property to refinance. But given these circumstances, should that shift, or would that not? Would that be a giveaway to people with capital in a way that this administration would be unlikely to do?
Yeah, I mean, again, I think there's $50 billion. By my calculation, that covers all of the back rent, utilities, and late fees that are due for all delinquent renters. Not just renters who are low income, not just renters that got hurt by the pandemic. I mean, all renters. So there's a lot of cash that's going out to landlords and tenants. It's just now just getting it into the right hands as quickly as possible. And that's going to be difficult, not easy. I don't mean to belittle that, because this is going to go through lots of state agencies and local entities, and some places are really good at getting the money out, other places not so much. So this is going to take a little bit of work, and that's why we need another extension for 3 months to make sure that happens. But once that money gets out, I think the market will settle, and we'll be off and running here. And I think landlords and tenants will feel pretty good about how this all played out.
Now, here on CNBC, we talk about stocks a lot, understandably, and we've been talking about Archego, we've talked about GameStop, and some of the investor behavior that's a bit different from normal, to say the least. But what about in the real estate market? Are the trends that you're seeing in behavior, do they strike you as being healthy or within the range of normal during this period?
Well, the single-family market's all juiced up, right? Much like the stock market, like crypto, like commodities, interest rates are very low, so asset prices like stocks and housing should be high. But, I think we've gone beyond that. So valuations are stretched. And in the single-family market, kind of a tried and true measure of valuation is look at household incomes, look at rents, look at construction costs. And prices are high relative to those kind of fundamentals. So, I do expect this market to cool off as interest rates normalize, as mortgage rates go from record lows around 3% to something closer to 4 or 5%, hopefully somewhere down the road here. So it'll be a bit of an adjustment. But I will say, this adjustment should be relatively modest, because we do have an undersupply of housing, particularly for homes at lower price points, affordable housing. Mortgage lending has been very cautious. It's all 30-year, 15-year plain vanilla mortgages. So people haven't taken a lot of debt, and most importantly, I don't sense flipping. Flipping was a real problem back in the bubble, the housing bubble before the crisis. There's a lot of buying here, but this is buying and holding. It's not buying and flipping.
Yeah, that's what I was going to ask, is if there were any of those warning signs behaviorally that would take us back to 2006, 2007. You say no. If there were a couple of signals, though, a couple of numbers or tendencies that you're watching that would give you concern if they heated up further, what would they be?
Well, mortgage debt started to accumulate quickly. People started borrowing a lot of money, and lenders started relaxing their underwriting standards if they allowed for high loan-to-value ratios or low credit scores, or if the types of mortgages being originated started to become, they weren't plain vanilla, kind of 30-year, 15-year mortgages, that would be, an issue. And of course, flipping. I mean, if people are just buying a home with the thought that they can turn around in a month or two or three and sell it at a higher price, that to me is speculation. That's a tell that the market's overdone and it's going to have a very significant correction. But we're not there. I don't think that's what we're observing here. So we'll see some kind of some moderation in prices, some flatlining. We may even see some price declines in some of the most juiced markets, but I don't think this is anything like the bubble, prior to the financial crisis over 10 years ago.
Well, that's somewhat of a relief. Thank you, Mark Zandi from Moody's.
My pleasure.
Coming up, check out this mystery chart, down more than 11% over the past month. But one five-star fund manager who is up 95% in the past year says now's the time to buy. We'll reveal what that is and his other picks next. And as we head to break, it's time for show and tell. We show the chart, then tell the story. Today's chart, Generac, the stock lower as the CEO tells CNBC inflation is very much a factor. We'll be right back.
Well, I think inflation has been creeping into everything. I think irrespective of what the Fed may be saying to us, I think we're seeing it certainly in our business, materials, inputs, labor, logistics, all of those costs have been going higher. And at some point, that's got to get passed along to the consumer. We're trying to do as much as we can to offset that, but it's going to be very difficult. I think you're going to definitely see, consumers are going to definitely be seeing higher prices going forward.
Diane retired and opened that pottery studio.
How'd you come up with all these backstories?
I got help from a pro. My financial professional explained to me all the ways Nationwide can help protect financial futures in Peytonville.
Nationwide can help the Greens get lifetime income as their son Kyle's moving back home. It can help set up a financial plan for Mrs. Garcia.
And he explained how Nationwide could help Mr. Paisley retire early and spend more time with his pal Peyton.
And their new band.
Exactly.
Yeah.
Don't forget the band.
I haven't.
They're first. First to respond. First to put others' lives before their own. And in an emergency, they need a network that puts them first, that connects them to technology, to each other, and to other agencies. That's why AT&T built FirstNet with and for first responders. The emergency response network authorized by Congress. FirstNet, because putting them first is our job.
There's more to investment than money, which is why we don't just invest in business. At the Public Investment Fund, we invest in something far more important. We invest in people. We invest in human ambition, in human futures, in human success. Because we want a brighter future for everyone. Public Investment Fund, funding new human futures.
Healthy and equitable relationships are the foundation of a happy life. We are meant to love and to be loved. That has been Bumble's driving force every day since we started, and will continue to fuel us as we embark on being a public company. So today is day one of our commitment to be the platform to meet new people, whichever life stage or situation you're in.
Welcome back. Stocks recovering somewhat after a rough start this morning. You can see the Dow still in the green. The Russell 2000 is taking the biggest hit, though, today. However, through the rate-driven volatility, small caps have outperformed the Dow, S&P, and the NASDAQ in 2021. The Delaware SMID Cap Growth Fund is making some big bets on small caps. It's edged out the Russell 2000 over the past 12 months. Joining us now with some of his reopening picks is Alex Ely, CIO of U.S. Growth Equity for Macquarie and manager of the Delaware SMID Cap Growth Fund. A little small, little mid. Alex, what is particularly promising, you think, in this space?
There's a lot of promising things. I mean, the economy is about to reopen. The pandemic is going to end. So there's a variety of different trends that we're seeing in a host of sectors that are levered towards that reopening that we're particularly excited about.
Why Planet Fitness?
I think that the number one thing people want to do right now is get back out there and interact. I have kids in their early 20s, late teens. They can't wait to get out there and travel and go to restaurants and interact with people. And part of that is going back to the gym. Another part of that is most people have gained weight during the pandemic. So I think people are going to want to get back out there and exercise and see other people. And, you know, working out from your home is fine and all, but I think people are going to want to go back and do that again.
How much of this is sort of like a win-lose situation? You tell that story about Planet Fitness, I think, well, that's bad for Peloton. Can you go through and think about, well, what's bad for DoorDash and look into the restaurant experience space as well among the small and mid caps as an area where there's promise?
Yeah, you can, absolutely. Peloton's a great company. They've created a fantastic model, but they're going to be annualizing very, very difficult comps as we get into the summer and into the fall. Whereas if you look at a company like Planet Fitness or those restaurant companies that you mentioned, they're in a terrific position to benefit as things reopen. People want to get back out there, and they will as soon as everyone gets vaccinated. Biden's telling us every adult should be able to be vaccinated by the end of May. I don't think that will happen, but I know a lot of people will, and definitely going back to restaurants is a part of that.
I see Coupa Software here among your top 10 holdings. That's an interesting name. I was just talking to Rob Bernstein the other day because they focus on spend management. Is that to some degree a reopening play? Do you think there's going to be that challenge as companies have to spend more on things like travel that they haven't spent on perhaps in a while? They're going to need to manage that differently?
There are a lot of other reopening plays that are more geared or more levered to the reopening and the economic cycle than Coupa. Coupa does do expense management, as you mentioned. There's a real secular trend at play here. This has been growing and growing for years and will continue to grow going forward, but I don't know that it's levered towards reopening as much as it is just a great secular play.
And how do you look at healthcare-related stocks during this time? How have they been affected by the period that we've been in, and why are the ones that you think are positioned well so well positioned?
When we think about healthcare, the area that we're most excited about are those companies that are levered to procedures. Procedures have gone up pretty much every year for the past 40 years, but they were down by 10 to 15% last year as people were reluctant to go to the hospital, reluctant to see their doctor because of the pandemic. Well, that's going to end pretty soon, and as it does, people are going to go back and get those procedures done. So we have companies, as an example, something like Progeny, which sells fertility benefits, which should see a bump up as people get back out there and get those procedures done that they need or want to do.
So yet another, flip side of another story that's being told. We've heard a lot about telemedicine, but some things you can't get done over the phone or over the webcam. What about what's happening in logistics and the surge of attention toward air freight as so many companies try to get supply chains moving again or have experienced canal backups? Is there anything to pay attention to there?
Well, we don't own any companies specifically in logistics, but definitely those are deep cyclical companies that'll benefit from the economy reopening. It's really going to be an exciting time. We're expecting generationally high GDP growth in 2021 and into 2022. Those companies that are involved with logistics should benefit directly from that cyclical strength.
Yeah, it's nice to see that ship dislodged from the Suez Canal in recent hours as we look forward to that.
I'm glad I wasn't in charge of that, for sure.
Yeah, me too. Hopefully we all get dislodged and moving again before long. Alex, thank you.
Thank you, John.
Still ahead, shares of Boeing climbing today after it got a vote of confidence from one of its most loyal customers. We'll have those details next. And remember, you can watch us live on the CNBC app. The Exchange will be right back.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V. Only at the Honda Dream Garage Spring Event.
Advanced non-small cell lung cancer can change everything, but your first treatment could be a chemo-free combination of 2 immunotherapies that works differently. It could mean a chance to live longer. Opdivo plus Yervoy is for adults newly diagnosed with non-small cell lung cancer that is spread and that tests positive for PD-L1 and does not have an abnormal EGFR or ALK gene. Opdivo plus Yervoy is the first and only FDA-approved combination of 2 immunotherapies. Opdivo plus Yervoy equals a chance for more starry nights, more sparkly days, more big notes, more small treasures, more family dinners, more private desserts. Opdivo and Yervoy can cause your immune system to attack healthy parts of your body during and after treatment. These problems can be severe and lead to death. See your doctor right away if you have a cough, chest pain, shortness of breath, irregular heartbeat, diarrhea, constipation, severe stomach pain, nausea or vomiting, dizziness, fainting, eye problems, extreme tiredness, changes in appetite, thirst or urine, rash, itching, confusion, memory problems, muscle pain or weakness, joint pain, flushing or fever. These are not all the possible side effects. Problems can occur at the same time and some.
These are our sales by product, by region. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO.
Maybe it's only a feeling, only a dream, only a day trip that lasts long after sundown. Maybe it's only a weekend or a moment. But sometimes those only things are the only things that matter. The Jeep Grand Cherokee. There's only one.
Now get 0% financing for 72 months on select 2021 Jeep Grand Cherokee models. Plus, get no additional charge maintenance with the Jeep Wave Customer Care Program.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
For free.
Welcome back to the exchange. Shares of Boeing are higher on news that Southwest is going to purchase 100 of the company's 737 MAX planes with options to buy more. CNBC.com airline reporter Leslie Josephs joins me now with the latest. Leslie, Gary Kelly a year ago sounded none too happy on our air with Boeing, was eyeing Airbus. It sounded like, I have to imagine he got a pretty good deal on these planes.
Yeah, I mean, you think about airplanes these days after a year of pandemic, kind of could equate it to office space in Midtown. I mean, who wants planes now? So there are a lot of good bargains to be had. And Boeing and Southwest, of course, don't disclose the price that they got. This is an order for 100 planes. We just have to put into perspective how big that is. That's the biggest order since the planes were first grounded 2 years ago. Regulators, of course, lifting that grounding at the end of last year. But the idea of paying that $100 million, almost $100 million list price, very unlikely.
So what does this signal, first of all, for Boeing? Because that MAX brand was about as far in the tank in my book as you can imagine. But this is a major vote of confidence, it seems, from one of the strongest brands in the airline industry, right?
You're absolutely right. This is a huge vote of confidence from an all-Boeing 737 airline, which of course was flirting with the idea of bringing in Airbus, the Airbus A220 perhaps, and mixing up its fleet, which is something that it hasn't really done for the most part in its 50 years of flying. So this is a huge sigh of relief for Boeing that Southwest decided to stick with that manufacturer. Of course, there are things that are good for Southwest with this deal too. I mean, there were some headaches that bringing in another fleet type would have caused. I mean, you have to think about pilots, hiring, pilot training, simulators. You have to think about maintenance costs and other things like that. And even though the Airbus A220, that other option that was out there, fuel-efficient airplane, more fuel-efficient than older models, of course, you have to factor in those other expenses that are going to come along with that.
So Boeing's up right now, what, almost 2%? It's a little bit less than I might have expected. Was this anticipated?
It was a bit anticipated for them. One analyst called it would be a heart attack moment if Boeing actually went ahead and not broke up with Boeing, but forged this relationship with Airbus. It
started seeing other people, yeah.
Right, exactly. Open the relationship up a little bit. So that would have been the shock. Of course, Southwest has been also forthright. As much as they said that they were looking at the Airbus plane, they did spell out what the challenges are of having two fleet types. And Southwest is a very cost-conscious airline. I mean, they, like any airline now, needs to save on cost, of course. But this is an airline that doesn't want to bring in a lot of complexity, especially right now, as it's trying to recover from the pandemic.
Understandable. Leslie, thank you for helping us to understand it. And Boeing is leading the Dow, but over in the S&P, it's Facebook that's taking the lead. That stock is the best performer after Deutsche Bank hiked its price target from $385 a share to or maybe from $355 to $385. The firm said that it's growing more optimistic about Facebook's advertising business this year. The analysts adding that they're seeing multiple encouraging data sets on ad prices and spending trends. The stock is up 7% this year. That does it for the exchange. Coming up on Power Lunch, shares of Aurora Cannabis nearly doubling over the past 6 months as more states move toward legalization. CEO Miguel Martin joins to discuss, and Power Lunch starts after this quick break.
We see smarter software delivering cleaner power. Emerson's breakthrough technology enables the power industry to integrate renewable energy sources to modernize and improve the electric grid. Emerson, consider it solved.
It came suddenly, a financial storm no one knew was coming. That's why the wise investor turns to one of the most secure investments on Wall Street, or any street, Assured Guaranty, the proven leader in municipal bond insurance.
At C3.ai, we're solving previously unsolvable problems. Inventory optimization, predictive maintenance, anti-money laundering, operational readiness, precision healthcare, energy management. C3.ai is AI built to transform your business at its core. C3.ai, this is Enterprise AI.
If you want to get back to your favorite places and feel confident they have put your health and safety first,
look for the Well Health Safety Seal.
I'm Dr. Richard Carmona. This is the Well Health Safety Seal from the International Well Building Institute, the global authority on healthy buildings.
The Well Health Safety Rating was informed by years of research and input from hundreds of leading virologists, public health experts, epidemiologists, and building professionals around the world.
The Well Health Safety Seal means that we'll feel better going into restaurants,
theaters, stores, hotels,
stadiums, and all the places that we love.
Everything may look the same, but the Well Health Safety Seal means that your health and safety are top of mind when it comes to
cleaning and sanitizing procedures,
air and water quality management,
emergency preparedness programs,
and health services.
So look for the Well Health Safety Seal outside
and feel more confident going inside. Learn more at wellhealthsafety.com.
Our government has forgotten how to build things, so it takes forever to get these projects off the ground. That's why you want infrastructure stocks like Martin Marietta and Nucor that work regardless of what happens in Washington, can never be counted on. Watch or listen live on the CNBC app.
Good afternoon, everyone, and welcome to Power Lunch. Along with Frank Holland, I'm Tyler Matheson, and here is the 2 o'clock takeout. It is margin call mania, a series of massive block trades causing havoc across the market, but are there buying opportunities amidst the volatility and the madness? Plus, the Ever Given ship in the Suez Canal finally freed after 7 days blocking a major shipping route. We've got all the details on that important story, and later, impending doom. As states reopen and more people are traveling, the CDC director is out with an emotional warning about another COVID surge. We're going to hear from President Biden on the COVID topic later this hour. Power Lunch starts right now.
And welcome to Power Lunch. I am Frank Holland with Tyler Matheson. The Dow and the S&P turning positive, now on track for a third consecutive day of gains, despite that fallout from the liquidation of Archegos weighing on the markets. Dom Chu was looking at all the stocks on the move. Hey there, Dom.
What an ecosystem it is. It's got a little bit of everything from different parts of the market here. It's overall affecting what's happening with trading, but there are some sentiment gauges that are playing out more specifically tied to industries in part of this particular move. First of all, take a look at some of the stocks immediately affected, the names that have been partly liquidated because of this particular transaction. Tencent Music is now up on the day. It's taken the weakness in the buying as a buying opportunity to buy more stock. Discovery and Viacom, two of the U.S. media names that have been a huge focus. These guys have taken huge hits over the last 5 or 6 trading days. Now Discovery's up on the day. Viacom, though, still down about 5%. And Credit Suisse, one of the banks possibly with exposure from the standpoint of risk to that Archegos capital management trade, that's playing out as well there. Now take a look at some of the charts here for Viacom specifically, because now it was $101.97 at its intraday peak over here. It's now lost roughly 55% from that intraday peak. That's where we currently stand right now for Viacom CBS, just to give you an idea of how deep and how big the move was to the downside. Also, take a look at these Chinese internet type stocks, because many of them were also part of that liquidation that's been reported about with Archegos. Tencent, Baidu, and VIP Shop, some of those, the massive moves here, we're talking 30 to 40% drops in just a few trading days, so maybe some opportunities there. I told you Tencent Music is using this as a buying opportunity. They're going to buy back $1 billion of their own stock at these depressed levels. And one more thing to kind of keep in mind. If you take a look at the overall trade playing out, this particular ETF, the Crane Shares CSI China Internet KWEB, that's the ticker there, is down about 1.5%, but still, over the last year, we're talking about a 135% rise in this particular ETF, now down to a 30% fall from there. So whether or not there are buying opportunities, Frank, Tyler, it remains to be seen, but this particular ETF is one of those sentiment gauges for whether those Chinese internet stocks will catch a bid at some point. Frank, I'll send things back over to you.
All right, Dom, thanks a lot for that. And for more on Archegos, its founder Bill Wang and what caused its firm to blow up, let's bring in our Leslie Picker. Leslie, a lot of risky business here.
Hey, yeah, risky business is the name of the story, really, Frank. Bill Wang was practically an unknown entity up until this weekend, and now his towering risk tolerance has caught the ire of regulators and counterparties and may be partially responsible for billions of dollars in losses at some very large banks. Wang is the face behind Archegos Capital Management. It's not a hedge fund, but a family office, one that is said to have taken an exorbitant amount of leverage, concentration, and liquidity risk. When the market turned against him in recent weeks, he faced a multitude of margin calls, causing the banks to sell his assets in a variety of names, including Viacom CBS and Discovery, and a group of Chinese technology companies. Now, Wang has not returned my calls seeking comment, but some of his trading was done via swaps, giving him the capacity to be even more levered without the need to disclose what he holds. And he worked with at least 6 prime brokers, none of whom had a full picture of his exposure, according to people with knowledge of the matter. Now, Credit Suisse and Nomura have each said that they are facing material losses. Others, such as Deutsche Bank and Goldman, appear to be in much better shape. That's also the case with Morgan Stanley, which I recently learned has been telling investors it sold about $15 billion worth of blocks in the last few days. It has no more blocks to do, and the firm has not incurred significant losses as a result of these transactions. That's according to a person with knowledge of the matter, guys.
Leslie, I think the question everybody's asking, are there more banks or more financial institutions that have exposure to this entire situation?
I think that is the key question. So we know that they are working or have worked with, Archegos has worked with about 6 prime brokers. So they're the banks that would face the most exposure theoretically to what's been going on. Now, that said, David Faber reported earlier, I have my own sources telling me that Wells Fargo has also been out in the market offering a block trade through Viacom CBS. So it's unclear. They're not one of the brokers that we know of that's been working with Archegos. So it's not clear if they're doing that on behalf of another fund that's looking to liquidate, or if they're doing that on behalf of, some other fund for a variety of other reasons. It's not clear that that's anything to be concerned about. That said, my point in even bringing that up is just this idea that there are, long tentacles in the market there, and it's unclear exactly how they are interconnected at this point in time. There's a lot of activity going on, a lot of moving parts, and so we're keeping an eye on it, and we will keep you updated with what we hear.
Leslie, we are sure that you will. Leslie Picker reporting. We appreciate it.
All right, let's get a little more insight from a Viacom shareholder and an analyst on what this hedge fund drama means for the company and the market overall. David Katz is Chief Investment Officer of Matrix Asset Advisors, and Dan Kurnos is Managing Director with the Benchmark Company. He still maintains his buy rating on Viacom and a $120 price target. We'll talk about that, but let me begin with David Katz, who has been an owner of Viacom. We're going to focus there for now. You, David, had been selling it before all of this kerfuffle broke out. Why were you selling it?
So we have been an owner of Viacom. We love the business. We think Bacchus is a great CEO. We think they have a very good product in terms of streaming. And we thought the business was worth anywhere from 70 to 90. As it ran up this year, we were scaling back our position. We completed our sale probably about 2 weeks ago in the mid-90s. And again, we sold it. We said, you know what? We don't understand why the stock is up at this price. It's a very good business, but it can be a good business without us. If it ever came back, we'd look at it again. On Friday, when the stocks fell in half, all of a sudden we reinitiated our positions. And again, if you can turn the volume down and you have a 6 to 9 month time horizon, stock right now is at about 11.5 times earnings, and they have a very good management team. The secondary they did at 85 made enormous sense. We think the stock will be back at 65 to 70 when the dust settles. So if you have that 6 to 9 month time horizon, we would take advantage of this illiquidity and this panic sell-off.
So you have no trouble. I'm going to turn to Dan in just a moment. But, David, you have no fundamental trouble with the business. This sell-off in this stock, so far as you can tell, is traceable right back to the hedge fund that had to liquidate, or its lenders did, so that it could meet margin requirements.
Without any question, the company gave an update within the last 4 weeks. They had a very big rollout of their new streaming product, Paramount Plus. We think the business is fine. And they just did that secondary a week ago. So they weren't going to do a secondary if there was any sort of business deterioration. So we're very confident that this is a solid business. And the fact that Discovery has gone down lockstep with Viacom means that it was really a trade on that particular sector rather than anything that's Viacom specific.
Hey, Dan, this is Frank back in Englewood Cliffs, our headquarters. So a lot of talk about these companies and their streaming offerings. Any thoughts about how the stimulus that's going to be going out is going to impact not only streaming for consumers? Will they buy more streaming offerings? How will it also impact ad buying on those services?
Yeah, look, that's been part of our core thesis here. I think people are underestimating the impact that stimulus is going to have on the economy and subsequently advertising. We think that the back half of this year and into 2022 are going to see significant outperformance, especially on core. I think there's been this narrative that's been going on that all the dollars are shifting to connected TV, to digital, et cetera. We actually think, going back to Viacom here, that their core business on advertising is going to outperform this quarter, the rest of the year. I think that will drive a whole bunch of free cash flow for them that people aren't anticipating. As it relates to buying SVOD products, if you think about it, if you give the consumer, say, $5,000 that they didn't have in their pocket yesterday and say, here, are you willing to pay $4.99 a month for another SVOD service? I think that's something they can kick the can down the road and say, yeah, absolutely. I want more content. I can enjoy it. So I think that the stimulus is actually going to have a very big follow-on, add-on effect to fundamentals, provide upside to both streaming and advertising over the course of this year and next.
So, Dan, for reasons that may be unique to his portfolio and his strategy, David was selling the stock as it got up very high. You have a price target of 120 on it, so your price target is his discomfort point. Explain why you think this stock can go that high, and how soon do you think it can?
Well, let's think about it. So if we think that Viacom can do $5 billion in streaming revenue by next year, which I think is light, and then, we get into some of the weeds here. People will disagree with the statement because they do own Pluto, which is obviously a large component of it. But if you put a 7 times revenue multiple on that, you can justify the entire enterprise value of Viacom CBS today with no value attributed to the core legacy business, effectively. So with that kind of consideration, I think that people, as I said before, are underestimating the legacy core business. I think people are overstating the declines in the licensing business. I think, at least over the near to medium term, licensing can be a modest grower. We think advertising will outperform for at least the next 2 years. We think affiliate And we acknowledge the challenges in the cable space, but overall affiliate, because of reverse and retrans, can still be a mid-single-digit grower. And so the ice cube is not melting nearly as fast as people think. And that underlying cash flow will be reinvested into the streaming business. And so by the time you hit that pivot point, especially with the raise now, which was only really dilutive to EPS, right, I think you have a really good runway to justify significant upside valuation. And as I said, I think the big delta is that we think the core business declines a lot more slowly than people think.
All right. Thank you very much, gentlemen. Thank you, David Katz and Dan Kurnos. We appreciate your time. And still ahead, the Evergreen ship, it's called the Ever Given, but it's operated by Evergreen, freed from the Suez Canal. But there's still major ripple effects for the supply chain. And we've got those details. What a story that one has been. Plus, New York, one step closer now to legalizing cannabis, and Canadian companies are ramping up as they get ready to compete in the U.S. We'll talk to the CEO of Aurora Cannabis right after this break.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
The UK has applied to join a trade alliance with Asia-Pacific countries.
It's a really exciting opportunity for UK companies to enter Asia-Pacific. There's huge opportunities for investors to find investment opportunities.
Now let's look at the ever-growing UK tech sector.
It's been growing quite rapidly over the course of the last 5 years. Investment has really increased and is now at record heights. Right now, we're third behind China and the United States.
If you rank midsize SUVs by lowest maintenance cost, the Atlas and Atlas Cross Sport are number 1 and 2. Now's the time to sign and drive. Lease and you take one for 0 down, 0 deposit.
So, you're my fairy god, Mayo?
Yes. I wield the power of Best Foods to magically transform any food into creamy, dreamy works of art.
With a butter knife.
This is a mayo knife.
We're for those who love to discover, who know an open mind is the only kind, who don't need to travel to find something new, who know where to escape, even just for a moment, who don't need a fortune to find a gem, and who know when you spend less, you can discover even more, and never, ever stop discovering. Spend less, discover more at TJ Maxx and Marshalls.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Returns. Order it today at Ridge.com.
And welcome back to Power Lunch. Canadian cannabis stocks well off their year highs. For example, Aurora and Tilray off by more than 50%, even though more and more U.S. states are on the path to legalization. New York, just the latest state that is on track to legalize recreational use. But the state warning it could take up to 18 months before the stores are actually ready to sell. For more on the growing wave of legalization, I'm joined by the CEO of Aurora Cannabis, Miguel Martin. Miguel, thanks for being here.
Thanks for having us, Frank.
So we just kind of spelled it out there. Cannabis for recreational use could be legalized in New York State by the end of 2022. That would add a $4.5 billion estimated legal market to this space. We know Canadian producers, you can't sell here in the U.S. just yet, but seeing a $4.5 billion market open up, what could that mean to your company and other Canadian producers?
Well, it's significant. You know, we had 5 states in the last election pass comprehensive cannabis legislation. Virginia, passed some important legislation. You mentioned New York, which is a huge market. Clearly, we think the Canadian LPs are going to be very influential in these markets. We're excited about the SAFE Act and potentially the STATES Act passing, allowing the Canadian LPs to start to participate. I think, our long history of compliance and regulatory alignment in the Canadian market, really the largest federally legal market, sets us up well for a time in which we can come into the U.S.
So, Miguel, you are looking forward to participating in legal U.S. markets, but I have to ask you, do you think that U.S. producers have an advantage in any way? They're already selling in those markets. In many cases, they have medical dispensaries and other things already set up, and the common thought here is that if you have a medical dispensary set up, you're going to be first in line to get one of those adult use licenses.
Well, I think they have some advantages, but I would also say the Canadian LPs, and particularly Aurora, also have significant advantages. Today, we sell our products in over 13 countries. Countries like Germany and Israel and the Netherlands that have very high compliance standards. And obviously our history in Canada gives us a leg up. It's not just the packaging and manufacturing and labeling and sales and marketing that we have to adhere to. It's also the genetics and science. And those are clearly portable into the US. So I think we're going to have significant advantages. And while I respect what the MSOs are doing today, they don't operate in a federally regulated environment. And that's really what gives an advantage to a company like Aurora.
So, Miguel, earlier this year, hopes of that federal legalization had cannabis stocks really soaring. But in the last week, with that New York news, as you mentioned, a huge market, haven't seen the same reaction. The broader market up over 1% over the past week. Your stock down about 5%. Other Canadian producers down that much or more. What do you think investors are missing that you're seeing?
Well, I think investors are missing, this is early days. I expect the Biden-Harris administration to put through comprehensive legislation. Clearly, it's a big world out there outside the U.S. And so, as I mentioned, we're in 13 countries. We've been very successful. We have the #1 medical business in Canada. We have a growing international business. We were up over 500% year over year, and our turnaround story is well on its way. And so I think, investors, it takes a bit of time. They want to see quarter over quarter. But clearly, if you look at the global trends on cannabis, there's a huge tailwinds, whether that's in Europe, whether that's in Israel, or in the U.S., as we're speaking about today.
How would you characterize your recreational sales in Canada? Have they lived up to what you expected? And is there anything that could be inferred from that in the U.S. market?
I think, it's a great question. The Canadian rec business is only 2 years in, and it's been a bit choppy. In this quarter, we've seen the provinces really pull back a bit on their overall inventory system as they advance their efforts. And I give them a lot of credit as they're trying to work their way through. Clearly, COVID continues to be an impact in that rec business, which is why having a diversified business is the most important. When you look at the medical business with margins in the low 60s versus a rec business that might be half that, I think the real story of the companies that will be successful are those that have a diversified business, not only geographically, but also from a medical and a recreational standpoint.
And Miguel,
what are you going to do to make sure that excuse me, Frank, I just want to get one question in. What are you going to do to make sure that underage people, obviously you're not going to be the retailer, the end delivery point, I guess, but what are you going to do to make sure that children are not using this substance?
Well, having spent almost my entire career, over 25 years, in regulated products such as tobacco and alcohol, I have a long history in working through age-compliant products. I give the Canadian government and all the governments that we work with, a significant amount of credit for how they're doing that. We're partnering with them, and clearly this is an adult-oriented product, and we want it to be that. So I think, there's a tried and true methodology that we've seen in alcohol, tobacco, and other age-restricted products, and we're going to follow that to a T. Responsibility and compliance really are the most important things in moving these products into the mainstream.
So, Miguel, before we let you go, I got to ask you about consumer packaged goods and cannabis. Where do you see that next development coming from? Right now, about 50% of everybody's sales are flour. Another, double digits number are just joints and things like that, pre-rolls. Where do you see that quantum leap happening where more people decide on a consumer packaged good? Do you have any sense of what kind of good that would be?
Yeah, I do. I mean, I think first and foremost, you have to look at the non-THC-bearing cannabinoids. And we're awful bullish on the good work that the FDA and that's happening at the federal government around CBD. And so I think as you see a regulatory pathway for compliant companies on CBD, CBA, CBN, that brings in a broader group of CPG companies that maybe are not there yet on THC. And clearly, as you're seeing good work on THC find its way into what we call Gen 2 or Gen 3, beverages, ingestibles, and concentrates, those clearly have a greater uptake and are much more approachable than traditional cannabis formats.
Miguel Martin, CEO of Aurora Cannabis, thank you for being here. We appreciate it.
Thank you for having us.
Still ahead, energy prices sinking after the ship in the Suez Canal is freed, but how long will the impact persist? We have a special report on that. Plus, CEOs more and more worried about state-sponsored cyber attacks. We'll talk to a top analyst about which cyber stocks will reap the benefits of bigger defense spending against the cyber threat. More Power Lunch after this.
We see temperature control software giving everyone a shot at vital vaccines. At Emerson, our software is shepherding medicines through every step of the cold chain, helping track conditions to keep each dose safe and effective. Emerson, consider it solved.
In Peytonville, there's lots of ways to save on auto insurance. Really? Yep. Very proud of that. With Smart Ride from Nationwide, they can get discounts for safe driving. Does she get one? Mrs. Carmichael, safest driver in Peytonville. Takes a lot of work and effort to be the safest driver in Peytonville.
What about this guy?
With Nationwide Smart Miles, the less he drives, the less he pays. The list of inspiring stories goes on and on.
I bet. I've never seen anyone do more with their retirement than you.
I concur.
With a bang, energy and change came to every part of our universe. Seismic or small, it continues.
Change is all around us, shaped by technology and human ingenuity. We can make it work for you and your business.
There's more to investment than money, which is why we don't just invest in business. At the Public Investment Fund, we invest in something far more important. We invest in people. We invest in human ambition, in human futures, in human success. Because we want a brighter future for everyone. Public Investment Fund, funding new human futures.
It's a 13-hour flight. That's not a weekend trip.
15 minutes away.
I gotta take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Thanks.
We'll see you. Ah, they're getting so smart.
Choose the app that fits your investing style.
The At Work Summit is an opportunity to think about the future.
March 30th, join Reid Hoffman and Game Changers in Innovation. Register now at cnbcevents.com/work.
All right, welcome back. Oil turning higher even as the ship, it finally gets unstuck at the Suez Canal. Let's go to Dom Chu at the CNBC Commodity Desk. Hey, Dom.
All right, so Frank, oil prices have been all over the place in trading today. Right now, those U.S. benchmark West Texas Intermediate or WTI oil futures are currently $61.46, 0.75% gain there, near the highs of the session. World benchmark Brent crude, you can see $64.85, about a 0.5% gain there. Prices were lower earlier in the day in reaction to the unblocking of that massive cargo ship that had been blocking traffic in the Suez. Now again up towards session highs. Now over the last 7 trading sessions, prices have been pretty range-bound for U.S.-based crude, $57 on the low end, $62 on the high end. Now oil markets are likely going to be going back towards fundamental drivers. We're talking, of course, Tyler, Frank, supply concerns. We're talking about demand concerns out of Europe, given the lockdowns and COVID restrictions there. So all of those coming back into play now that this near-term catalyst, Tyler, in the Suez, has been cleared. Back over to you.
Dom, thank you very much. The Ever Given finally freed from the Suez Canal, as we've been saying, but the backlog it caused is going to take a long time to work through. CNBC's Dan Murphy joins us now by phone live from Egypt. What's happening there now? The ship is free. Is traffic moving, to your knowledge, through the Suez?
Hey there, guys. Well, what a day and what a story. Look, this was a moment of celebration in Egypt. The Ever Given finally unstuck from the banks of the Suez Canal today and effectively reopening one of the world's most critical trade waterways. Now, we had the good news early this morning. Tugs and dredgers had been working day and night across the weekend to free this 200,000-ton mega tanker and its billion-dollar cargo. But ultimately, at the end of the day, the fortune of a high tide, a full moon, and a lot of engineering prowess saved the day here. In terms of what's happening with the traffic, though, look, this is going to be a big question moving forward. Authorities here in Egypt saying traffic is now set to resume in both directions, but this disruption to global trade is not over yet because we've learned today that about 400 ships are still waiting to pass, and analysts that we've been speaking to say this backlog could take up to 10 days, if not more, to clear. We've also heard from industry insiders today, like Maersk, for example, who say that this knock-on disruption to global shipping could take weeks or even months to unravel. And ultimately, with the crisis in the Suez resulting in the holdup of about $9 billion a day in global trade, what we've also seen here is the longest shutdown experienced in the canal for almost a decade. So a lot to unpack there, but in terms of what's happening right now with the ship, the Ever Given, it's undertaking safety checks north of where it got stuck. And of course, guys, an investigation is now underway into how their ship ran aground and how to avoid it happening again in the future. Back over to you.
Quick follow-up, if I might. Obviously, there are some ships that have gone around the South Africa and gone that way. There are going to be log jams, aren't there, Dan, at ports, at destination ports, once this once traffic begins to flow again through the Suez, because the scheduling must be all bollocksed up.
Absolutely, you got it. And what's going to be interesting to hear in the next couple of hours here in Egypt is what Suez Canal authorities have to say about how quickly that backlog through the Suez can be processed. As I mentioned, about 400 ships still waiting to pass through, but it could take days or weeks to get all of those ships through. And when they eventually do pass, you're right, those ships that have already bypassed the long way, the more expensive way around Africa, are also going to be hitting ports and unloading goods, potentially creating future bottlenecks. That's why it's important to watch the headlines on what the global supply disruption is going to look like moving forward.
Dan Murphy, thank you very much. Dan Murphy reporting from the clogged part of the world. Frank.
All right, take a look at the cybersecurity ETF, ticker symbol HACK. It's down 5% this year, even as we learn a lot more scary details about massive cyber attacks. Up next, the way you to play this sector if you think that these fears are not going away.
It's every municipal bond investor's dream. A bright, shining city on a hill where there won't be any financial problems. But what if there are? That's why Assured Guarantee protects your principal and interest payments. Assured Guarantee, a stronger bond.
Some say this is my greatest challenge ever, but I've seen centuries of this. With a companion that powers a digital world traded with a touch. The gold standard, so to speak.
Walter, did you know Geico could save you hundreds on car insurance and a whole lot more? So what are you waiting for? World's strongest man, Martins Litzis, to help you break down boxes?
What am I gonna do to you, Box? Let me break it down for you. Oh! You're going down! Down to the recycling center! Hey, thanks, Martins. You're welcome.
Geico. Switch today and see all the ways you could save.
It's a familiar story. Allergies ruining your sleep and next day too. Taking Zysol at night relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin, and on first dose provides the same relief as Zyrtec at nearly half the size. Be wise all. Take Zysol at night.
At Southern New Hampshire University, we're committed to making college more affordable. That's why we're keeping our tuition the same through the year 2021.
I knew SNHU was the place for me when I saw how affordable it was.
Find your degree at snhu.edu.
Unbelievable.
There's only one Barbara Corcoran.
Bet you don't sell a lot of that.
And only one...
The last time somebody told me he loved me, he left me and married my sister.
Shark Tank. Tonight, starting at 80.
Work your style without overworking your hair. For salon-quality hair at home, Tresemme Keratin Repair with Bondflex technology builds new hair bonds with every wash. Get 20 times stronger hair with new Tresemme Keratin Repair.
Was worth for free. Background stepped up as well. My fellow Americans, look at what we have done in the past 10 weeks. No other country has come close. 100 million shots in less than 60 days. And now we're moving to the next 100 million shots in just 40 days. You heard me say many times before, our progress on vaccination is a stunning example that there's nothing this country cannot do if we put our minds to it and we do it together. But as I've also said, I will always give you it straight from the shoulder. Our work is far from over. The war against COVID-19 is far from won. This is deadly serious. We share the sentiment of Dr. Walensky, the head of the Center for Disease Control and Prevention. The CDC expressed earlier today, this is not a time to lessen our efforts. That's what she said. We could still see a setback in the vaccination program. And most importantly, if we let our guard down now, we could see a virus getting worse, not better. You know, as many people as we vaccinated, we still have more Americans left to go. You know, we will administer more shots in March than any country on earth. But even so, we have to give more shots in April than we did in March. Because we're in the life and death race with the virus that is spreading quickly, with cases rising again, new variants are spreading, and sadly, some of the reckless behavior we've seen on television over the past few weeks means that more new cases are to come in the weeks ahead. With vaccines, there's hope, which is a very good thing, to state the obvious. But people are letting up on precautions, which is a very bad thing. Look, to this point, cases have fallen 2/3 since I took office. Deaths have also fallen 2/3. But now cases are going back up. And in some states, deaths are as well. You know, we're giving up hard-fought, hard-won gains. And as much as we're doing, America, it's time to do even more. All of us have to do our part, every one of us. So let me start here. First, this week, thanks to my administration's intensive work with vaccine manufacturers and distribution efforts, the amount of vaccines that are going to be available for vaccination sites will be a new record. 33 million doses of vaccine this week. By getting more vaccine supply to states, community health centers, and pharmacies, we can vaccinate the highest risk Americans even more quickly than we already are. And then we make it possible to open up supplies for all adults and try to beat the renewed spread of this virus. As a result, I'm also pleased to announce that we're on track this week, just 10 weeks after I became president, to achieve nearly 75% of Americans over the age of 65 getting at least one vaccination shot. When I took office on January 20th, that number was 8%. It's going to 75%. That's a lot of grandparents who are now able to safely hug their grandchildren. They couldn't do so just a short time ago. And with the supply we're releasing this week, just this week alone, there are more doses of vaccine available for seniors this week than any week thus far. So seniors, please, if you've not gotten your shot yet, get it this week. Get it. Second, I'm reiterating my call for every governor, mayor, and local leader to maintain and reinstate the mask mandate. Please, this is not politics. Reinstate the mandate if you let it down. And business should require masks as well. The failure to take this virus seriously, precisely what got us in this mess in the first place, risks more cases and more deaths. Look, As I do my part to accelerate the vaccine distribution and vaccinations, I need the American people to do their part as well. Mask up. Mask up. It's a patriotic duty. It's the only way we ever get back to normal. To cheer together in stadiums full of fans. To gather together on holidays again safely. Go to graduations, weddings. Third, I announced on March 11th, I direct every state, territory, and tribe to open up their vaccinations to all adults no later than May 1. I issued that order because moving beyond priority groups to enable all adults to get vaccinated is critical to having a July 4th that's closer to normal. I want this to come as quickly as possible. And I want to thank the governors, Democrats and Republicans, who have responded to this directive. In fact, the vast majority of governors have set open access dates even earlier than the deadline on May 1st. But in this race against the rapidly spreading virus, as fast as we are going, we need to go faster. So to make it easier for Americans to get vaccinated as the supply grows and vaccination eligibility expands, I'm directing my COVID team to ensure there is a vaccine site within 5 miles of 90% of all Americans by April the 19th, 3 weeks from today. Look, we're going to do this by growing from having 17,000 pharmacies giving out vaccination shots to nearly 40,000 pharmacies doing it within the next 3 weeks. That'll more than double the number of pharmacies where you can go get vaccinated. But we aren't stopping there. In the next 3 weeks, we'll add 12 more federally run mass vaccination sites. Every day at these sites, tens of thousands of people are able to drive up, get a vaccine shot while in their car, and leave in less than an hour. And over 60% of the shots given at these sites goes to minority communities because they're in minority communities. We have to reach out. They're the ones most affected by the vaccine, by both the vaccine, but also by the pandemic. We're also going to send more aid to states to expand the opening more community vaccination sites. More vaccines, more sites, more vaccinators, all designed to speed our critical work. We also need to make it easier for those who want shots but cannot access vaccination sites to get vaccinated. This is also where we're focused on the seniors most immediately. While we have made incredible progress in starting to vaccinate nearly 3/4 of our seniors, and now putting vaccination sites within 5 miles of 90% of all Americans, that still isn't enough as far as we're concerned. We know that there are a number of seniors and people with disabilities who may be isolated and have lack of access to transportation. And there are community groups that can help. They're trying to help now. So our fourth announcement today is that I'm sending out millions of dollars through the Department of Health and Human Services to provide assistance, including transportation, so more vulnerable seniors and people with disabilities can get their shots, because they get help to physically get there to get the shot. Neighbors helping neighbors. What a truly American effort. We cannot let transportation be a barrier to any senior getting a vaccination. And so, where does this put us? We're making progress on vaccinations, but cases are rising, and the virus is spreading in too many places still. That's why today, I'm taking these steps to make our American turnaround story, our vaccination program, move even faster. Thanks to all the work we've done these past 10 weeks, the added steps I'm announcing today, with them, I'm pleased to announce that at least 90% of all adults in this country will be eligible to be vaccinated by April the 19th, just 3 weeks from now, because we have the vaccines. For the
We're going to
vast,
dip away
vast
from
majority of
President Biden, who is talking about some accomplishments in the fight against the COVID virus, but also some new hurdles that he expects to help fight that virus. Let's turn to Meg Terrell now. The president talking about maybe getting 90% of Americans eligible to be vaccinated by mid-April, an expansion of federal vaccination sites, a more than doubling of pharmacies where the vaccine will be available, and sites within 5 miles of 90% of the population. Meg?
Yes, Tyler, making sure that people have access to places to get vaccinated and pointing out that states are responding to his call to make all adults eligible by May 1st, even earlier, with now he says 90% of U.S. adults being eligible by April 19th. This, of course, comes after we heard the CDC director this morning and Dr. Fauci warning that we're in a precarious position. Even as vaccinations are moving quickly, cases have started to rise, with Biden just saying there, due to some of the, quote, reckless behavior we've been seeing on TV in the past few weeks. Here's Dr. Rochelle Walensky, the CDC director, this morning.
I'm going to pause here. I'm going to lose the script, and I'm going to reflect on the recurring feeling I have of impending doom. We have so much to look forward to, so much promise and potential of where we are, and so much reason for hope. But right now, I'm scared.
And Dr. Walensky saying this morning that travel right now in the country is at levels higher than at any time we've seen before in the pandemic, exceeding what we saw around Christmas, Thanksgiving, and New Year's. And the data from the TSA bears that out. You can see that air traffic has been increasing steadily. And it seemed like what Biden was referring to there might be what we've been seeing from spring break, guys. And Dr. Walensky warned that often what we see is that the behaviors happening now, we don't see reflected in case numbers for a couple weeks. So she's very worried about a new surge. Frank?
All right, thanks a lot.
And of course, this week, the Passover holidays as well as Easter, people will be gathering, and I think the people in the CDC and the president clearly worried that people are letting their guard down. Meg Terrell, thank you very much. Frank?
Shares of Boeing, they are higher today, accounting for a good portion of the Dow's gains. The company getting an order from Southwest for 100 737 MAX planes. The stocks has been on a big of a comeback trail, but it's still a long way off of its record highs. Our traders weigh in on Boeing. That's next on Power Lunch.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
If you want to get back to your favorite places and feel confident they have put your health and safety first,
look for the Well Health Safety Seal.
I'm Dr. Richard Carmona. This is the Well Health Safety Seal from the International Well Building Institute, the global authority on healthy buildings.
The Well Health Safety Rating was informed by years of research and input from hundreds of leading virologists, public health experts, epidemiologists, and building professionals around the world.
The Well Health Safety Seal means that we'll feel better going into restaurants,
theaters, stores, hotels,
stadiums, and all the places that we love.
Everything may look the same, but the Well Health Safety Seal means that your health and safety are top of mind when it comes to
cleaning and sanitizing procedures,
air and water quality management,
emergency preparedness programs,
and health services.
So look for the Well Health Safety Seal outside
and feel more confident going inside. Learn more at wellhealthsafety.com.
Millions are saying yes to Allegra, the #1 allergist-recommended non-drowsy brand. Allegra works 2 times faster than Claritin, and unlike Zyrtec, it's non-drowsy. Say yes to the fastest non-drowsy 24-hour relief. Allegra.
Hey, Lily, I need a new wireless plan for my business, but all of my employees need something different.
Oh, we can help with that. Okay, imagine this. You're a mover. Rob. He's on the scene and needs a plan with a mobile hotspot. We cut to downtown. Your sales rep, Lisa, has to send some files, like ASAP.
So basically, I can pick the right plan for each employee.
Yeah, I should have just led with that.
With AT&T Business, you can pick the best plan for each employee and only pay for the features they need.
Bravo's Top Chef is back.
Are you ready? Woo!
And the judges are tougher than ever.
This is going to challenge you in ways you've never been challenged before.
Uh-oh. Set your DVR for the new season of Bravo's Top Chef Portland. Thursday, only on Bravo.
All right, welcome back. Check out Boeing shares rallying today after Southwest Airlines announced 100 firm orders of the 737 MAX jet with the option for 150 more. That model involved in 2 fatal crashes that grounded the jets for more than a year before they were deemed safe to fly again. So how do you trade the stock right now? Your Trading Nation team today, Ari Wald of Oppenheimer, Gina Sanchez of Chantica Global, and Lido Advisors. Gina and Ari, thanks for being here.
Thank you.
Of course.
So, Gina, I'm going to kick this question off to you first. Some big news for Southwest and for Boeing today. How do you play it?
So, look, Southwest is probably, they are the largest operator of Boeing planes, and they're Boeing's largest client. So the fact that they chose to order the Boeing planes rather than go to Airbus is a bit like finding out that your boyfriend decided not to dump you. So, yay. But the fact is it is a real reiteration that they feel safe with this, and Boeing has also resumed deliveries of the 787, which is the larger plane. So both of those elements are good news for Boeing stock, and quite frankly, it's good news for the travel industry.
Well, Gina, a lot of relationships breaking up during the pandemic, so it might not be that easy. Ari, we're going to turn things over to you. Technically, how are you looking at this trade?
Technically, the charts are bullish, Frank. We recommend buying the stock. We think it can be traded higher as long as it's above $230. And here's how I get to that level. First, let's look at a 2-year chart of Boeing. We can see it's stair-stepping higher since that climactic March 2020 low. And $230 has been an important level in recent months. First, that was the last summer's June peak. Stock peaked there again in December, then finally broke through in March. More recently, coming back and testing that breakout point. Very often, former resistance becomes support. We think that's what's happening in anticipation of a move up to $325. That's really the next formidable resistance level. That's where the stock started to gap lower during its COVID collapse. We like it. Bullish trend.
Ari's seen a lot of upside. All right, Ari and Gina, thank you so much for being here. For more Trading Nation, head to our website or follow us on Twitter @Trading Nation. Tyler?
All right, Frank, coming up, we are looking at the one thing that is causing sleepless nights for CEOs. We'll tell you what it is. Stay with us.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
Generally speaking, a strong dollar is good for the economy, but that doesn't mean that all companies are going to benefit equally. In fact, companies that do a lot of business abroad and those that are in manufacturing tend to be more vulnerable to a strong dollar. So if you believe that the dollar is going higher, you might want to check your exposure to these types of companies. I'm Joanna Payne, and Schwab is the better place for traders.
So Schwab taught me about 4-legged option strategies. I'm going to go with an iron butterfly spread on that fintech stock.
Nice. I just tried an iron condor.
Oh.
Only spread I've been introduced to is this onion chive.
It's time to trade up to Schwab, the firm invested in helping you become a better trader. Get commission-free online stock, ETF, and options trades. Expect more from your firm. Schwab, the better place for traders.
We see increased efficiency connected to more comfortable homes. Emerson's Energy Star certified Sensi Smart Thermostat uses geofencing to simplify how homeowners manage comfort and costs. Emerson, consider it solved.
Of all the companies on the Fortune 500 in the year 2000,
more than half no longer exist. Digital transformation isn't just a good idea. It's a matter of corporate survival. Enterprise AI enables organizations to use artificial intelligence at enterprise scale, solving previously unsolvable business problems to help you not just survive, but thrive. C3.ai. This is Enterprise AI.
Some say this is my greatest challenge ever, but I've seen centuries of this. With a companion that powers a digital world traded with a touch. The gold standard, so to speak.
Examining social and economic challenges facing Asian Americans, business leaders speak out on combating anti-Asian sentiment and improving prospects for success. A CNBC special, Race and Opportunity.
The thing about freedom is, freedom has no limits. There's no such thing as too many adventures or too many unforgettable moments. There will never be too many stories to write or too many memories to make. But when it comes to a vehicle that will be there for it all, there's only one. Jeep.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
As a cement mason, I use a Dove bar because I work with a lot of dust and dirt. Just washing the dirt and the grime off and just bringing you back to you. You see the glow? That's a Dove bar.
Dove cleans effectively, cares beautifully.
Good health starts with good sleep and a ring. Aura is the most accurate and personalized health technology wrapped around your finger. With advanced sensor technology, Aura interprets your body's signals like heart rate, body temperature, and the quality of your sleep, delivered through 3 simple scores specific to you: readiness, sleep, and activity. The better you sleep, the better you. Get your Aura ring today.
My last financial advisor? Chip. Computer Chip. Well, hey, Chip, let me tell you what's new in my life. I want to save for my kids' college. I want to retire in 5 years. You think Chip could help me? So now I've got a real-life person helping me. Now I've got personal capital.
Get our award-winning tools. Then talk to an advisor. Start today at personalcapital.com.
At Casper, we're delivering better sleep to homes everywhere. With a mattress so supportive and comfortable, it was awarded Best Overall Mattress by U.S. News. So, wherever home is for you, now's your chance to let great sleep be a part of it. Bring home superior Casper comfort and receive a special gift for a limited time, in-store or online at Casper.com.
What you doing?
Keeping track of my money.
On a napkin.
Gotta write it down.
Try Simplify by Quicken. It helps you stay on top of your money. It organizes your expenses, reminds you of upcoming bills, and gives you insights so you know how much to spend and save. But hey, if you have to write it down, how's that working out? Named the best budgeting app by the New York Times Wirecutter. Start your free trial today.
There's a 72% chance that you're overpaying for car insurance. But shopping for car insurance is a hassle and can take hours to find the best deal. That's why we created Gabby. Gabby is a free tool that does all the shopping for you. Gabby analyzes your existing policy and finds you the best rate for the same coverage. Within minutes, Gabby finds you quotes that would have taken hours to get on your own. And it works. Gabby saves customers more than $800 per year on average. Go to Gabby.com and stop overpaying for home and auto insurance.
Too much stuff, not enough space, and no time to deal with it? Look no further than Clutter. We'll get your things out of your way and into one of our safe, secure warehouses, all for an affordable monthly rate. Our professional movers will come pack everything up, photograph it for easy retrieval, transport it to a nearby Clutter facility. And if you ever need anything back, Clutter will deliver it to your door. So you have your stuff when you need it.
Thanks.
And not when you don't. Clutter. Storage simplified.
First Leaf Wine Club is the best way for you to discover your new favorite wines delivered straight to your door. It's super easy to skip and schedule deliveries. Take a short quiz, rate the wines you try, and every box gets better based on your input. First Leaf takes your feedback and millions of customer ratings to best predict the wines you will love, with over 98% accuracy. Each box of First Leaf wine is made just for you. Join today and get your first 6 wines for just $39.95.
Cisco, the bridge to possible.
It's a familiar story. Allergies ruining your sleep and next day too. Taking Xyzal at night relieves allergies while you sleep, so you wake refreshed. Plus, it works faster than Claritin and on first dose provides the same relief as Zyrtec at nearly half the size. Be wise all, take Xyzal at night.
I wish that I knew what I know now. When I was younger.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you can live the retirement you want. The right financial professional can show you how. This is what an annuity can do.
If you wake up thinking about the markets and want to make the right moves fast, get Decision Tech from Fidelity. You'll get proactive alerts for market events before they happen, and insights on every buy and sell decision. With zero commission online U.S. stock and ETF trades. For smarter trading decisions, get Decision Tech from Fidelity.
Diane retired and opened that pottery studio.
How'd you come up with all these backstories?
I got help from a pro. My financial professional explained to me all the ways Nationwide can help protect financial futures in Peytonville.
Nationwide can help the Greens get lifetime income as their son Kyle's moving back home. It helped set up a financial plan for Mrs. Garcia.
And he explained how Nationwide could help Mr. Paisley retire early and spend more time with his pal Peyton.
And their new band.
Exactly.
Yeah.
Don't forget the band.
I haven't.
We are on a mission to make the United States of America the safest country in the world. It is an audacious goal. But since when in our country do we shy away from what is hard, what is difficult, and what is impossible? We are Americans. The world is going to change more in the next 10 years than the last 100 years combined. Because we, together, are going to change it.
Well, let's run you through the markets on what has been a bit of a choppy, or maybe a better word would be a tentative day. As you see there, the Dow Industrials are up by about 0.2%. But the real news is being made by the Russell 2000, Frank, which is now down almost 3%. We should also point out that the 10-year yield has broken above 1.7%. It is at 1.72. That may be partly the reason why the Russell, those smaller stocks, are down as much as they are. Frank?
You know, Tyler, speaking of those bond yields, as you mentioned, up above 1.7%. We're seeing the NASDAQ down today. What we are seeing that's up, that's Bitcoin. Shares up more than 4.5%. Bitcoin often seen as a hedge against those rising bond yields and, of course, also responding to the NASDAQ declining at times. Back over to you.
Yeah, and we see oil moving a little bit higher, perhaps in relation to the backlogs in the Suez Canal or other things that are going on. But happily, that ship, the Ever Given, has been freed in the Suez Canal, and traffic there, bottlenecks will start to abate, we should hope. Frank?
Let's hope so. All right, well, thank you for watching Power Lunch. Closing bell. It starts right now.
It certainly does. Welcome to the Closing Bell, everyone. I'm Wilfred Frost, along with Morgan Brennan, who's in for Sarah Eisen. It's margin madness on Wall Street today. Stocks off to a cautious start to the week as details emerge of a margin call episode involving Archegos Capital. Credit Suisse and Nomura getting slammed, while the major averages are mixed as we head into the final hour of trade, with the Russell seeing the biggest declines as we stand. Let's have a look at what's driving the action. Yields are moving hard today, with the 10-year back above 1.7%. The Nasdaq's under pressure, though well off its earlier lows. Shares of Boeing are leading the Dow after Southwest agreed to buy 100 737 MAX jets. We'll have more on that story later. And there are fresh concerns about the rise in COVID cases across America. President Biden saying moments ago that he's asking governors, mayors and local leaders to reinstate mask mandates. We have 59 minutes left of trade. And Morgan, we are just high on the Dow, low on the other major averages.
Margin madness. I see what you did there, Wilf. All right, well, coming up on today's show, that ship has sailed. Oh, it's going to come all day today. Quarter-mile-long container ship that had been blocking traffic in the Suez Canal is finally unstuck. But will there be longer-lasting impacts to the global commodities market from that backup? We're going to discuss that with Goldman's Jeff Currie. Plus, former SEC Chairman Harvey Pitt will be with us to talk about the Archegos margin call incident and whether it will lead to regulatory backlash. And let's begin right there with Archegos. Our Leslie Picker has the latest on what exactly happened last week and into this week. Also, Wilfred has a closer look at the impact on the banks themselves. But Leslie, let's set the scene with you.
Hey, Morgan, that's right. The post-mortem is still being written. There are a lot of unanswered questions, but here's what we do know. It all started back on Friday morning when Goldman Sachs sent a note to clients offering block trades in several Chinese internet names at steep discounts. These included Baidu, Tencent Music, and VipShop. But throughout the day, the stock sales kept coming from across Wall Street. Discovery, Farfetch, GSX, Viacom all offered at steep discounts. Now, quickly, traders scrambled to figure out what exactly was going on. Ultimately, signs pointed to a little-known firm called Archegos Capital Management. Now today, seemingly a household name, but it's a family office managed by Bill Huang. CNBC reported over the weekend that the firm faced a forced liquidation on several over-levered positions. Archegos did not respond to our request seeking comments, but some of his trading was done via swaps, giving him the capacity to be even more levered without the need to disclose what he holds. And he worked with at least 6 prime brokers, none of whom had a full picture of his exposure, we're told. Now, the FT, citing sources familiar, reporting that a number of the banks were lending to Archegos at a ratio, I can't even believe I'm saying this, of 8-to-1 in some trades. That ratio got as high as 20-to-1. That amount of leverage is multiples higher, just to put it into context, than many of the riskiest hedge funds are out there. It's virtually unheard of on Wall Street. Wilf.
I know. It's a fascinating read, that latest FT article. I just wonder, are we talking just a simple call option and whether that could maybe make some of those numbers seem a bit bigger than they are? But either way, there's no doubt about some extraordinary leverage in this story. And let's just now cover a bit of the angle from the bank side of things. So late last week, various prime brokerage departments started working with Archegos Capital to try and help them out from some of these positions, but it didn't last very long, as quite quickly one of the prime brokerage's units started making margin calls. That's likely late Thursday night based on my conversations, and the others were all forced to follow fairly quickly. Various conversations with sources at Goldman Sachs and Morgan Stanley confirmed that while they had large exposure, $10 to $15 billion respectively, they've managed to offload those positions without any serious losses. A source at Goldman Sachs explaining this was due to having very high collateral requirements with this particular client and good risk management overall. The same would presumably apply to Morgan Stanley, given that both did have high exposures overall, that they had a high amount of stock that they had to place over the last couple of days. Meanwhile, Deutsche Bank on the record told me, quote, "We have significantly de-risked our exposure without incurring any losses. We're managing down the immaterial remaining client positions on which we do not expect to incur any loss," end quote. This means the bulk of the losses on the bank side appear to be falling on Credit Suisse and Nomura, both of whom have warned on the record about the situation, though the size of the loss is still to be confirmed. It is expected to be in the billions, and it comes at a particularly tough time, by the way, for Credit Suisse following recent exposure to the Greensill Capital scandal as well. Share prices for the group highlighting that expected level of exposure. Credit Suisse and Nomura down a lot. The others not down so much, and also, I think, importantly, off their lows, as all of us and our peers have been reporting these sorts of stories. And the thing I'd just end with, guys, is quite the level of risk that has been taken. On the hedge fund side, we're talking a stock, for example, if we focus on Viacom CBS, that was up 9x. It was up at least double since the crazy GameStop madness. So at whatever point this hedge fund wanted to get in and get exposure, you wonder, why not start to take some profits and not be squeezed as they were once the company did a secondary listing, which one expects is probably one of the triggers that started causing problems for this last week. And on the other side, on the prime brokerage side, and this is probably more focused to the Credit Suisses and Nomura's of this world, if they're the ones that are going to end up facing billions of losses, what exactly are you taking that much risk for? Because an annual fee, at best, for a hedge fund of this style, for prime brokerage units, it's going to be in the tens of millions of dollars. It's not going to be hundreds. And you're taking risk to the downside of many multiples of that. It just seems very, very imbalanced, I guess. You know, Leslie, as we were discussing there, and it's a story that's captivated all throughout the day.
Yeah, based on kind of what you laid out right there, it defies the typical logic that those who have been watching Wall Street for decades now have come to appreciate. You know, there's just so many more questions than answers at this stage, and a lot of that has to do with just the risk appetite of the various parties involved. And you know, I think that's one of those things that we're going to have to unpack the exact motives in the days and potentially even weeks ahead. The SEC said it was closely monitoring the situation. So I think there will be more news that comes out of this. This is not going away today. But you bring up a good point, Wilf, that the risk appetite across several parties involved here is quite surprising and is really what has people, you know, captivated by this story.
Yeah, I mean, it's also, Leslie, I know we talked about it a little bit this morning as well, but it's worth, I think, revisiting the fact that, you know, whether there will be spillover to other family offices or other funds that might, you know, have also been involved in this trade to some extent, and also just highlighting in general how much leverage is basically out there within pockets of the market right now. I mean, the SEC has taken a look. We know that based on some reports, but you also have to wonder what an entity like the Fed is going to be doing to approach this situation, at least from the banking side as well.
Yeah, it's a great question, and it's one that I've been kind of asking around about all day. At this point in time, it does seem to be largely idiosyncratic to Archegos at this time. Now, there are some other funds that have faced declines for having similar exposure, but we're not really seeing as much in the way of kind of unwinding, large margin calls, nothing at least of the size and scale that has taken place with regard to Archegos at this time. Now, like I said, the story's not over, so we'll see what this brings. Obviously, it's created some huge moves in some pretty significant names. And so we will probably see within the next few days which hedge funds have felt that with regard to a dent in their returns. But at this point in time, Archegos really seems to be the one fund, the family office, interestingly enough, that has been caught up in all of this.
Yeah, and just the other things I'd add to finish. Clearly, we haven't seen major infection of the rest of the markets today. Essentially, the Russell's down a bit, but the other indices aren't, and that's an encouraging sign. The other point I'd just say in terms of this overall, who's taking so much risk, if we're talking Deutsche Bank, who on the record, and Morgan Stanley and Goldman Sachs, according to our sources, Leslie, end up without any serious losses here, but presumably have earned fees from this hedge fund relationship in the past, then they haven't taken too much risk. They've managed it well. If it was a risky part of the business, they had the right checks and balances that they got out in time. We need all of that to be confirmed, of course, in the weeks and months ahead. But that is worth noting. It is also perhaps worth pointing out that even if you're Nomura and Credit Suisse and you do take big losses here, if there was anything untoward done by the client, and the client had way bigger exposure than they were letting on, and multiple exposures through different prime brokerages, and perhaps they misled those investment banks about it, then there's also going to be some level of repercussion in that sense. There might have been outright wrongdoing by a client. Now, maybe your risk management should have been able to catch that sort of thing. But nonetheless, I think there's quite a lot of things to still be turned over to explain this. And then just finally, Morgan, in terms of the scale of this event, I get the feeling this was a once-in-a-decade unwinding, as we've been mentioning all day, and that there might be some other funds out there that get a little bit hurt on that. But the conversations I've had is they don't expect the once-in-a-decade scale of this to be repeated in the weeks ahead. Again, you know, touch wood on that, but that seems to be the case at the moment.
Touch wood. I say knock on wood.
Yeah, you guys say knock on wood.
All right. Leslie, thank you.
That's one of the phrases that's different, but we all get exactly what you mean.
Yeah, I still understood what you meant. I did. I am curious, though, Wilf. I know we got to move on here, but I am curious how all of this sort of reflects back on Credit Suisse, given you mentioned it, the Greensill situation that's going on, everything that's happening in general with their asset management. I feel like there's going to be more to that conversation.
Yeah, it reflects badly. I mean, this camera's gone haywire a little bit, but maybe it's coming back to me. But it reflects badly, comes at a bad time, and of course, bad time in the short term with Greensill Capital, but bad timing in the last couple of years with them. They've had all sorts of issues with the corporate scandal, with the spying issues as well. So we'll see how that shakes out coming forward. The only quick final point I'd also make in terms of this was, who was the investment bank? And the only thing I've been able to confirm is, according to sources, that it wasn't Goldman Sachs that started the margin call, because there's definitely a process here where whoever starts to be able to act first will probably suffer the least losses. Also, what factors into this is good risk management and collateral in the first place, and possibly also your level of exposure in the first place. All of those things, I think, tilted badly to Credit Suisse and Nomura, and tilted better to the likes of Goldman Sachs, Deutsche Bank, and Morgan Stanley.
All right, there's some good context right there. We're going to continue this conversation. We're going to bring in Cassandra Torian from Bell Rock Capital. Thanks for being with us, Cassandra.
Sure, happy to be here.
So given the fact that we are seeing, financials take it on the chin more broadly today, one of the worst performing sectors in the S&P, and some weakness in some of these names that had exposure, but maybe de minimis in terms of the impact, Goldman Sachs, Morgan Stanley, that Wilf was just talking about. Do you see buying opportunities here?
Oh, gosh, absolutely. There's a buying opportunity. I'd probably leave Nomura and CS out of saying that, but for the rest of the group, boy, you know, you've got some tremendous valuations. There's a real value play still here in a lot of these stocks, and a lot of the, you know, JP Morgan, Bank of America, Goldman, all of them. And I think you all are right that some of these companies have really good risk management teams, and they did their job, and that's what it's proved by them saying this is going to be fairly de minimis to us. And so as a result, I think this little blip is a buying opportunity, but also keep in mind that this also kind of backs up the Fed's policy of saying that maybe by the end of June, that a lot of these stocks are these companies are going to be able to start their stock buybacks again and reinstate dividends. So that's just another reason why to take advantage of this. I mean, when you can buy some of these below book value, that's a tremendous opportunity, which we haven't seen in a couple of years.
Yeah, interesting that JP Morgan's note today on this questioned whether Credit Suisse's buyback announcement of late last year will now be under threat, given the scale of exposure they have, though that doesn't apply to some of the US names. Cassandra, how worried are you more broadly? And clearly the banks would be particularly exposed to this, though all equities might be something to watch, that there's just a huge amount of leverage to the upside that perhaps we're not all pricing in, and we're not saying that we're going to see everything collapse and half like Discovery and CBS have, but it's kind of odd to see that happen to those types of traditional value names that we know well. We're not talking about SPACs here. We're not talking about Teslas. We're not talking about recent IPOs.
Absolutely. But, you know, in looking at the list of media companies specifically named in the news regarding what they really have taken a hit in, I'm not sure I would couch them simply as value plays. I think they may have been playing more the momentum. I mean, if you look at CBS in the last, Viacom CBS in the last couple of weeks, I mean, it's been strongly to the upside until, you know, last week sometime. And so I just wonder if, you know, momentum playing was really what was going on here. I'm not sure if that's the right approach for a family office, but it's none of my business. But certainly the names that were mentioned, I think, are so far really, I think, in a sector specific. And so, you know, I look at my screen and I'm not seeing what I would consider the buy and hold value names right now doing very badly. You know, Procter & Gamble, Campbell Soup, things like that. Those are the kind of true value names that aren't getting hit. So that tells me more about the composition of the portfolio. More risk there than you'd think.
Cassandra, thanks so much for joining us. Good to see you.
Take care.
After the break, whatever floats your boat, the Suez saga coming to an end as the massive Ever Given ship is finally free. We'll discuss the potential ripple effects of the day, long traffic jams on the global commodities market. Jeff Curry joins us from Goldman Sachs. That's a good one. Yours was better, though. You're watching Closing Bell. We're back in a couple.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad, get E-Trade and start trading today.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda HR-V, only at the Honda Dream Garage Spring Event.
These are the people who work on the front lines. They need a network that's built right. That's why we created Verizon Frontline, the advanced network and technology for first responders. Built on America's most reliable network. Built for real interoperability and built for 5G. It's America's #1 network in public safety. Verizon Frontline, built right for first responders.
Over 10 years ago, we made a promise to redefine everything a truck can be. And while we've made good on that promise by winning back-to-back Motor Trend Truck of the Year awards, the work is never done.
'We're hoping things will pick up by Q3. Yep.
Never settle with Power E-Trade. It has easy-to-use tools and some of the lowest prices. Don't get mad, get E-Trade and start trading today.
I don't like veggies.
What?
Whatever you have at home, Knorr sides can turn nutritious veggies into mouth-watering meals. Veggies taste amazing with Knorr.
$85.55.
The quarter-mile-long Ever Given ship that became diagonally wedged in the Suez Canal was freed this morning and will undergo technical inspection. The ship bottomed out last Tuesday, causing further damage to an already struggling global supply chain. But now traffic in the vital trade route, which conducts about 12% of global trade, can resume. Let's bring in Jeff Curry, Global Head of Commodities Research at Goldman Sachs. Jeff, good to see you. Thanks for joining us.
Great, thanks for having me.
Were you a little surprised we didn't see more upward pressure on commodities generally, but oil in particular, over the last week because of this, or is it to be expected that the impact was small in the short term?
Well, let's put it in the context of the demand shock that we entered over the course of the last week. You know, you had lockdowns announced in the EU, bans on international flights. So you had a significant demand shock coming out of Europe. So this was an offsetting force against that. And so, you know, when we go back, the last time they announced all of these lockdowns, you know, you're going back into November, it was a similar situation. We had a weather shock that offset some of it, and again in January. So this is one of those just lucky offsetting events against those lockdowns in the EU. But nonetheless, part of the reason why the markets are struggling right now is this demand shock is much larger than this potential supply shock. And I think the other issue, too, is mostly resolved right now. But what I think I want to emphasize, what it really sits at the core of one of our tenets of our structural bull market thesis, which is the need for resiliency in supply chains. This just underscores how exposed supply chains are globally, whether you're talking oil, metals, and commodities more broadly.
When you talk of oil and industrial metals, Jeff, do you think some of these potential demand threats because of semi-lockdowns in the short term in Europe are a big potential hit to the prices, or are they short-term, temporary, and as particularly the UK and US continue their vaccination paths, that hopefully things will rally later in the year?
Well, I mean, we're still positive on the rally later this year, which is why we call these a speed bump. The question is just how big of a speed bump are they? We're not going to completely dismiss them because there is a new variant that is concerning that is on the continent in the U.S. East Coast. But our base case is we're going to get through this. That if we think about if OPEC, this week announces it's going to roll forward its production cuts, then you've easily accommodated them. And we're sticking with our $80 a barrel target for the third quarter on oil and 10,500 on copper. And actually in Latin America, there's a 20% drop in Chilean copper exports, which underscores this is also impacting the supply side.
You just touched on it, but Jeff, the OPEC Plus meeting that's going to be happening later this week, what are your expectations? Is there any room for a surprise there?
There was a surprise last month, and I think, the consensus view is they're going to roll over again this month. Why do we think they're going to roll over? The bottom line is we still haven't seen a supply response. Let's go back to January when Saudi Arabia did the unilateral production cut. They took their production down 11%, and prices are up 40%. Not a bad trade-off, and we've still not seen a supply response globally. And by the way, it's not just oil we haven't seen a supply response. It's the same thing even on the metals. So what that's telling you is supply is nearly inelastic in the very near term, and that they own most of the spare capacity.
So we have a new administration at the helm here in the U.S. Just over the weekend, you have this quote-unquote comprehensive strategic partnership that was signed between China and Iran. Iran's going to be supplying more oil to China. You can't talk about the crude market and not talk about geopolitics. Are things shifting on the world stage, and what does that mean for exports, say, of U.S. products and U.S. crude?
I think one of the key reasons, going back to this whole idea of resiliency in supply chains, is the escalating trade war between U.S. and China. Call it a Cold War or whatever you want to call it, but what this is going to introduce is the need for self-reliance. And so when we talk about this resiliency in supply chains, it's building strategic reserves, which China already has, whether if it's strategic reserves of grains, copper, oil, because think about U.S. is a large exporter of both grains as well as oil. So that's one of the key responses. But even in the U.S. alone, you have Made in America, focused on creating independent supply chains in the United States. So I think this is going to be a feature of the market going forward. It's going to create more lengthy supply chain quantities. And I like to emphasize, when did the Americans and Europeans build all of their strategic reserves? In the 1970s in the Cold War with the Soviets at the time. So I think we're going back to a period very similar to that in which you have a lot of these inefficiencies introduced into the system.
Jeff, just wanted to finish quickly on gold. I know you guys have a $2,000 price target, so some upside from where we are now. But a more broad long-term question, do you think gold will continue over the next decade to be one of, if not the primary hedge against risk and protection against monetary debasement, or is its role in that sense kind of a thing of the past now?
No, I think can Bitcoin and gold coexist? Absolutely. And they're actually now we're watching the trading patterns of Bitcoin. It's acting very differently than gold. Gold is your traditional defensive asset. Bitcoin is acting more like a risk-on inflation-type hedge, more tied to what's going on in the economic cycle. So they may be defensive assets, but they're trading very differently, which means there's room for both to coexist. Now, in terms of thinking about you put that pool together of defensive assets, we've got roughly about 2.5 trillion in gold, 2 trillion in Bitcoin and digital currencies. That's roughly $4.5 trillion. If you go back to the maximum amount of defensive assets as a share of AUM, total AUM, it was in 1979, 1980. In today's dollars, that'd be about 5 trillion. So if we look at the digital currencies and gold, you lump them all together, about 4.5. Max historically is 5. So we got to ask as a group of a whole, are we going to take this higher? Is the situation more serious than 1979, 1980? That's a question we'll have to answer.
Yeah, I mean, just the fact that you're invoking the 1970s right now. I wish we could keep digging into this a little bit more. But, Jeff, come back, because I have a feeling we're going to be looking to talk about it even more. Jeff Curry, thank you.
Thanks for having me.
We got 35 minutes to go before the closing bell. And as you can see, session's pretty mixed for the major averages. The Dow is up about 0.5% right now. The S&P is just about flat, and the Nasdaq is under pressure, down 0.4%. After the break, the head of the CDC is raising a red flag about rising COVID cases in America. We're going to bring you up to speed on the latest in the fight against the pandemic, including what President Biden just said about vaccines. And as we head to break, check out some of today's top searched tickers on CNBC.com. The 10-year yield on top, followed by Viacom, CBS, Tesla, Apple, and Boeing. We'll be right back.
Hi, Bitcoin. Low fees. Osprey Bitcoin Trust is the lowest cost tradable Bitcoin product. All from the comfort of your brokerage account or your IRA. Just remember OBTC and say goodbye to high fees.
No one likes to choose between safe or sporty, modern or reliable. We want both. We want a hybrid. So do banks. That's why they're going hybrid with IBM. A hybrid cloud approach helps them personalize experiences with Watson AI while helping keep data secure. From banking to manufacturing, businesses are going with a smarter hybrid cloud, using the tools, platform, and expertise of IBM.
Out here, we know you're ready for a fresh start in a new season. When gardeners dig into fresh ground. When landowners need a little horsepower to get property looking its best. And when taking care of pets and animals gives us new purpose. Out here, 42,000 of us in over 1,900 Tractor Supply stores are here to help with homegrown know-how and everything you need for spring. And with the services that make shopping easier than ever. Tractor Supply, everything for your life out here.
Our Confident Forever plan is possible with a CFP professional.
A CFP professional can help you build a complete financial plan. Visit letsmakeaplan.org to find your CFP professional.
A time frame that is really unprecedented.
Do you take responsibility for that?
115 sustained wins.
Everybody is back in the game. Where do we go?
What do you make of this report?
How does the moment become a sustained movement?
I've reported from here during 3 different presidential administrations.
Should we be lifting the tariffs?
Because words matter.
Welcome back to Closing Bell. President Biden speaking out about COVID vaccinations last hour, just after the head of the CDC issued a warning about rising cases in America. Meg Terrell has the latest for us. Meg.
Hey, Morgan. Dr. Rochelle Walensky, the CDC director, saying she feels a sense of impending doom when she looks at the case trajectories here in the United States right now, saying that she's scared by what she's seeing. Overall, across the U.S., about an 11% increase in the numbers of new daily cases we are seeing. And in a few states, more pronounced than others, Michigan, for example, really seeing a big uptick. New York and New Jersey as well, seeing cases rising higher, guys. Then we heard from President Biden talking about progress with vaccines and vaccinations, but reiterating that he's concerned as well. Here's what he said.
New variants are spreading, and sadly, some of the reckless behavior we've seen on television over the past few weeks means that more new cases are to come in the weeks ahead. With vaccines, there's hope, which is a very good thing, to state the obvious. But people are letting up on precautions, which is a very bad thing.
Now, Biden saying by April 19th, 90% of adults in the U.S. will be eligible for a vaccine. Here's what we're looking at in terms of expected supply from companies. By the end of May, expected to be enough for 300 million people here in the United States. The administration saying they're doubling the number of federal pharmacies that will be able to do vaccinations as well. And so we will see this increase, guys. But the president, given what we're seeing with case numbers, calling on governors to reinstate or maintain their mask mandates. And he was asked as he was leaving having this press conference. Does he think that some states should pause their reopenings based on these trends? He said yes. Wolf?
Meg, thanks so much for that. And to your point on the vaccine front, New York announcing today that over 30s from tomorrow can get their vaccine. Very exciting news indeed. Meg, thank you. Time for a CBC News update with Rahel Solomon. Rahel, over to you.
Hi, Wolf. Hello, everyone. On its opening statement at today's trial of Derek Chauvin, his attorney argued that the former Minneapolis police officer was just doing what he had been trained to do with a suspect resisting arrest. And despite all of the attention on how long Chauvin's knee was on George Floyd's neck, attorney Eric Nelson asserts that Floyd was not asphyxiated.
Evidence will show that Mr. Floyd died of a cardiac arrhythmia that occurred as a result of hypertension, his coronary disease, the ingestion of methamphetamine and fentanyl, and the adrenaline flowing through his body, all of which acted to further compromise an already compromised heart.
And New York is now the latest state planning to make all adults eligible for a shot. We know that Wolf is very excited about this one. That's going to start on April 6th, with those 30 and over becoming eligible tomorrow. But now to a vaccination setback in Canada. An advisory panel recommending against giving that AstraZeneca vaccine to people under 55, at least for now. The panel is citing safety concerns over potential blood clots. And on the news with Shepard Smith, hear what Dr. Anthony Fauci is saying now about the increase in COVID cases that has his colleague, CDC Director Rochelle Walensky, talking about her impending sense of doom. That's the CNBC News update for this hour. Wolf, I'll send it back to you. I should say, for the record, I'm also very excited.
Well, I was going to say, it's a bit of an understatement to say excited. I haven't got my appointment yet, but honestly, once we get vaccinated, it is just...
I know, but you know what's funny? I thought it was funny how your natural reaction was the 2 thumbs up. It's like the Boris Johnson photo when he got his vaccine. It was like 2 thumbs up.
His was more. That's a bit more Boris-like. Anyway, that's my impersonation. We should move on. Rahel, thank you. We'll see you next hour. Still to come, Truist upgrading Twitter today, saying it has the most exciting product roadmap we've ever seen of the company. We'll speak with an analyst behind that call ahead. And later, former SEC Chairman Harvey Pitt says the Archegos margin call has eerie similarities to the 2007-2008 meltdown. He'll join us to explain that. And as we head to break, here's a check on bonds yields moving higher today. The 10-year currently 172 around that level, the 30-year 242. We're back in a couple minutes.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Healthy and equitable relationships are the foundation of a happy life. We are meant to love and to be loved. That has been Bumble's driving force every day since we started, and will continue to fuel us as we embark on being a public company. So today is day one of our commitment to be the platform to meet new people, whichever life stage or situation you're in.
FlexShares ETFs are built with advanced modeling to fill portfolio gaps and target specific goals, strengthening client confidence in you. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to flexshares.com for a prospectus containing this information. Read it carefully.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
Tonight, the Derek Chauvin murder trial. Both sides present their case as the first witnesses testify. Plus, new data on COVID vaccines, the protection after just one dose.
The facts, the truth, the news with Shepard Smith.
We're hoping things will pick up by Q3. Yep.
Never settle with Power E-Trade. It has easy-to-use tools and some of the lowest prices. Don't get mad. Get E-Trade and start trading today.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
Breyers is always so delicious. I can tell that they use your milk material. Great job. You're welcome.
Breyers Natural Vanilla is made with 100% grade A milk and cream and only sustainably farmed vanilla. Better starts with Breyers.
These days, we're all together all the time. Working, playing, cleaning. Turns out family life can be, well, gross. But Care.com can help with lots of great housekeepers to put your messy place back together again when it's right for you. It costs less than you think. And a clean house feels so good. Get the housekeeping help you need. Care.com.
And $100 off.
We've got, 24 minutes left in the session. Here's where we stand, up healthy, 154 points on the Dows. Right near the session high was 160 moments ago. S&P's also higher. The Nasdaq still lagging, down 0.4%, and has slipped, in fact, a little bit as the Dow's pulled higher in the last half an hour. So Russell's still down the most, down 2%. Straight ahead, Twitter getting an upgrade. At Truist, the firm says its company's most exciting product roadmap ever is being rolled out. We'll get the word on the street and the call next.
CNBC Sector Sort is sponsored by Sector Spider ETFs. Sector Spider ETFs. Visit us on the web at sectorspiders.com.
Born from discipline. Consistency rewards. Columbia Threadneedle Investments.
Guys, is this your new normal?
My problem is right in the middle.
All right here. Lose the weight with Nutrisystem for Men. Lose up to 13 pounds in your first month. Lose weight now. Money back guarantee.
I got to eat all of my favorite foods.
Make Nutrisystem for Men your new normal.
That's all I did. I ate the food, I lost the weight.
Act now and save 50% off a month of food and shakes.
Go online or call 877-959-FIT8 to save 50% on a month of food and shakes.
Bike shop, please hold.
Bike sales are booming. You need to hire.
I need Indeed.
Indeed you do. The moment you sponsor a job on Indeed, you get a short list of quality candidates from our resume database. Claim your $75 credit when you post your first job at Indeed.com/bike.
America has fostered a free and accessible internet that grows our economy and strengthens our national security. How our leaders respond to tech concerns will shape the internet of the future. Privacy, national security, American innovation. The stakes are high. Smart regulation will strengthen confidence in America's tech industry and promote our values around the world. Our leaders in Washington can help ensure that America preserves her competitive edge. Learn more.
Grubhub Perks give you deals on all the food that makes your boogie. Get the food you love with Perks from Grubhub. Grub what you love.
This is how you become the best.
Try to be best, cause you're only a man, and a man's got to learn to take it. Try to believe, though the going gets rough, that you gotta hang tough to make it. You're the best around. Nothing's gonna ever keep you down. You're the best around.
Don't get mad, get E-Trade, and take charge of your finances today.
On Squawk Box, Morgan Stanley CIO Mike Wilson. A big picture perspective on the recovery, risks, rates, and business cycles. Squawk Box, 6 Eastern on CNBC. Watch Squawk Box anytime on demand.
Welcome back. Shares of Twitter up nearly 150% over the past year, but down 20% from the high. The company getting an upgrade today from Truist, though, rating the social media giant a buy with a $74 price target and writing that it has, quote, the most exciting product roadmap we've ever seen of the company. Joining us now is the analyst behind that call, Yusuf Scully. Yusuf, good to see you.
Good morning.
All right, so you upgraded to buy. You had a hold rating since 2018. Why now? What's so impressive?
Well, what's impressive is really just the roster of the products they have rolled out in the last, call it 3-4 months, and especially what they have in store for the next 9 to 12 months. So sometime back last year, they rolled out topics, which allowed people to now follow topics instead of following people. That immediately drove user engagement, user growth. They launched Fleets, which is kind of the equivalent of Instagram stories or Snap stories. That also is showing some traction. They're launching subscription. They're launching an equivalent to Clubhouse, et cetera. And that's on the consumer side. On the advertiser side, whereas before, it was really hard for advertisers to advertise against this 200+ million users, it has become a lot easier. They've revamped their new ad server. They've revamped their new map products, which focuses on mobile app promotion, et cetera. So we think that finally the stars are aligning where they have the right advertiser or the right products for advertisers, while at the same time growing users and user engagement. So we're pretty excited about it.
So is this more an engagement growth story than it is a growing ARPU story, or a bit of both?
Oh, it's very much both. I mean, look, relative to a Facebook, this is a very, very, very small platform, right? At 200 million, they're finally starting to get the scale to get a lot of advertisers. But relative to Facebook, this is maybe 1/10 the monetization of Facebook. So they still have plenty of headroom. They still have plenty of opportunity, but it's really their war to lose in a way, because what they need to do now is increasingly show to advertisers, whether they're direct response advertisers, which they only have 15% of the revenues generated from, or SMEs, which typically don't advertise on this platform. It's really their job to try to convince as many of these advertisers to come onto the platform. But the book has already been written. We saw Snap do this a couple of years ago, and they've done a great job at it. We saw Facebook do it 8 or 9 years ago. So it's really more of an execution story as far as the ARPU and as far as getting more advertisers on board right now.
But what about the regulatory risk? I mean, we saw Jack Dorsey and other tech CEOs testifying again in front of a new congressional composition last week. We've got Lena Khan, looks like, coming in at the FTC. I mean, could there be a regulatory crackdown?
Absolutely. I mean, that's the biggest risk. But to their credit, this is not a Twitter risk. This is a risk to the entire social platform environment, whether it's Facebook or Google or Snap or these guys. So our view is the regulatory framework is going to keep evolving, right? Section 230 is probably going to be rewritten. The question is, how and to what extent these platforms will still be protected under Section 230. But we think that's already baked, honestly, into a lot of these valuations. I mean, we like Facebook, we like Google, and we like Twitter. So, and relative to other smaller cap names, these are some of the cheapest names in our space, whether you adjust it for growth or not.
All right. Well, your upgrade certainly sending shares of Twitter higher today, up about 3%. Yusuf Scully, thanks for joining us.
Thank you, guys.
Coming up, why Citadel's Ken Griffin says we could see another retail trading boom, and Boeing gets another big order for its 737 MAX. Those stories and more when we enter the Market Zone.
This is how you become the best.
You're the best around. Nothing's gonna ever keep you down. You're the best.
Don't get mad. Get E-Trade.
Everything in our garage is inspired by our racing spirit. Race in for a great deal on the Honda CR-V. Only at the Honda Dream Garage Spring Event.
Dad, it's a video call. Hold the phone in front of you.
How's that?
Get Mom.
Power E-Trade gives you an award-winning app with 24/7 support when you need it the most. Don't get mad, get E-Trade and start trading today.
The day after chemo might mean a trip back to the doctor's office, just for a shot. But why go back there when you can stay home? With Neulasta Onpro, strong chemo can put you at risk of serious infection. In a key study, Neulasta reduced the risk of infection from 17% to 1%, a 94% decrease. Neulasta Onpro is designed to deliver Neulasta the day after chemo and is used by most patients today.
Neulasta is for certain cancer patients receiving strong chemotherapy. Do not take Neulasta if you're allergic to it, or Neupogen, filgrastim. An incomplete dose could increase infection risk. Ruptured spleen, sometimes fatal, as well as serious lung problems, allergic reactions, kidney injuries, and capillary leak syndrome have occurred. Report abdominal or shoulder tip pain, trouble breathing, or allergic reactions to your doctor right away. In patients with sickle cell disorders, serious, sometimes fatal crises can occur. The most common side effect is bone and muscle ache.
If you'd rather be home, ask your doctor about Neulasta Onpro. Pay no more than $5 per dose with copay card.
Every day, it's getting faster. Everyone says go ahead and ask her. Love like yours will surely come my way.
How is NHS Scotland vaccinating millions? With fast, safe, and reliable workflows. Whatever your business is facing, let's workflow it.
Breyers is always so delicious. I can tell that they use your milk Matilda. Great job. You're welcome.
Breyer's Natural Vanilla is made with 100% grade A milk and cream and only sustainably farmed vanilla. Better starts with Breyers.
Hey, moms. We see what you're up against. Work, school,
Dishwasher.
messes.
Yes, you. You guys let out the dog.
But not every job has to be yours. At Care.com, you can find babysitters, tutors, dog walkers, and housekeepers ready to help.
Love you.
Because not having to do every single thing feels amazing. Care.com. Find care for all you love.
If you're tired and you know it, skip the gym.
If you're anxious and you know it, take a break.
If your heart rate variability is 50 and your body temperature's normal.
If your breathing rate is optimal and you know it, bring it on.
Aura. Know why you feel, how you feel.
Every once in a while, the doorbell rings and I get a little surprise. A box of quality First Leaf wines I'm sure to enjoy. With over 200 bottles, that little surprise could be any one of First Leaf's award-winning wines. In fact, 92% have won awards. It's top-flight quality that's within reach, and your satisfaction is guaranteed. And because First Leaf cuts out the middleman, I'm saving over 60% off retail. Join today and get your first 6 wines for just $39.95.
For tonight's sleep story, I'd like to take you to an absolutely gorgeous place on this planet. A guest house, high on a snowy mountain, where the breathtaking view travels for mile after mile. My name is GK. If you're in need of a little inspiration or just a peaceful sleep, join me for tonight's sleep story.
Why don't I have more savings? I didn't go on vacation last year. I didn't do...
Having trouble staying on top of your money? Try Simplify by Quicken. It organizes all your finances in one place, keeps track of your spending, and shows where your money goes, from rent and car payments to food.
Sushi's here!
And food delivery.
Right.
Named the best budgeting app by the New York Times Wirecutter. Start your free trial today.
Too much stuff, not enough space, and no time to deal with it? Look no further than Clutter. We'll get your things out of your way and into one of our safe, secure warehouses, all for an affordable monthly rate. Our professional movers will come pack everything up, photograph it for easy retrieval, transport it to a nearby Clutter facility. And if you ever need anything back, Clutter will deliver it to your door. So you have your stuff when you need it.
Thanks.
And not when you don't. Clutter. Storage simplified.
already happening, including higher input costs and higher cost metrics across the board. So what really rallied off the lows were low-quality stocks and small cap stocks, and that's what's getting hurt today. We're rotating out of those names already into the middle stage economic recovery type plays, which should continue to include industrials, materials, financials. I really like energy in here. And I think these plays that have really ramped up from the lows, especially from the September lows, like the small caps and the lower quality stocks, are going to take a backstage because the markets are already moving past mentally the early stage recovery plays into the mid stage recovery plays. And it might mean that the averages have trouble continuing to hit new highs as we continue to rotate. And I think we rotate into higher quality names, but only at reasonable prices. So they're going to avoid the high PE stocks, and they're going to avoid the low quality stocks all at the same time. It's going to make a stock pickers market, not necessarily a market for the averages.
Okay, well, Citadel's Ken Griffin warning today that the rise in retail investors may indirectly threaten the bull run we've seen in the stock market. In an interview with the FT, Griffin said that, quote, given the incredible amount of stimulus that has been unleashed, there is a possibility we see a real surge in inflation. He goes on to say that there's a much higher chance that this inflation becomes, quote, permanent and structural. More of a chance of that happening than at any other time over the past 12 years. Michael, I'll go to you on this one first. I mean, we've been having this debate for weeks, if not months now, about inflation. And certainly we've had a number of companies come out in their earnings, for example, in recent days and talk about higher input costs and talk about the fact that they're going to realize higher prices on consumers as well. But I guess the bigger question is it temporary? Is it transitory? Or could it actually be something that takes root and becomes, heaven forbid, a runaway situation?
Yeah, so that's the multi-trillion-dollar question. And right now, everybody seems to be worried about inflation. There isn't an investor that you speak to that's not asking whether or not this is temporary or structural. And I would just point out, when is the last time that everybody saw the big risk coming? Usually, risk comes from things that we're not paying attention to. So, for example, Morgan, this morning, I went down to feed my dog for breakfast, and she told me to go to Chewy and start hoarding extra bags before prices rose. So everybody is worried about higher inflation. Now, just because we're talking about it, obviously that doesn't mean that it's not going to arrive. But the market seems to be getting ahead of that. You see break-evens at multi-year highs. You see the commodity stocks at multi-year highs or getting there. So I point taken. The $1,400 stimulus checks, the reopening, I get it. But I just think that I give the market more credit for that and think that it's not going to be shocked when we do get the economic reports. We do see the producer prices, the consumer prices rising. I would expect the market expectation to be rather muted.
Jim, to that point, I mean, traditionally, one could happily argue that more inflation means higher exposure to equities.
You could, because certainly higher inflation isn't going to be the friends of the bond market, and certainly higher inflation gives corporations pricing power. What you don't want to have is inflation that runs too hot, runs too fast, and does what we did with the 10-year Treasury last month, which pushes way higher, faster in its rate than anybody expected, and that rattled the market. So yes, if you have a measured increase in the rate of inflation that is seemingly manageable, then the market will accept that and it'll accept higher interest rates. If that runs a lot hotter than anybody expects, then you have a market issue. And this government has never given so much money directly to consumers as it has now. Now, they haven't spent it yet because a lot of them don't have jobs, so they're saving that money. But once we get back to work, it's going to be a real question to see whether those prices will be contained or not. I think they will. And I agree with my other advisor here on the fact that nobody has a history, no market has a history of perfectly predicting runaway inflation well in advance of things. So I do think it'll be contained. We have some structural issues in the economy. We have some demographic issues in the economy. We have problems in the labor force. I don't think it'll be sustainable, but I do think it is something that will be impacting the market from time to time.
Southwest Airlines announcing today that it agreed 100 firm orders for the Boeing 737 MAX to add that to its fleet, 30 of which are to be delivered in 2022. That's the largest order since Ryanair announced an order for 75 jets in December, and United ordered 25 jets earlier this month. Shares of Southwest are trading lower today, but Boeing up more than 2% on the news. Let's bring in CNBC.com airline reporter Leslie Joseph. Leslie, how surprised are we by this announcement?
I think it would be more surprising if they went with Airbus and went in a totally different direction. I imagine you'd see Boeing stock going today in another direction, and far more sharply than it's moving today. If Southwest had made that move, it would pretty much be breaking with a tradition they've had for 5 decades. So one thing to note is that Southwest was shopping around. Southwest was doing price comparisons and looking at this Airbus A220, another plane similar size, looking at fuel burn and things like that. But ultimately, they said there are issues with that. It would be pilot costs, you'd have maintenance costs. It kind of complicates things for an airline like Southwest that's so focused on cost altogether.
Yeah, and cost, I mean, I also think about something like fuel efficiency. Obviously, we have a new administration in place that's putting a lot of focus on climate change and combating that. This idea of things like carbon pricing that's now getting bandied about with the support of actually some of the biggest players in the energy industry. I wonder how much that is also participating to this momentum we're now seeing gathering in terms of a re-emerging order book for this particular aircraft.
Well, I mean, of course, the 737 MAX has been down for a long time. And for the last 20 months through November, it wasn't even allowed to fly, right? So the FAA lifted that grounding in November, and it did kind of give new life. We saw orders from United Airlines. We saw new orders from Alaska Airlines, and now this big order with Southwest. Fuel efficiency has any airline that deals with costs, which is every airline, they care about that. Of course, there is more momentum around the environment, but looking at where they could save money has been a story for years.
All right. Leslie Josephs, thank you. Shares of Boeing are up 2.5% right now. Visa, meantime, is diving further into the world of crypto, becoming the first major payments company to allow users to settle transactions using USD coin. That's a digital coin that is pegged to the US dollar and uses the Ethereum blockchain. Shares of Visa are higher, while competitors MasterCard and American Express are both down more than 1% on the session. Bitcoin jumping today as well. That is up more than 3%. Mike, just want to get your response to this. I mean, we are seeing more and more, I guess, use cases, or at least companies making moves to adopt or take on more crypto possibilities.
Yeah, so Visa supports 160 currencies around the globe. So I think this makes a lot of sense that they're getting into crypto among the other institutional names that we've seen doing this. So if you have consumers that have these stable coins in their wallet, rather than converting it to dollars, then converting it and going there, this just makes the whole transaction process that much more seamless. So I think this is a natural fit.
We have 90 seconds left of the session, and we have slipped a little bit over the course of the last 20 minutes or so. We are now down by 10 basis points on the S&P, so not on track for a record close. Anything positive for the S&P and Dow would be a record close. The Dow, though, should still make one. It's up about a third of 1%, 90 points, but that's about half of its gains it's given up in the last 30 minutes or so. It was up 180 points moments ago. The Nasdaq's down 0.6. The Russell 2000 is down 2.7%. Let's have a look at some of those margin call-related stocks today. Discovery and CBS, which are both down significantly as we speak. Nothing compared to their Friday declines. Viacom is down about 7%. Discovery is down about 14%. Both of them have halved or thereabouts over the course of the last week or so. And the banks, which of course are tied up in this, Goldman Sachs down only 0.5%, well off its lows. Morgan Stanley down 2.6%, also largely off its lows. And both of those banks well higher compared to the likes of Nomura and Credit Suisse, both of which were down double digits earlier. We've got the 10-year yield up a little bit today, 171. The VIX up a bit above 20, 20.8. Oil's up 1%. Gold and silver both down today, down about 1% or so. The US dollar up 0.2%. At the close, S&P 500 down a fraction. The Dow enough for a record closing high once again with a 0.25% of gains of 79 points, though off the high, which was 186 points. The Nasdaq down 0.7%, and the Russell 2000 down close to 3%, 2.8%.
Welcome to Closing Bell. I'm Morgan Brennan in for Sarah Eisen along with Wilfred Frost. As you can see, as the markets begin to settle here on the heels of that closing bell, we basically finished near the lows of the session. I think for most of the major averages, save the Dow. Looks like we did actually get a record close for the Dow. The Dow finished up 0.3% or 99 points, though that is well off the high. You heard Wilf just say that. The S&P, on the other hand, did close slightly negative, though right near the flat line. 39.71 is your level there. The Nasdaq underperforming, down about 0.6%, and the Russell 2000, the small cap, snapping a two-day win streak as well, down nearly 3%, 2.8% there. Coming up, former SEC Chairman Harvey Pitt on the fallout from the Archegos margin call and whether new regulations are needed to ensure that this won't happen again. Jim LeCamp from Morgan Stanley Wealth Management and Michael Batnick from Ritholtz Wealth Management are still with us. And Joyce Chang from JP Morgan joins the conversation as well. Joyce, I'll go to you first. I just want to get your take on where we are at in the markets as we are poised in the next couple of days to not only end the month but end the quarter.
Well, we're ending the first quarter with tantrum without the taper. And I'm thinking that the worst is probably behind us right now. In the second quarter, we're going to have very strong growth numbers. We do think some of this inflation overshoot will materialize as well. But a lot of this price movement has already occurred. I mean, you have most fixed income markets that are in negative territory right now. I am thinking that there are some opportunities, though, outside of the U.S. I mean, you have triple the vaccines that are going to be delivered in Europe in the second quarter of the year. And you've had this weakness in Asia where we think that some of the worst could actually be behind us.
Michael, you worried about some of the big outperformers of last year. We could call them the ARC complex, perhaps, which was down, the ARC ETF 2.4% today. Is there more downside to come for some of those names?
It sure looks like it. And I would just point out that the market is at an all-time high, but we would much rather see the high momentum names lead us as opposed to, say, Procter & Gamble, which all of a sudden is looking like a momentum stock. But I just want to point out that it's so easy to get lost in the day-to-day gyrations of the market. But if we take a step back and think about what drives the economy, which is consumer spending, 70% of our GDP is consumer spending. If we and everybody is expecting an economic boom to materialize, then it's hard to get too bearish on the stock market. And if this is just a pause where the high flyers, the Apples and Amazons, which have done nothing, especially Amazon and Netflix for 7 months, if they could come out of their bases and join the rally and join the participation, that could set us up for the next leg higher. Absent that, I think you're putting a lot of weight on the materials and the industrials to continue to carry the rally.
Jim, I just want to riff off of what Joyce just said about this taperless tantrum. Do you see it the same way? I mean, what is your expectation for the 10-year Treasury yields, for example, through the rest of this year? Is the worst, or at least that fast pace of increases that we saw that was so violent and quick, is that type of movement behind us now?
I think largely it is. You had all these concerns last month about the supplemental liquidity ratio being ending on March 31st, and that the questions about whether the banks were going to have to sell treasuries, and maybe they did sell treasuries throughout the month. I know most of the selling in treasuries came through the Japanese session, and their quarter is over now, and I don't think we're going to see that much pressure on yields moving up from here, at least not at that rate. So what does that mean? It probably means less excitement for the financials, although we do like financials. They probably are going to be a little less robust, and I think we're going to see a lot of rotation. I think Michael is right, though. If you look at what's happened with the NASDAQ and the intraday trading of the NASDAQ, we've been closing week on a pretty consistent basis. The semiconductor index was leading the market all of last year. Now it's real chopping. Unless we can get some direction out of the NASDAQ, out of the semiconductors that were our leading growth areas, it may be harder to push these other areas much further because the industrials, the materials, and the financials have all had big runs. And so that's why I'm saying we may see a little bit of trouble for the averages, but we will have markets of stocks inside those averages. There will be rotations. There will be stock pickers and their ability to make money above what the indexes are doing. So I don't think we're going to fall out of bed here. I just think it's going to be a lot harder moving forward and a lot more selective. I like this better than I like that.
Joyce, what will rise faster in the next 6 to 12 months, yields or earnings?
Well, we have yields rising to 1.95 for the 10-year by the end of the year, but I don't think that level of rates is really problematic for the equity market. So I think a lot of this momentum trade has already unwound. Now, we still like value more here, but I would think that momentum here could perform in line. Some of this energy sell-off also that we've seen over the last few weeks seems that it is not fundamentally driven. So some of the energy equities still look attractive as well. So there's going to be a rise in yields, but I do think that we've seen a lot of the big move behind us. And I don't see a level of rates that's going to be overall problematic for the equity markets when we look out 6 to 12 months.
I'm curious, I mean, you mentioned, Joyce, the fact that you might be looking internationally for more opportunities there. Where specifically, and I guess just what does that imply in terms of the trajectory of the U.S. dollar as well?
Well, you know, you've had that Europe really had lagged here because they had a second wave, a third wave in some cases. But we have news now that the vaccine deliveries are set to triple. So you could see Europe really go through a double-digit rebound in the coming quarter, and that region could look much less fragile by the summertime. We've also had weakness in the Asian equity markets as well, and I think that you could be nearing the end to some of that. So some of these EM sectors, which have reopenings that are sort of lagging what we've seen in the developed markets, really could see some momentum coming into the summer months.
Let's now get to Leslie Picker for another sort of update on the latest details of the margin call incident at Archegos Capital and the ripple effect it's had on Wall Street today. Leslie.
Quite the ripple effect indeed, Wilf. Bill Hwang was practically an unknown entity up until this weekend or so. Now his what could be seen as reckless risk tolerance has caught the ire of regulators and counterparties and may be partially responsible for billions of dollars in losses at several large banks. Hwang is the face behind Archegos Capital Management. It's not a hedge fund, but a family office, one that is said to have taken an exorbitant amount of leverage, concentration, and liquidity risk. When the market turned against him, he faced a multitude of margin calls, causing the banks to sell his assets in a variety of names, including Viacom CBS and Discovery and a group of Chinese technology companies, guys.
Leslie, thanks so much for that. Stick around for the conversation. Michael, my broad first question is, what level of concern all of this gives you that there's just a lot of leverage out there across all stocks to the upside, that we could see this play out in a sort of Viacom and Discovery type set of stocks and see them collapse as quickly as they had from their recent highs?
Yeah, it's never good to see a company of that size fall with that magnitude so quickly. But I would say that if there were other shoots to drop, if there was going to be a domino-like effect, I think we probably would have seen it already. So the story was that they were using these equity swaps. And to be honest, these CFDs, which are called contract for difference, I guess that was on CFA level 6, because I had never even heard of that before. So this is some really esoteric stuff. And I think the story is still being written, and we're going to find out in the coming days and weeks what's really going on.
Jim, when you look at this, and I realize these are very different situations, but you look at this, you look at everything that happened with the run-up in a handful of stocks, you know, that whole Reddit trade, GameStop, et cetera. I mean, you just look at some of these different instances where we've had stock charts that have gone parabolic for different reasons, and you've seen unwinds. I just wonder, do you step back from this and say there's distortions in this market in general right now, maybe perhaps given all the liquidity we see in it, or is this generally healthy and these are basically the outliers?
That's a good question. I think it's generally healthy in terms of millennials entering the market and starting to buy stocks and maybe learning the hard way that this isn't easy, and maybe these brutal lessons that some investors are being taught are going to be healthy for them. In terms of this fund, this Archegos fund, I don't think it's healthy. And I think what's really happened, and I think you're right, is we have this combination of a recovering economy, tons of liquidity, and and interest rates that are just coming off of all-time lows. That is a perfect recipe to take on leverage. So you're seeing leverage attached to real estate. You're seeing leverage attached to the stock market. And a lot of people, a lot of wealthy people, are going to make a lot of money with that leverage. That being said, there's going to be many bubbles that pop up here and there and shoot up and explode, and we're going to be seeing these all over the place. Now, the GameStop, the Reddit crowd was a small part of the market, 2.9%. This hedge fund isn't big enough to really be too systemic of a failure or anything like that. It's not a Lehman Brothers or Bear Stearns or anything like that. But we are going to be hearing more and more of that. And I think if you start to see anything that has a vertical chart like some of these names did, then you can bet that there's a lot of leverage and momentum investors playing those names, and you better be careful. If that chart's going up more than a 45-degree angle, you better be careful with something like that, and you better know that there's a lot of people that are really pressing that bet, and if you're the last one with the musical chair and there's no chair for you, you're going to get hurt really badly.
Leslie, the other kind of quick final points I was going to bring up, which we didn't have time for last hour, is I wonder whether this is a good advertisement for the sort of traditional long-only investor who doesn't take on risk, doesn't have that risk of blowout, and maybe held CBS for a long time and started selling it as it rose so aggressively. If that indeed has happened, a few examples, I guess, that we've heard about on this show in recent weeks. But also, you get an interesting little case study comparison of what's happened in 2021 between GameStop and Viacom CBS, because everyone's thinking, oh, well, how terrible this is for Viacom CBS. The shares have halved. But they got away a secondary placing at about 84, 85. And so who cares if it's dropped in the short term? It's way above where it was a year ago, $10 a share or whatever. And I wonder whether there was a lesson there and GameStop kind of missed that opportunity or perhaps didn't seize it in the same perfect way that it seems CBS has.
You know, it's interesting because you bring up the secondary sale as a comparison. I also was thinking they're both just classic cases of short squeezes. And what's interesting is that this is a real classic case of a short squeeze because you have a professional investor who is theoretically targeting some of these names that have had significant short interest, some that have even had public shorts that were saying, you know, especially with the GSX, for example, saying that, you know, there's no real value at the levels that it had been trading. And, you know, Archegos Capital was basically like, well, I'm going to take a bunch of leverage, I'm going to run up the names, and I'm going to benefit from squeezing the shorts on the upside as well. So we've seen kind of parallels on that front as well this year.
Guys, we'll leave it all there. Thank you very much, Jim LeCamp, Michael Batnick, Joyce Young, and our Leslie Picker. And also Sam DeLoyer, who's been outstanding with her puns on the lower thirds for a long time. I did not get that one. Arch, no. Maybe you can explain later. Anyway, 99% outstanding. Up next, Canaccord's Tony Dwyer on his recent downgrade of financials and why he thinks excess liquidity is keeping the market afloat. Plus, former SEC Chairman Harvey Pitt on the Archegos margin call mess and the similarities he sees with the 2007-2008 financial crisis. We are back in 90 seconds.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 92% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
If you want to get back to your favorite places and feel confident they have put your health and safety first,
look for the Well Health Safety Seal.
I'm Dr. Richard Carmona. This is the Well Health Safety Seal from the International Well Building Institute, the global authority on healthy buildings.
The Well Health Safety Rating was informed by years of research and input from hundreds of leading virologists, public health experts, epidemiologists, and building professionals around the world.
The Well Health Safety Seal means that we'll feel better going into restaurants,
theaters, stores, hotels,
stadiums, and all the places that we love.
Everything may look the same, but the Well Health Safety Seal means that your health and safety are top of mind when it comes to
cleaning and sanitizing procedures,
air and water quality management,
emergency preparedness programs,
and health services.
So look for the Well Health Safety Seal outside
and feel more confident going inside. Learn more at wellhealthsafety.com.
The Dow posting a record close today, outperforming the other major averages, which all closed in the red. The Russell in particular down nearly 3%. Tony Dwyer, Chief Market Strategist at Canaccord Genuity, joins us. Tony, great to see you as always. Your headline point is you remain constructive overall, but that we're going to continue to see these sorts of pullbacks.
Yeah, we're getting, Wolf,
it's this rolling rotation that's kind of taken hold. Rather than have the S&P 500 itself go down 5 to 10%, it's kind of grinding sideways to slash higher. In early March, you had a greater than 10% drop in the NASDAQ and the semis. As of last Wednesday, you had less than 10% of the Russell 2000 above their own 10-day moving average. And the banks, with the KBW Bank Stock Index, from intraday peak to trough was down almost 10% from the prior week. So we're getting this rolling rotation and this interest rate uncertainty that's probably going to continue for a little while.
You made a decent call on the banks, Tony, and suggested people should take some profits there. Are you still of that mindset, or do you think it's now a buying opportunity? Have you flipped at all?
I think they should be equal weight. I don't make these changes easily, right? Because people make a move, and I'm not a trader. I'm the worst trader. What I'm pretty good at is at risk reward. And what we found, Wilfred, was that the rise in the 10-year note yield on the 10-day rate of change or 10-week rate of change had gotten so extreme, that most extreme in history. And when that's happened in the past, it's led to a period of lower relative performance. Not a crushing, not that banks get blasted, not a bear market, just that they have lesser relative